Continuing to the previous session, we were into the discussion related to this exemption for inward supply of TDR, FSI and long term lease. I said that I will repeat it again. So look into this discussion. Please take page number 16. Please take page number 16. There is a landowner who is transferring TDR, FSI and long term lease to promoter or builder, for which promoter or builder pays the consideration, that is 10 lakhs. And I told you that this particular transaction is covered under RCM. Already we understood what is the meaning of TDR, FSI and long term lease. TDR means transferable development rights, FSI means floor space index, and long term lease means lease for a period greater than or equals to 30 years. And on this 10 lakhs, the promoter or builder will pay GST under RCM. So what is the rate at which they will pay GST? On this 10 lakhs, 18% they need to pay GST. So the liability will be 10 lakhs into 18%, that is 1,80,000. But what happens here? Using this TDR, FSI long term lease, a promoter or builder is making total 100 units. Total 100 units. But the exemption will be given only for residential units. Why the exemption is given for residential units? Because these residential units are taxable at the rate of 1.5% or 7.5% without ITC. Means a promoter or builder cannot take ITC on their inward supplies. As they cannot take ITC on their inward supplies, due to that reason their outward supply will be taxable at 1.5%, 7.5%, means there is a burden. There is a tax burden, ITC not available. So to ease out that burden, they are telling, okay, to whatever extent residential units, that too booked before completion certificate, to that proportionate we will give you exemption. So what is the proportion? 25 units out of the total 100 units, which means 10 lakhs into 18%, 1,80,000, 1,80,000 into 25 divided by 100, 45,000 will be exempted. Remaining 1,35,000 is the value on which GST will be payable. So that's what you need to remember, this formula. So exemption with respect to inward supply of TDR, FSI and long term lease, see the previous page. That is value of inward supply into 18% into carpet area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of the project. So what we need to see, for example, value of inward supply 10 lakhs, already I told you 18%, 1,80,000. Sometimes they will give the number of units like this. Sometimes they will not give the units, they will give carpet area of the property. Based on area of property you take. So how much is the residential area booked before completion certificate? 28,000 square feet. What is the total area of the project? That is all apartments put together. That is 50,000 square feet. So to what extent exemption will be given? 1,80,000 into 28,000 divided by 50,000. To the extent of 1,800,000 there will be exemption. So therefore 1,80,000 minus 1,800,000, the remaining amount they need to pay GST under RCM. So this is with respect to inward supply of TDR, FSI and long term lease. Then there is one latest amendment in this regard, taxability of preferential location charges. Preferential location charges means whenever we wanted east facing flat or beach view flat or flat in the first floor, etc. and all, or flat with covered car parking, we need to pay extra money. That is called as preferential location charges. Some people will feel like for their horoscope, north facing flat will be best and east facing flat will be best. No, it's all about the belief, what they believe in. And taking this as an advantage, builders also will collect some extra money. So what is the treatment of that extra money that is collected by the builder? Simple. Whether that extra money that we are paying along with the purchase of the flat or separately are we paying? If you pay along with the purchase of the flat, whatever is the rate applicable to flat, that will be applicable for that extra charges also. Suppose if that flat there is no GST. Why there is no GST on flat? When there is no GST on flat, if entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, then there is no GST on the flat. Even on that preferential location charges also there is no GST. Suppose if that flat is taxable at 1.5%, preferential location also 1.5%, like a composite supply we treat it. Say this, taxability of preferential location charges, Be careful, definitely this will be connected as one adjustment in the question. Paid along with the consideration for construction service, treated as construction service by applying composite supply and taxable based on construction service. And if entire consideration is after obtaining completion certificate or first occupation, whichever is earlier, as the construction is not chargeable to GST, so this preferential location charge is also not a supply. Suppose in other cases means what? Already we have seen. If part consideration before, part consideration after, or entire consideration after, that will be chargeable to GST, it is a supply. So this preferential location charge is also chargeable to GST. Sometimes what they will do, first they will buy the flat. After buying the flat, so they will be knowing that the car parking will be outside in the sense open car parking. Open car parking means definitely the car gets spoiled because of the sunlight, rain and other reasons, dust, etc. For that reason they want a closed cover parking, but for closed cover parking they need to pay 5 lakhs extra, and they are okay. Compared to the car, say they have a car worth 30 lakhs, 40 lakhs, for that 5 lakhs is not a big deal, it's okay. So because ultimately we need to protect that car, for that reason they pay 5 lakhs. Are they paying it at the time of purchase of the flat or later? Later. What is the treatment of that? It's an independent supply, taxable at the separate rate, that is 18%. Say this, paid separately, independent of construction service, taxable separately as supply of service, where the GST rate will be 18%. So that is about taxability of preferential location charges. Then next, so see this circular, whether GST is applicable on annuities paid for construction of road. This point again it will be coming in miscellaneous exemptions. I am connecting it now itself. Generally for construction of road, the builder will construct the road and they will be collecting toll charges from the people who are using that road. So many times in highways when you are going, so when we take a car, we need to pay some 40 rupees or 50 rupees as toll charges. Na? What is the logic behind the toll charges? Government will put the road, and on the people who are using that road, they will be recovering the toll charges, which is nothing but recovery of their investment. So this recovery of investment will be nothing but exempted. It is exempted. No need to pay GST on that. Sometimes rather than recovering it from the people, they will recover it from the government by way of installments. Whether that is also equal to toll charges? No, that is not equal to toll charges. That is normal consideration, and that will be chargeable to GST. Is it clear? So that is this. GST is applicable on annuities paid for construction of road, where certain portion of consideration received upfront, while remaining payment is made through deferred annuity spread over years. In this regard, you write down one point. However, collection of toll charges. However, collection of toll charges is exempted. However, collection of toll charges. However, collection of toll charges is exempted. Toll charges is exempted. However, collection of toll charges is exempted. Then, already this point also I told yesterday itself that 1/3 deduction will be available in case of sale of land, and I just gave you the example here. You see that sale value of the flat including value of land or UDS is 75 lakhs, and in that 75 lakhs how much will be the reduction that we will be getting? 1/3, means 75 lakhs into 1/3, that is 25 lakhs we will get as a reduction. Remaining 50 lakhs is the value on which GST will be payable. Suppose sometimes in question they will give the split separately, that is land value is this much, building value is this much, like that split they will give. Then in that case what we need to do? In that case you club everything. For example, land value is 40 lakhs, 50 lakhs and flat is 40 lakhs. Then what we need to do? Then also same story, club everything, club everything. 50 plus 40, how much? 90. In that 90, 1/3 will be reduced. So 90 into 1/3, 30 lakhs. So what is the balance? 60 lakhs. 60 lakhs is the value on which GST will be payable. Are you understanding this? So if they give single value or if they give separate value also, you need to always do this adjustment. 1/3 of the gross amount will be excluded towards undivided share of land. Remaining only will be chargeable to GST. Is it clear? Then next we are moving on to, so we completed all the services. Now look into exemptions under IGST Act. Sector wise we have completed. There are some specific exemptions under IGST Act. Look into that in page number 61. Here the first point is simple. Supplier of service is located outside India. Recipient of service also located outside India. How can Indian government charge GST on that? Indian government cannot charge GST. For example, there is a person who go to US and watch a movie in US. Okay, say for example, Good, Bad, Ugly and all is releasing, and our person is going there outside India and they are watching there in US because they want to watch first. You know that US movie will release first, you know that, and first it will release in US and then it will come in India. So our people will go there, will watch, will take a phone and will capture this title etc and all, and they will put it in their status that I watched like that, and the people will be waiting for their review. So therefore a person is going outside India to watch a movie. Now in this case, can the Indian government charge GST on that? How can they charge? Supplier of service is theatre owner outside India, recipient is also outside India, so GST cannot be collected. Is it clear or not? And we don't have like residence based taxation in GST, wherein, so if it is income tax na, so if there is a non-resident also, if there is Indian income, they need to pay GST like that. Rarely only it can happen, but in this case completely they are telling, if supplier of service is outside India, recipient of service also outside India, then there is no GST, all services are exempted. Then next, second point, there is an Indian tour operator. That Indian tour operator is providing tour operator service to a foreign tourist in relation to the tour conducted fully outside India. For example, say there is an Indian tour operator and a US citizen is asking the Indian tour operator to conduct the tour in Australia, okay, or to conduct the tour in Sri Lanka. So Indian tour operator receives money. Why will a US citizen ask Indian tour operator? Because Sri Lanka is a neighboring country to India. So better, definitely Indian tour operators will have more idea about Sri Lanka than any other person. For that reason, they are asking Indian tour operator. Now where the tour is conducted? Completely outside India. Whatever money that is collected will be exempted. See there. Services provided by a tour operator to whom? To a foreign tourist in relation to the tour conducted fully outside India. What if the tour is conducted fully in India? Then it will be taxable. We don't have any exemption. Okay. And won't it become export of service? Again, no. Why? Because tour operator is an intermediary. Intermediary means location of supplier will be place of supply. But to become export of service, the place of supply should be outside India. So due to that reason, it is not an export of service. Read that. Tour operator service is intermediary service and the place of supply is location of supplier. Therefore, it cannot be regarded as export of services. Is it clear? Next, services provided by a tour operator to a foreign tourist in relation to a tour conducted partly in India and partly outside India. What is this? So tour is conducted partly in India, partly outside India. So then whether exemption is available? Yes, exemption is available. Proportionate to tour conducted outside India. So we need to see total value of inward supply, like total value of supply, that is consideration, into number of days the tour is conducted outside India divided by total number of days. For example, if the tour is conducted outside India for 6 days, one second. Yes, say this. If the tour is conducted outside India, total consideration for the tour, total consideration for the tour is say 1,50,000. Tour outside India is for say 6 days, and tour in India is for 4 days. Then to what extent it will be exempted? So what is it they are telling? The exemption will be A, that is total consideration 1,50,000 into number of days the tour is conducted outside India 6 divided by total number of days 10, that will be equals to 1,50,000 into 6 by 10. So 30, that is 90,000, correct? Then next B, 1,50,000 into 50%. What is that? 75,000. Whichever is lower. So that is 75,000 will be exempted. Is it clear? So what is the taxable value? Therefore, what is the taxable value? The taxable value will be 75,000. Understood? So that is this. If the tour is conducted partly in India, partly outside India, exemption will be total consideration into number of days the tour is outside India divided by total number of days, or total consideration into 50%, whichever is lower. What if the number of days the tour conducted outside India is for 12 hours or more than 12 hours? Take it as full day. Take it as full day. Greater than or equals to 12 hours, take it as full day. If it is less than 12 hours, take it as half day. Don't ignore it. Take it as half day, okay? And do the computation accordingly. Then fourth point, services provided by an intermediary. So that intermediary is connecting a supplier outside India and a recipient outside India. There is a seller outside India, buyer outside India. I am a broker or an agent. I am connecting the seller and a buyer outside India, for which I get a commission. That commission is exempted. Is it clear? Seller outside India, buyer outside India, I am getting a commission. That commission is exempted. Again, won't it become export of service? Definitely no. Why it will not become export of services? Because again, place of supply should be outside India for export of service. But in case of intermediary service, the place of supply will be India. That's why it will not become export of services. That is about this 4 exemptions under IGST Act. Then some miscellaneous exemptions you can see. Transfer of a going concern as a whole or independent part thereof. That is slump sale. In capital gains, you might have come across slump sale, transfer of a business as it is. On that there is no GST. Already we have capital gain tax. They don't want to charge any GST. So in GST they have given the exemption. Then second point, supply of service associated with transit cargo to Nepal and Bhutan. India map you have an idea now. And India map, if you see like India map above, there will be Nepal and Bhutan. Nepal and Bhutan are surrounded by Myanmar, and then we have China and India. So it is surrounded by land. So if they want to import through waterways, so they cannot import through waterways. So the goods will be first imported into India, and through land route it will be going to Nepal and Bhutan. This is known as transit cargo to Nepal and Bhutan. For the transit cargo, if you provide any services like loading, unloading or transportation, any services, that service will be exempted. Sometimes what will happen, the vehicle will go to Nepal and Bhutan carrying the goods. After they unload the goods, the vehicle will return empty. When the vehicle returns empty, for that return also we will be collecting some money, correct? Generally auto people you would have seen night times and all, what they say, so sir, I have to drop you and come empty sir, so for return also you pay, then only I will come, like that they will tell, correct? So then what about the return charges? That is also exempted. But suppose if they carry some goods and if they come from Nepal and Bhutan, that freight will not be exempted. Read there properly. Supply of service associated with transit cargo to Nepal and Bhutan, both to and from covered in the exemption, both to and from, as per CBIC circular, when if the cargo container returns empty. Then service by way of collecting or providing news by independent journalists, those who are not associated with any newspaper or magazines, but they will be collecting the news and selling the news to news channels or media, etc. They get some money. That money received by them will be exempted. Then Press Trust of India, United News of India. These are news broadcasting agencies. For example, I wanted to disseminate the news. I have an information which I wanted to give. For example, say, one person will tell like so and so actor has cheated me, like that and all they will tell. Now the actor needs to respond. If the actor is not responding, then these allegations will become true only. So what that actor will do, that actor has to go to the Press Trust of India or United News of India and needs to speak. And that information needs to be displayed to all the telechannels or newspapers, that is this PTI and UNI. Next time when you read any English newspaper, you see there will be a column, some information they will write, news they will write, source they will give, PTI, UNI, like that they will be mentioning. So that is this broadcasting agency. So money collected by them is also exempted. Then service of public libraries by way of lending books, publications or other knowledge enhancing content or material. So that is lending libraries. So nowadays also people will go to libraries, not to read books, to read each other, but generally to libraries people will go and borrow books also. That lending fees will be exempted provided it is a public library. Okay. So ICI is also having a library. In that library students will go and will be taking books on rent and they pay the lending fees. Whether it is a public library? No, it's not a public library, it is only for CS students. And whether this will be coming under chargeable, that is taxable, or exempted? Even though it is not a public library, but it will be exempted. Where it is covered under exemption? It is covered under services provided by an educational institution to its students, faculty and staff. In that category it will be coming under exemption. Got it? Then service by an organizer. There is a business organizer. What they are doing? They are organizing the exhibitions outside India. So the success of any product depends upon the marketing today. You understood? So if there is no proper marketing, no one will be able to do business. That is the order. And even service sector also. Any business that we need to do marketing. You understood? Otherwise people will not know anything about anyone. And products also same. So what these manufacturing companies will do, they will be participating in the business exhibitions. Where the exhibition is held? Outside India. Who is organizing that business exhibition? A person in India. Supplier also India, recipient also India, but the exhibition is held outside India. For that exhibition, if any amount is collected, that is exempted. What if exhibition is held in India? Then it will be taxable. Read that point once again. Services by an organizer to any person in respect of business exhibition. Where is it held? Outside India. Then service by way of public conveniences. That is this washroom, lavatories, etc. Public toilets are there, na? They collect 2 rupees, 5 rupees, etc. for allowing you to use the toilets. Whether that 2 rupees, 5 rupees is taxable or exempted? Thank God it is exempted. There is no GST on that. Okay. But I don't think so it will cross 20 lakhs and all. Correct? Threshold limit it will cross. I don't think so. Our people like open space only, where they will go and pay and use. So public conveniences is exempted. Next. Service by way of access to road or bridge on payment of toll charges. This is the point I was referring to. Toll charges which are collected for laying down the road will be exempted. However, other than by way of annuity. Just now I told you, na, what is the meaning of annuity? Rather than people paying the toll charges, the government only will pay, because lot of people will object to the toll. So they will say, this many days we are using this road and we are not paying toll charges. Suddenly if you levy toll charges, we will not pay like that. When people object, government will tell, fine, don't worry, we will only pay to the builder like that. That is called as annuity, and that annuity will be taxable. But only toll charges collected from the people who are using the road, that is only exempted. Sometimes we will not have fast tag sticker. When we are not having fast tag sticker, they collect extra toll charges. Have you observed? That extra toll charges is also exempted. Sometimes big lorries and all, heavy load they will be taking. So they have to pay overloading charges. Those overloading charges is also exempted. You can see here. Overloading charges at toll plazas is also exempted. Higher toll charges for not having a functional fast tag is also exempted. Then next, services by a performance artist. Who is a performance artist? One who performs before the audience is known as performance artist, not one who performs before the camera, because performance before the camera is very easy. Performance before the audience is very difficult. So simple. So recorded class like that I can easily take, because cut, ot. You understood? So cutting and otting, and we can do. But taking a class full day, morning to evening, standing, so that requires the dedication, and that's where the pain will be known. So therefore, I'm not telling about myself. Everyone, every faculty who is taking face-to-face classes, so the reality will be known only when they take face-to-face classes. Recorded classes everyone can take. So yesterday, day before yesterday, cleared people also can come and take recorded classes. But face-to-face is something which only a hard-working faculty can only take, because that requires dedication. Same is the case. Before camera, anyone can act, but acting before the audience without making an error, that is important. That's where the exemption is given to performance artist. I'm not telling that I am a performance artist and all. I gave you an example here. Performance artist will get the exemption. How much will be the exemption for a performance artist? How much should be their consideration? Should not exceed 1,50,000 per performance. Okay. If it exceeds 1,50,000 per performance, then entirely it will be taxable. Per performance, per performance. And what if an actor or a person, an artist, is giving a performance, say Bharatanatyam performance, 2 performances in one show, wherein for each performance we need to see, but cumulatively 2 lakhs. 2 lakhs divided by 2, that is 1 lakh. Even though 2 lakhs, if you see total, it is more than 1,50,000, but per performance, if you see, it is only 1 lakh, which does not exceed 1,50,000. Due to that reason, it is exempted. In what art form they need to perform? Either music or dance or theatre. And it what genre? In what genre? Folk or classical. Folk or classical. Classical means which got the national recognition, like Bharatanatyam, then Kuchipudi, Kathakali, then even Mohiniyattam. These are all something. Whereas folk means native to that particular area. Example, Karagattam, Nayandi. These are all something which is native to Tamil Nadu, that will come under folk. Either folk or classical art form, or music, dance or theatre, where the amount charged is up to 1,50,000 for a performance, excluding service provided by such artists as a brand ambassador. Brand ambassador means, so they will be promoting a particular brand and they will be performing. So then in that case, it will not be coming under exemption. What if it is a event, cultural event that is sponsored by a company? It's okay. Sponsored by a company, it is okay, because today lot of events are sponsored by various people. That's okay. But to promote a particular brand only they are performing. Okay. For example, hair care brands and all, what they do, hair oil brands, they will be asking some Bharatanatyam dancers to go to the villages and perform the Bharatanatyam dance show and endorse the hair oil, because still there is a misconception that because of using that hair oil only, Bharatanatyam dancers will have long hair. First of all, none of the Bharatanatyam dancers will have long hair. They cannot maintain. So maintaining hair is very difficult. You ask me, I will tell you. So therefore, what they do is that, it is everything is attachment only. Okay. But God has given them very good benefit that if they attach also, no one will know that it is like an attachment. When we put attachment and all, easily everyone will come to know. You understood or not? And therefore, these rural people don't know this fact. For that reason, these hair oil brands and all will use Bharatanatyam dancers for endorsing their product. Then, even though the amount does not exceed 1,50,000, that will be taxable. Is that clear? Next, point number 9. Services by way of training or coaching in recreational activities relating to arts or culture. So, arts or culture, what is that? Arts, example, dance classes, music classes, drawing classes, or any kind of arts like karate, kung fu, etc. All arts classes will be exempted, provided that arts classes should be conducted by an individual. If it is by a firm or company, etc., then it will be taxable. Then culture, that culture also should be by an individual. Culture means imparting Vedas, imparting languages, imparting Upanishads, etc. That will be coming under culture. That should also be by an individual. Then suppose if it is sports, training academies, there are a lot of sports academies, cricket academy, badminton academy, shuttle academies, etc. And all these academies are exempted, provided it is by a charitable trust. And MRF Cricket Academy, like that one cricket academy is there, very popular cricket academy in Chennai, in India. and lot of big national players are from that MRF Cricket Academy only, and they charge 5 lakh rupees per annum as fees for training in cricket. Whether that 5 lakhs will be taxable or exempted, definitely taxable, because that is not a charitable trust. What if they create that as a charitable trust? Then it will be exempted. Then satellite launch services supplied by a person, by any person. Previously they gave it only for ISRO, etc. But now they are telling any person, mainly to invite foreign satellite operators, mainly SpaceX. Mainly Elon Musk, they wanted Elon Musk to come to India and start the business of satellite operations, so that lot of employment potential gets created and we get lot of revenue inflow, foreign currency inflow to India. For that reason, so they have brought in this exemption, any person, satellite launch service by any person. Then service of transmission or distribution of electricity by an electricity transmission or distribution utility. That's what I told you last class itself. Electricity is exempted, and any transmission of electricity, transmission means from the place where the electricity is generated to the place where it is distributed, they will send the electricity through power grid. If you see outskirts of Chennai and all, big transformers, the power grid will be coming. And as soon as you enter into Chennai, beginning, there will be substations. From the substations, they do the underground electricity network for the purpose of distribution of electricity. In some areas, on the top also, lines, poles and all will be there. That is distribution. But let it be transmission, let it be distribution, that electricity is exempted. Previously, electricity was only exempted, but other activities related to electricity was not exempted. Example, for increase in the phase, 1 phase to 3 phase, or increasing in the power load, or changing the meter from one location to another location, or meter rent, then issuing duplicate bill, all these things previously was taxable, but now for May 25 exam, they brought in as an amendment. So all other incidental activities or ancillary activities relating to electricity is also exempted. See the next point, supply of services by way of providing metering equipment on rent, then testing of meters. Sometimes meter testing will be done, because in my house also, so 2 months, 4 months before, I got a bill of 25,000 rupees, electricity bill for 2 months, 25,000 electricity bill. That much I am not using and all here in my home, and I did not understand what is it, and for which I asked the electricity department. They said we need to test the meter, and they tested meter. Someone's electricity and all got added to my meter, you understood, and for that purpose, I have to pay. And for meter testing, I paid some extra charges, 1,500 plus GST. At that time, this exemption was not there. Had it been there, at least the GST I would have saved. Okay, so now it is exempted. Testing for meters, releasing electricity connection. For getting a new connection, we need to pay some charges. That is also exempted. Shifting of meters or service lines. See, not only these activities, don't just get carried away. So, etc. Highlight that, etc., etc., etc. means these are all, illustrative list. Apart from that, any other activities which are incidental or ancillary to supply of transmission or distribution of electricity provided by an electricity transmission and distribution utilities to their consumers is exempted. Got it? Next, last one, in income tax, section 35 of Income Tax Act, scientific research expenditure, have you heard of that? And any money contributed by the company. If the company or any person is incurring expenditure on scientific research, 100% of the expenditure is allowed as deduction in income tax. Instead of spending the money on scientific research, they can donate it to one association, scientific research association or a university which is carrying out scientific research. Then also they will get a deduction. Like that, one point is there in income tax. You know that? Now, that association or university which got the fund for doing scientific research, now I want to carry out a scientific research. I am one individual. Now I will approach that association or that university for scientific research, and they will give me a grant. They will give me the fund. That fund that I have received will be exempted. Read that. Research and development services. So I am providing research and development services. against consideration in the form of grants. I am getting grants. From whom I am getting grants? From a government entity or a research association, university or college notified under section 35 of Income Tax Act. Got the clarity about this? Then with this we completed all the exemptions that we have in GST. Little time we took, yes, because what happens is that exemptions is an area which usually students will neglect, and even when you have attended any regular class also, it will take lot of time. As it takes lot of time, even you will forget what is there. That's why I made a revision of this, because you cannot imagine a question paper at intermediate level without exemptions. It is connected in many places for that reason only. Then now we are moving on to the next area. So the questions related to these exemptions, concept drills, I asked you to try, that we will discuss in the afternoon, because again these exemptions is connected to charge under CGST, that is RCM. Whenever we are discussing RCM, again these exemptions will be connected. For that reason, let's complete that also. So please take segment number 3, liability to pay GST. Segment number 3, liability to pay GST. Page number 30. Page number 30. See that generally who will pay GST to government? Supplier. But there are 3 cases where a person other than supplier will pay GST to government. That is given in 9 subsection 3, 9 subsection 4 and 9 subsection 5. In case of 9 subsection 3, there are some notified goods and notified services. Big list of goods and services given. In that case, recipient will be liable to pay GST. In case of 9 subsection 4, there is a promoter or builder who is purchasing goods from an unregistered person, cement, bricks, building material, etc. from an unregistered person, then they need to pay GST under RCM. And finally, services through e-commerce operator, notified services through e-commerce operator, liability to pay GST is on e-commerce operator. If you observe in these 3, 9.3, so recipient will pay GST to government. 9.4 also, recipient only will pay GST to government. 9.5, e-commerce operator will pay GST to government. So these 3 are exceptions to the general rule that supplier will pay GST to government. You can read this first paragraph. As per section 9.1 and 9.2 of CGST Act, usually the liability to pay GST to government is on supplier, on supply of all goods or services other than alcoholic liquor for human consumption and certain petroleum products. We know that, correct? And however, as per section 9.3, 9.4 and 9.5, liability to pay GST to government is on a person other than supplier, other than supplier. Who is that other than supplier? In case of 9.3, who will pay GST? Recipient. 9.4, who will pay GST? Recipient. 9.5, who will pay GST? E-commerce operator will pay GST. Got it? And so what is that 9.3? There are some notified goods and notified services on which recipient will pay GST, but this goods is not in syllabus, which you will be learning at CA final level, but we have list of services which are covered under RCM. What is the notification number? I told you long back, I told you to remember notification number 13 of 2017. Exemptions are in notification 12 of 2017, and list of service under RCM is in notification 13 of 2017. Okay, so this notification 13 of 2017 gives some list of services, and we will see that list of services and then come back to this table. So this table is like a summary which we will see little later. So complete everything and then come back to this, but look into some special points in this regard. What is the maximum rate of GST? 40%, but the effective maximum rate is 28%. Means they can go up to 40%, but right now they are levying maximum 28% only. They can go up to 40. That is the meaning of this. Maximum rate of GST 40, CGST 20, SGST 20. Generally, GST payable to government by supplier. Therefore, if a supply is not covered in 9.3, 9.4, 9.5, then the balancing figure is what? FCM, correct? Then this is one important point. If a supply is covered under RCM, means who will pay GST to government? Recipient. You are my recipient. I am your supplier. actually you should pay GST, but I am paying the GST on behalf of you. Actually you should pay, but the supplier paid. Does it mean the recipient is relieved from payment of GST? No. Recipient is not relieved from payment of GST. Recipient should pay GST along with interest, because you did not pay on time na, so you need to pay along with interest. But whatever GST I paid is like excess payment of GST or wrong GST paid, which I can get as a refund. Is it clear or not? The moment if the transaction is covered under RCM, unless they have given an option of FCM. What is that option of FCM? In our last class discussion, I told you GTA has two options. Either they can pay GST under FCM or RCM. Unless that option is given, if it is covered under RCM, always recipient only will pay GST under RCM. Okay. Just because supplier paid, will the recipient be relieved? No. So see that, read that point. If a supply is covered under RCM, recipient is not exonerated. Exonerated means relieved. Exonerated means relieved from payment of GST if the supplier discharges the liability. In such case, what will happen? Recovery of tax can be initiated by department on recipient for non-payment of GST. Then this point also yesterday, while solving one question, I told you that for payment of GST under RCM, we cannot use our credit ledger balance. Always we have to make payment by cash. GST under RCM is always payable using electronic cash ledger. Got it? Then look into the next page. Now we need to understand the list of services which are covered under RCM, notification 13 of 2017. In this, see the list of services. Sir, CG got salads. So there is like few amendments in this place, but otherwise majorly it is the same. Sir, CG got salads. Yes for. Now you need to first make an effort to remember what is the mnemonic, because in exam what happens, you will get a situation. That situation when you read, if it comes in Sir CG got salads, then it is RCM. Otherwise it is not RCM. Is it clear? So that's why mnemonic you need to remember. What is yes? Read there. Yes is what? Security lending as per SEBI by lender of securities to borrower of securities. There will be one person who will lend the securities. Another person will borrow the securities, for which there will be a lending fees. On that lending fees, the borrower will pay GST. Is it clear or not? And second one, and one second, why security lending is not excluded from supply? Because securities are neither goods nor services. We are not talking about sale of securities. We are talking about lending of securities. Then look into next one, I for import of services. And in case of import of service also we know that recipient will pay. R for renting of motor vehicles. That also yesterday I told you renting of motor vehicles is in RCM. Then next, renting of immovable property, both residential and commercial. And next, sir, yes for security lending, I for import of services, R for renting of motor vehicles, another R for renting of immovable property. Okay, sir, CG, C for copyright services. Copyright means what? Temporary transfer of IPR. That is copyright services. And next, G for GTA services. That is goods transport agency services. So, sir, CG, GOT, got. That is G for government services to business entities. And next, O for overseeing committee to RBI. RBI will be appointing a committee for restructuring the non-performing assets. That committee is called as overseeing committee. So that is also providing service to RBI. RBI will pay GST. So that is this GOT. G for government services to business entities. O for overseeing committee to RBI. T for yesterday we discussed last, TDR, FSI and long-term lease, given by whom? Landowner to the promoter or builder. Then next, sir, CG got. So yes for, first yes for security lending, I import of services, R renting of motor vehicles, another R renting of immovable property, C copyright services, G GTA services. Next, GOT government services to business entities, O overseeing committee services to RBI, T TDR, FSI and long-term lease. And next, salads, yes for sponsorship services, A for agents. There are some specified agents, that agents services. Then L and A. L for legal service. By whom? By individual advocate or firm of advocate. Next one A. Arbitrator services. And then we have DS, last two, DS. D for director services to company or body corporate. Last yes, security agency services. Security agency means manpower agency which will supply the security personnel. Okay, so security agency services to a registered person. Now sir, CG got salads. So that salads alone you tell me once. S for sponsorship, A for agents, L for legal service by individual advocate or firm of advocate, A for arbitrator services, D for director services to company or body corporate, last is security agency services. So this sir, CG got salads. If you read a question, if it is coming in this list, no doubt it is in RCM. Okay, and therefore you need to analyze it. Be careful because almost every attempt there will be questions touching this also. Okay, you cannot imagine a question paper without this. And what is that list of service under RCM? We understood that list now. Now the detailed provisions we need to remember one by one. We need to connect this with exemptions and we need to connect this with conditions for RCM and non-applicability of RCM. See the heading. First service. Such service we understood. Next exemptions. What are all the exemptions to it? Thereafter, what is a condition for RCM? That is to come under RCM. What are the conditions? Thereafter, is there any exception? So in exceptional cases, it will not come under RCM. So already we made almost all this discussion in exemptions chapter. We are now connecting everything. Okay. First, security lending services. In security lending services, do we have any exemption learnt in exemption chapter? We just now completed exemption chapter. We have learnt any exemption? So no exemption. Any condition for RCM? No. Any non-applicability of RCM? No. That's it. Over. Security lending services. Got it? Who is supplier? Lender of securities. Who is recipient? Borrower of securities. What is the consideration? Lending fee. So borrower will pay GST. Understood here? Next, second, import of services. Now, don't look at that. Import of services, we learnt already some exemptions. What are the exemptions we learnt for import of service? Two exemptions I told you. Other than OIDR by NTR, non-taxable recipient. Number two, Indian establishment of a foreign airline company importing service from its head office without consideration, where Minister of Civil Aviation specifies that there is a reciprocal exemption. Correct? We studied that. That only I gave reference here. You can see there. Import of services other than OIDR by non-taxable recipient and import of service by Indian establishment of foreign airline company without consideration. Got it? These 2 points. What is the meaning of OIDR? What is the meaning of non-taxable recipient? Everything we already discussed, but this is just a connection to that. Okay. Next. Do we have any condition for RCM? No. We don't have any condition for RCM. Any non-applicability of RCM? Don't see there. You tell me what is the one place? Generally import of service is RCM, but I told you one place it will come under FCM. What is that? Import of OIDR services by NTOR, non-taxable online recipient. You understood? So that's what. Yesterday's class, if you have missed today's class, nothing you will understand in this. Got it? And that's how I connected exemptions to RCM. So you understood import of services. Respond here. Nothing you are learning new. Already whatever you have learned, that we are just connecting one by one. Got it? Then R for renting of motor vehicles. For renting of motor vehicles, what are the exemptions that we have seen? 4 exemptions we saw. Recollect. I have a motor vehicle which can carry more than 12 passengers given on rent to a state road transport undertaking. Another motor vehicle. Which motor vehicle? Electric motor vehicle. More than 12 passengers. 2. Awesome. Local authority. Number 3. Motor vehicle that can carry goods to a GTA. Next one. I have a bus which I am giving on rent to a person, not to education institution. Be careful. Not to education institution. Yesterday also one student asked me that. So to education institution means exempted as or no. I am providing bus on rent to a person. That person is providing transportation service to education institution up to 12th standard. Then only my rent will be exempted. Suppose if I give the bus on rent directly to the education institution, there is no exemption here. Got it? That is these 4 exemptions. In other cases, it will be taxable. What are the conditions for RCM? This also I told you yesterday while discussing one circular. I told you, again I will repeat it. Supplier should be other than body corporate. Who is a body corporate? Company, any private limited or public limited, or a body under any law like RBI, SEBI, ICAI, ICSI, ICMA, all these are coming under body corporates. Is it clear? Whether LLP is a body corporate? No, LLP is a firm under GST. LLP is not a body corporate under GST. LLP will come under firm. So what is the first condition? See there, supplier should be other than body corporate. Recipient should be body corporate. And how much should be the rate mentioned in the invoice? 5%. If all these 3 conditions satisfied, then RCM. If any one condition not satisfied, that's it. If any one condition not satisfied, it will be FCM. Understood here this? Yes, I, R. Then next one, renting of immovable property. Now concentrate. Renting of immovable property. For residential property, I told you 2 exemptions yesterday. What are those 2 exemptions? Don't see there. You try to recollect. Residential property given on rent to a residential, for residential purpose to an unregistered person. Second one, renting of residential property for residential purpose to a registered individual for their family stay. Super, these 2. And even accommodation is also exempted, correct? What is that? Minimum 90 days, maximum, subject to maximum 20,000 per month per person. Okay, next, see the condition for RCM. The condition for RCM is simple, recipient should be registered. That's the only condition. Recipient should be registered. What if recipient is unregistered? It will come under FCM. Sir, it is exempted now, sir. Residential property means exempted, but commercial property need not be exempted. Is it clear or not? And residential property for commercial purpose also need not be exempted. Residential property for residential purpose is only exempted. So be careful. I have a house. That house, I am giving it to an advocate to function his office, or I am giving it to a chartered accountant to open his office. Now, is it for residential purpose I am giving? No, for commercial purpose. Exemption not available. If exemption needs to be available, I should have given it for what purpose? A residential purpose. Is it clear? And that is this. Recipient is registered, whether renting is for residential or commercial. What if it is renting for commercial purpose to unregistered person? Then it is FCM, because in order to bring it under RCM, the recipient should be registered. Is it clear? Now, there are in total how many combinations that is possible for residential property? Say this. For residential property, if you see residential property, first you need to check, no need to write, just this is application only. Already you learnt that I am making you understand. The residential property can be for what purpose? It can be for residential purpose. Residential purpose, and that may be given to a, residential purpose, that may be given to a unregistered person. So supplier and recipient. Supplier also registered, recipient also registered. What is your answer? Residential property for residential purpose to a registered person. What is your answer? Exempted. Sir, individual only exempted, sir. Individual for family stay. Read the book. Individual for family stay is only exempted. Otherwise, it will be taxable. Correct? Otherwise, it will be taxable. Carefully read there. For residential purpose to a registered person. Only if they are registered person is an individual. For family stay, it is exempted. Otherwise, it will be taxable. Correct? Next. What if it is residential purpose only, to registered by registered person, to unregistered person. Supplier is registered, recipient is unregistered. Residential purpose only. What is your answer? Very good, exempted, because it is given to an unregistered person. Then same, residential purpose only, supplier is unregistered, recipient is registered. Same as one, correct or not? So whether the supplier is registered or unregistered, it is not going to change, it is the same. And suppose if it is both are unregistered, then no GST. Don't write as exempted, there is no GST. Both are exempted, don't write as exempted. Be careful, you need to write as no GST. Okay, there is a big difference. Exempted means it should be specifically given. It is not exempted, GST is not possible because both are unregistered. You got it? Understood this? This is when, if it is a residential property for residential purpose. What if it is a commercial purpose? If it is for commercial purpose, by a registered person to a registered person, what is your answer? Taxable. For commercial purpose, we don't have any exemption. Taxable under FCM or RCM? Why, pa? Why? Because recipient is registered. That's why it will come under RCM. Suppose if it is commercial purpose only, by registered person to unregistered person, then the moment it is commercial, taxable. Got it? Commercial taxable. You understood or not? Don't read further. Commercial taxable. So taxable under FCM. Why FCM, pa? Because the recipient is unregistered. Then next, suppose if it is commercial purpose by an unregistered person, okay, to registered person, then taxable. And where it will come? RCM. Why RCM? Because the recipient is then commercial purpose by unregistered person to unregistered person. Very good. There is no GST because both are unregistered. Sir, you said commercial means taxable. Correct. Commercial is taxable only. But one more point we need to check. What is that? The person paying GST should be registered. Otherwise, there is no GST. So that's why there is no GST. Is it clear? So that is this. Next, let's see commercial property. You understood residential property? I divided it into total, 4 combinations here. First, I told you residential purpose. Depending upon that, the taxability or exemption will change. Commercial purpose also, depending upon that, the taxability or exemption will change. Okay, sir. So can you simplify it further? Yes, I can definitely simplify. Why not? Residential property. If you want, you can make note of this. Residential property. Now this residential property can be divided into two. Residential purpose or commercial purpose. Residential purpose or commercial purpose. Okay. And if it is commercial purpose, what is your answer? Always taxable. Okay. Now, total 4 combinations possible. What is that 4 combinations? RP to RP, RP to URP, then URP to RP, URP to URP. Tell me, what is the charge? It is taxable only, pa. The moment it is commercial purpose, it is taxable only. But depending upon this, it will change. To RP, to URP, to RP, to URP to URP, over, got it? Residential property, commercial purpose, taxable, depending upon, the situation, it will change. Okay. Then next, residential property for residential purpose. In this case, we have exemptions. 3 exemptions, correct? 3 exemptions we have here, and in remaining cases it will be taxable, correct? 3 exemptions we have, in remaining cases it will be taxable. So therefore, what we are trying to understand is that to whom we are giving it on rent, whether it is to registered person or to unregistered person. Rather than remembering like that, you remember what are the cases it is exempted, exemptions, and other cases taxable, other cases taxable, simple, got it? You remember exemptions, other cases it will be taxable. What are the 3 exemptions that we have? 2 URP, correct? Then 2 registered individual for family stay. Next, accommodation greater than or equals to 90 days, less than or equals to 20,000 per month per person. 3 exemptions: 2 URP, 2 registered individual for family stay, accommodation greater than or equals to 90 days, less than or equals to 20,000 per month. Other cases it will be taxable. In this, just 2 divisions, that is to RP, that is definitely other cases when it is taxable, it will be coming under RCM. Why sir it will come under RCM? Simple. If it is to unregistered person, it is exempted na. Then we are talking about only registered person. So therefore it will be RCM. Simple. Over. Okay? Yes sir. But the moment when the recipient is unregistered, RCM is not applicable. The condition for RCM, you see, condition for RCM itself is recipient should be registered, then only RCM itself is applicable. Got it? Not that by default it is RCM. If by default it is RCM, and if the recipient is not registered, they need to register. That is import of service we discussed. Import of service by default RCM. But here only if recipient is registered, it is RCM. In that case, don't apply compulsory registration. Clear here? Can you remember? If you are not getting a question on this, call me. Okay? Call me and speak anything, I'll listen. See, residential property, commercial purpose will be taxable, and RP to RP RCM, RP to URP FCM, URP to RP RCM, URP to URP no GST, that's over. Then residential purpose, we have 3 exemptions. One is to unregistered person, second is to registered individual for family stay, accommodation greater than or equals to 20 days, less than or equals to 20,000 per month per person, and in other case it will be always taxable under RCM. But this only if you want, you remember like this, otherwise not required. Better way will be this only. This table is only better way. What is that? First, 2 cases it is exempted. Even this point is also applicable for residential property. In other cases it will be taxable. Condition for RCM, recipient should be registered. Otherwise it will be FCM. Make it simple. Okay. Then commercial property. For commercial property we have only one exemption. What is that one exemption? That accommodation point. Property is commercial. Property is commercial. So that only one exemption, accommodation service is only exempted. And what is the condition for RCM? Newly added part. This is newly added. What is the condition for RCM? Supplier should be unregistered and recipient should be registered. What if supplier is registered? It will be FCM. Is it clear? Commercial property, only one case it is exempted, darling. What is that? Less than or equals to 20,000 per month and greater than or equals to 90 days. In other cases it will be taxable. Wherever it is taxable, just 2 conditions you need to check. What is the 2 conditions? Supplier should be unregistered, recipient should be registered, then only RCM. Otherwise it will be FCM. If supplier is registered, it will be FCM. So we completed renting of immobile property also. So then SIRR we completed. Now look into copyright services. In case of copyright, we have original literary. Original literary means author who is writing novels, books, articles, etc. That is original literary. Then dramatic works. Dramatic works means story, screenplay, writings, that. Okay. Then musical works. Musical works means music directors who compose the music. Artistic works means paintings, drawings, design, sculptures, etc. That is this. And all this should be by an individual. All this should be by an individual. Then it will be coming under RCM. So is there any exemption? All the 4 places you see there is no exemption. What are the 4 copyrights covered? Original literary, dramatic, musical, artistic works. And always RCM, we don't have any exemption. Do we have any condition for RCM? No. But only in one place, we have an exception to RCM. Where is that? Author. Author can opt to pay GST under FCM. If author opt to pay GST under FCM, for the next 1 year from the date of exercising the option, author only will pay GST under FCM. Why will an author opt to pay GST under FCM when the transaction is covered under RCM? Because when the transaction is covered under RCM, the author cannot take ITC on his inward supply. For example, I am an author. I am giving my book to a publisher. Now I will receive a royalty. Now I will buy the laptop, tab, or receive softwares, or take immovable property on rent, receive copyright services, desktop services, etc. and all. Now, all these inward supplies, if I want ITC, I only should pay GST. If my outward supply is covered under RCM, I cannot take ITC. Is it clear? For that reason, I will opt to pay GST under FCM. But what is the disadvantage of opting for FCM? For the next 1 year from the date of exercising the option, I only should pay GST under FCM. I cannot shift to RCM option. But RCM option to FCM option possible. Anytime it is possible. But FCM option to RCM option, minimum 1 year lock-in. So next 1 year only FCM. If author opts to pay GST under FCM, lock-in period. Lock-in means what? So locked. For next 1 year, they only should pay GST under FCM. 1 year from the date of exercising the option. Next. Look into the next one, G. GTA services. Come on, recollect what are the exemptions that we learned for GTA services? Notified goods. What are those notified goods? 6 notified goods. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipment. These 6. Next, second exemption, if the recipient is individual, HUF, AJP or a trust and they are unregistered. Unregistered means unregistered under GST. Okay. And they are not having factory. Then third, if the recipient is registered only for deducting TDS. Say this, recipient is registered only to deduct TDS. In these 3 cases it is exempted. Other cases GTA services will be taxable. Wherever GTA service is taxable, so they have 2 options. This point also I told you yesterday. What is that? FCM option or RCM option. If it is FCM option, again they have 2 rates. What are the 2 rates? Come on. 12% with ITC or 5% without ITC. If it is RCM, always 5%. And they need to decide it for every financial year. When they need to decide it? Last quarter, that is January 1st to 31st March. You can see that. If GTA opts for FCM, lock-in period, financial year, that is financial year wise they need to decide whether FCM or RCM. Option to be exercised between 1st Jan to 31st March of the preceding financial year. And you remember a assumption for these 2 cases, author case and GTA case, if the question is silent, by default RCM. Is it clear? RCM, that is option is there na. Only in the question in exam, if they give that they have opted for FCM, it will be FCM. Otherwise, what will be the default option? The default option will be always RCM option. Is it clear? Then next one. Look into government services. Whenever we are referring to government services to business entities, we also include parliament, state legislature and court or tribunal service also. But sir, court or tribunal service is excluded from supply, na? Correct. But court or tribunal may do other services apart from court or tribunal, like renting of immobile property. Court premises will be given on rent for a telecom company to keep a telecom tower, and given on rent to a canteen person to run a canteen in the court. So all these renting is not excluded from supply. Only court fees or tribunal fees is excluded from supply. So that is also covered under RCM. Read this. Government services to business entities, including service of parliament, state legislature, court or tribunal. See the note. In case of court or tribunal, it is service other than legal fees, that is renting. And in this case of government service, yesterday we discussed 14 specific exemptions and 2 general exemptions. In other cases, it will be taxable. Correct? Yesterday only we discussed, again no need to repeat that. And in other cases, it will be taxable. And what is the condition for RCM? We don't have any condition for RCM. Non-applicability of RCM. Remember, pa, in 5 cases, government only will pay GST under FCM. RCM is not applicable. What are they? If you recollect, one chart we discussed yesterday. First one is what? Department of Post. Next, railways. Next, transportation. Next, airport or port. Correct? In other service only we discussed 14 exemptions. First 4 is there, na? No RCM. So that is Department of Post, transportation of goods or passengers, airport or port, Indian Railways. You got it? Next, in the 5th one, renting of immobile property to unregistered business entity, then also it will be FCM. So tell me, what are the 5 cases where government services will come under FCM? First, renting of immobile property to unregistered business entity. Next, those 4. Department of Post, Indian Railways, transportation of goods or passengers, airport or port services. Got it? Then next one, GO, O for overseeing committee to RBI. There is a overseeing committee which is providing services to RBI, and on that commission whatever they get, they only will pay GST. Whether anywhere we have discussed exemption for this? No. So therefore always it will be taxable. And any condition for RCM? No. Non-applicability of RCM also we don't have anything. Clear? Then T, TDR FSI long-term lease. Whether we discussed any exemption for this? Just now. Today only we discussed. What is that? Proportionate to what is exempted. Residential units booked before completion certificate or first occupation divided by total area. Total area. Proportionate exemption to booked before completion certificate or first occupation, whichever is earlier. Do we have any condition for RCM? No. Non-applicability of RCM also we don't have anything. Clear? So we completed Sir, CG, got. So this fast we discussed. You know why? Not that I am going fast. Because exemptions we discussed this. This is like a repetition for us. Okay. So you also, when you are revising, first revise exemption chapter and then see this so that you will understand it better. Then yes, for sponsorship. For sponsorship, any exemption we discussed yesterday? Yes, what is that? Sponsorship money collected by a recognized sports body is exempted. Very good. In other cases, it will be taxable. And what is the condition for RCM? This also I told you. Recipient should be body, corporate or firm. Then only it will be RCM. Otherwise, it will be FCM. Say this. Sponsorship services, condition for RCM, recipient should be body, corporate or firm. Otherwise, it will be FCM. Then agent services. Agent services, total 5 agents are there. First one, insurance agent. Insurance agent to insurance company. Do we have any exemption for insurance agent to insurance company? Yes. Business facilitator or business correspondent working in rural area is exempted. Other case it will be taxable, and we don't have any condition for RCM, non-applicability of RCM. Done. Next, recovery agent to bank, financial institution or NBFC. So this recovery agent, who is recovery agent? So recently one movie also got released, Kudumbastan, like that one movie. In that movie, that person will take 20,000 rupees loan, when he takes 20,000 rupees loan, the recovery agent, one call center fellow, he will call everyone to their family members. You would have seen that particular scene, huh? And it is there in OTT platform also. Nice movie, you watch that, okay, not now, after exam. And that, wherein these people are called as recovery agents. What they do is that they take all the contacts of yours. How? The moment when you give access to your phone, okay, everything will be going there. iPhone or Android, now nothing like that. Everything, even in iPhone also, there is one option. Ask app to track, like that one option will come. Without knowing, if you click on allow, enough. Once if you click on allow, then completely they will be tracking entire data from the phone. So therefore, be careful when you install any app, and these contacts they will get, they will somehow ensure that they torture us and they recover the money, because they get a commission for that. On that commission, they will pay GST or bank will pay GST, bank will pay GST. Is there any exemption? No exemption. Any condition for RCM? No. Non-applicability of RCM also no. This point already once it has been tested in exam. There is a recovery agent appointed by a dealer, one car dealer, okay, for which they get a commission. Taxable or exempted? Taxable. And it is FCM or RCM? FCM. Only to bank, financial institution, NBFC it will be RCM, otherwise it will be FCM. Then next, direct selling agent to bank or NBFC. What a direct selling agent will do? Marketing. They do the marketing of banking products. They also get a commission. It is taxable. We don't have any exemption. But there is one condition for RCM. That supplier should be other than body corporate or firm. Means what? They should be individuals, etc. And then only RCM, bank will pay. If the supplier direct selling agent is body corporate or firm, let they only pay GST. Okay. So if supplier is body corporate or firm, they will only pay. Otherwise only it will be RCM. Next one, business facilitator to a banking company. There is a business facilitator who is providing services to a banking company, and it will be covered under RCM. Okay. So this business facilitator to banking company, one exemption we studied. What is that exemption? If the business facilitator is working in a rural area, then it will be exempted. Is it clear or not? And other case it will be taxable. Any condition for RCM? No. Non-applicability of RCM also nothing. Then agent of business correspondent, not business correspondent. Sir, who are these business facilitator and business correspondent? Agents, agents. What work they will do? Business facilitators will do some nominal works, small works. Business correspondent will do lot of works. Business facilitator will do only money remittance, like taking money and remitting money, they get a commission, etc. But business correspondent will do account opening, loan processing, check collection, like this, all those works business correspondents will do. So business facilitators and correspondents are agents. And here if you see RCM is only for business facilitator, not for business correspondent, whereas agent of business correspondent to business correspondent is covered under RCM. Here also, if they are working in rural area, then it will be exempted. And any condition for RCM? No. Non-applicability of RCM also we don't have anything. Related to this, you can make note of two charts. Okay, kindly make note of these two charts in your book somewhere. If the last page you have space, you write down. If not, you write in your notebook. Okay. Say this. There is a banking company. There is a banking company, and this banking company is having rural area branch. This banking company is having rural area branch and urban area branch. There is a banking company which is having rural area branch and urban area branch. Rural area branch, urban area branch. And they appointed business facilitator, business facilitator. Mr. A is appointed for rural area, Mr. B for urban area. Mr. A for rural area, Mr. B for urban area. Now, Mr. A provides the services provide services to rural area branch, for which rural area branch will pay commission. For which rural area branch will pay commission. What is the treatment of this commission, boss? Exempted. Rural area, so exempted. And urban area branch, Mr. B provides services. Business facilitator provides services to urban area branch, for which urban area branch will give commission, and this commission is taxable under RCM. Then who will pay GST on this commission? Banking company will pay GST on this commission. Banking company will pay GST on this commission. Next, there will be agent of business facilitator. You finished up to this? There is an agent of business facilitator, and don't worry about these notes, whatever I am scribbling here, everything will be available in our YouTube channel below the description. Okay, so in case if you missed writing anything, okay, don't worry, it will be there. So you can go to our YouTube channel, daily live is going on. In the description, we will share in the Google Drive these notes, okay, whatever notes that I am writing, like the day wise only I am writing the notes. So this will be shared with you, don't worry. In case if you are not making note, if you make note then and there it will be over, that's why, okay. Agent of business facilitator. Agent of business facilitator, what they will do? Agent of business facilitator will provide the services to business facilitator. Say Mr. X is appointed as agent of A and Mr. Y is appointed as agent of B, and X provided services to A. X provided services to A, for which A received commission. What is the treatment of this commission? Tell me here. What is the treatment of this commission? This commission is exempted. This commission is exempted. Why? Because the main agent commission is exempted. So this agent commission is also exempted. Then Mr. Y provides the services to Mr. B. Mr. Y will provide services to Mr. B, and for which services? For this services, Mr. Y receives commission, and this commission will be taxable. Is it FCM or RCM? Carefully see the list. Is it FCM or RCM? It is not in RCM. So therefore it will be FCM. Then who will pay GST? The agent of business facilitator will only pay GST. Now, from this you can conclude 2 points. What is the 2 points? Business facilitator, agent of business facilitator earning commission from rural area is exempted, and business facilitator will never pay GST on their outward supplies and inward supplies. On their outward supplies, who is paying? Banking company is paying. On their inward supply, who is paying? Agent of business facilitator is paying. Okay, so please write down the conclusion. Conclusion: BF or agent of BF, business facilitator, BF or agent of BF earning commission in rural area is exempted. Earning commission in rural area is exempted. Earning commission in rural area is exempted. Next point. BF shall never pay GST to government. Business facilitator shall never pay GST to government. Correct? Because on their outward supplies, who is paying? Banking company is paying. On their inward supply, who is paying? Agent of business facilitator is paying. Okay. Next. Now, let's see another chart. In this another chart, we are taking banking company, Same rural area branch, the same type of chart you draw. Rural area branch, but this is now for business correspondent. Banking company, rural area branch, urban area branch, banking company, rural area branch, urban area branch, and there is a business correspondent, say Mr. A, Mr. B. Instead of business facilitator, they are business correspondent. A will provide services to rural area branch, for which A receive commission. As usual, this commission is exempted. As usual, this commission is exempted. Whereas B provides services to urban area branch, and for which B receives commission, and as usual this commission is taxable, but it will come under FCM, not RCM. Business correspondent is not there in RCM, which means who will pay GST? Business correspondent only will pay GST. That is the slight change. That is the slight change. If you see above chart, business facilitator means banking company will pay, but in this chart business correspondent means business correspondent is only paying. Then agent of business correspondent. So this part you finished. Agent of business correspondent. Agent of business correspondent. This agent of business correspondent say Mr. X, Mr. Y. Mr. X is providing services to Mr. A. Agent of business correspondent. X is providing services to A. As usual, whatever commission that X gets, that commission will be exempted. That commission is exempted. Same way, Mr. Y provides services to Mr. B. Mr. Y provided services to Mr. B, for which Mr. B receives commission, and this commission is taxable, but it will come under RCM, where you can see last point, agent of business correspondent to business correspondent. So it will be RCM, means GST payable by business correspondent. So tell me what is the change that you can find in this. Business correspondent is only paying GST on both inward supplies and outward supplies. Is it clear? So 2 points here also conclusion. 2 points here also conclusion. What are the 2 points? BC or agent of BC, business correspondent or agent of business correspondent, earning commission from rural area is exempted. Earning commission from rural area is exempted. Same like above. Got it? Then next point, BC shall always pay GST. Shall always pay GST. Correct? Because if you see their outward supplies also they are paying. On their inward supplies also they are only paying. BC shall always pay GST. So what are the 4 points that you need to remember? Conclusion. Point number 1. Business facilitator, agent of business facilitator earning commission from rural area exempted. Business facilitator shall never pay GST on outward supply, inward supply. Third point, business correspondent, agent of business correspondent earning commission from rural area is exempted. Business correspondent shall always pay GST on outward supplies and inward supplies. Okay, this is what you need to remember. Now come back to this. So we completed agent services. Then advocate services and arbitrator services. Can you tell me what are the exemptions we have discussed? Yesterday we discussed and we did concept drills and all on this. So tell me what are the exemptions for individual advocate and firm of advocate. Number 1, if they provide services to individual. Number 2, government or government authority, government entity. Number 3, business entity whose turnover during previous year does not exceed threshold limit. Number 4, another individual advocate or firm of advocate. But for senior advocate and arbitrator, we have only 3 exemptions. Only 3. What are they? To individual, to government, and to business entity whose turnover during previous year does not exceed threshold limit. Those points only I have repeated it here. Is it clear? Those points only you can see here. And in other cases, advocate service will be taxable. And I told you this point. Always advocate service will come under RCM. No condition. So no exceptions. Is it clear? Advocate and arbitrator. Next one. D. Director services to company or body corporate. There is a director who is providing service to company or body corporate. First of all, if the director is an employee of the company, what is your answer? Not a supply. Why not a supply? Because employee to employer in the course of employment. How you know the director is an employee of the company? TDS under section 192. Very good. If the director is an employee of the company or body corporate, then it is not a supply. Otherwise, director service will come under RCM. Any condition for RCM? No. But is there any exception? Yes. Concentrate. If the director is providing service in his personal capacity, example, I am a director of a company and I receive the sitting fees for participating in the board meetings, that is in the capacity as a director. On the sitting fees, I will not pay GST, but my company or body corporate will pay GST under RCM. However, I own a immobile property. That immobile property I will give on rent to the company. Now don't interpret it as director service. You see it as renting of immobile property service. Is it clear or not? Again, I am a chartered accountant and I will be providing services not in the capacity as a director but in the capacity as a chartered accountant. Then don't see it as director service, see it as chartered accountant service. Is it clear or not? So we need to see from personal capacity point of view if it is other than director services. Okay, so director providing service in personal or private capacity will not come under RCM. Last one, security agency services. For security agency services, do we have any exemption? One exemption is there for security agency services. What is that? Very good. So security agency services and housekeeping services within premises to category 1 education institution. What is category 1 education institution? Education institution up to 12th standard or equivalent. Security agency service within premises provided to education institution providing education up to 12th standard or equivalent is exempted. Got it? Next, 2 conditions for RCM. What are the 2 conditions for RCM? Supplier should be other than body corporate. In other place also it is there. Where? Renting of motor vehicle. Supplier should be other than body corporate and recipient should be registered, not body corporate. Changed. Recipient should be registered but not opting for composition scheme and not registered only to deduct TDS. Then in that case it will be RCM. What are the 2 conditions? Supplier should be other than body corporate. Recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. If any one condition is not satisfied, it will be coming under FCM. That's it here. These are the list of services which are covered under RCM. Understood? Now, so we will also complete other areas in this, and afternoon session we will discuss concept drill questions, so that will be like a revision of all these things. Is it clear? Now look into section 9 subsection 4, purchases from an unregistered person. This is an area which is not at all tested in exam so far, and I don't think so also they will be making a question on this, because from 2018 I am seeing the question paper, they are not asking any question on this, and even ICI, I doubt whether they know that it is there in syllabus or not. They might have forgot that it is there in syllabus. So due to that reason, this area we will learn, okay, but no need to spend more time on this etc and all. You should be knowing what you need to do, okay. So don't go too much into the details etc and all. I'll give you little bit background about it. Simple. There is a promoter or builder who is purchasing from an unregistered person. Will he pay GST or he will not pay GST? You are buying from an unregistered person, pa. Will you pay GST or you will not pay GST? Correct? Means loss of revenue to government or not? So government is asking you to pay GST under RCM. What if you buy from a registered person? Already you paid to that registered person, so no need to pay GST under RCM. Is that clear? So this is applicable to whom? This is applicable to whom? Only to a promoter or builder. So see this, inward supplies of a promoter or builder. From whom? Unregistered person. Then only this section is applicable, correct or not? So promoter or builder, what is that they are purchasing? They may purchase capital goods, they may purchase cement, or they may purchase other inputs and input services, correct? If they buy capital goods, check whether they purchased from a registered person or unregistered person. If they purchased from a registered person, no issue. Why no issue? Already you paid GST Nayar to that person. So why you need to again pay GST under RCM? So GST not payable under RCM. Got it? Suppose if you buy capital goods, what capital goods promoter or builder will buy? What capital goods? Concrete mixer. Bricks is not capital goods, that is inputs, no. And that is crane, JCB, bulldozers, or this what is that, machines to break the building, okay, and the drilling machines, or they will erect the temporary lifts for the purpose of taking the cement, concrete, etc. to the top floor. All these are capital goods. Got it? If they buy from an unregistered person, what is the treatment? Whether they paid GST to supplier? No. So therefore, they need to pay GST under RCM. At what rate? Simple, at the rate applicable to capital goods. You understood this part, pa? So you are a step into the shoes of a promoter or builder. You are a promoter or builder. What you are doing first? Purchasing from an unregistered person. What you are purchasing? Capital goods. What you should do? Pay GST under RCM at the rate applicable to capital goods. Why you should pay GST under RCM? Because you did not buy from registered person. Had you purchased from registered person, you would have paid GST, the revenue would have received by the government. Government badly needs revenue on real estate sector. They can't lose the revenue on real estate sector. That's why they brought in this point. Is it clear? Next, because real estate sector means definitely a person who is buying a building is luxury or necessity? Luxury. Then they can afford GST also. Correct or not? For that reason, let's pay GST. That is the idea behind it. Next, suppose if you buy cement, you are a promoter or builder, you buy cement. You buy cement from an unregistered person. If you buy from a registered person, already you paid, na? So no need to pay any GST under RCM. What if you buy cement from an unregistered person? You need to pay GST under RCM. At what rate? 28% is the rate applicable to cement, so they cannot lose it. So 28% you need to pay under RCM. Is it clear? So come on, step 1. Capital goods. Purchase from a registered person. Ignore. Purchase from unregistered person. Pay GST under RCM at the rate applicable to capital goods. Cement. Purchase from a. Ignore. Purchase from a. So you need to pay GST under RCM at. Awesome, yaar. Next one. Balance purchases from an unregistered person. What balance? Inputs and input services. They are telling it's okay, 20% we will allow you to buy from an unregistered person, because we cannot put a condition that 100% needs to be purchased from registered. So 20% we will allow. Beyond 20% and all, if you are buying from unregistered person, you have to pay GST under RCM at 18%. Is it clear? So now you see what is the balance inputs and input services from an unregistered person divided by total inputs and input services. Total inputs and input services. Again I am repeating, balance inputs and input service from an unregistered person divided by total inputs and input services. While taking this total inputs and input service only to be taken, and you need to exclude few things. What are the few things that you need to exclude? See there. Cement should be included. That is also one of the input. What should be excluded? TDR FSI long term lease. Why TDR FSI long term lease needs to be excluded? Because it's already covered under 9.3. Anyhow, I am paying GST under RCM, correct or not? Turn the page and see whether TDR FSI long term lease is there. GOT, T for TDR FSI long term lease. Anyhow, I am paying under 9.3. Yeah. Then again, no need to pay under 9.4. That's why it is excluded. Are you getting this? Next. Electricity. Why electricity is excluded? Electricity is what? Naturally, when you buy it, so there is no GST at all on that. So supplier will not be a registered person. Am I right? Then next, continue. Petrol, diesel, natural gas. Why? Non-taxable. Anyhow, there is no GST on that. Why alcoholic liquor is not given? That is also non-taxable only. No. That is no way connected to construction. Whether we construct a building using alcohol or what? Good idea only, so that whenever they want to drink building and they will lick, so that they will get the alcohol, etc. and all. And that kind of philosophy is not there here, and due to that reason alcohol is no way connected. Crude oil, no way connected, and aviation turbine fuel, no way connected. That's why that is not given. Whatever is connected, petrol, diesel used in the mixers and generators, which is used in construction. Natural gas is used for welding, gas welding. So that's why it is given. Okay. So what are the 5 things which are excluded? Come on. TDR FSI long term lease, electricity, petrol, diesel, natural gas. Take out. Now you see the ratio. Balance from unregistered person by total. If it is up to 20%, no need to pay GST under RCM. Why? Because it is allowed. It is allowed here, it is allowed. Up to 20% it is allowed. What if it is beyond 20%, say 28% or 26%? Then excess how much? Excess how much? 6%. On that 6%, you need to pay GST at what rate? 18%. Say this. GST payable under RCM on the excess over 20% at what rate? 18%. GST under section 9 subsection 4. Is it clear? And this computation should be made on a yearly basis or up to project completion date, and computation shall be made separately for each project. Means this computation and all we need to see on a yearly basis. What is the meaning of up to project completion date? For example, if the construction takes 8 months only, then for 8 months you do. GST computation shall be made separately for each project. GST payable yearly at the time of filing annual return. So this GST we will not pay monthly. This we will pay on a yearly basis at the time of filing annual return. That is this points. Now, if at all you get a question, you will get a question like this. Okay, you will get a question like this. Say this. So 90% there is no possibility. 10% if the paper setter is a psycho, he can give. Definitely there is a possibility. That's why I thought like a psycho and I have included this question, maybe worst come scenario. Because suppose if this concept and all comes now, you will scold my 10 generations before and all. Say this, a promoter has procured following goods and services for construction of a residential real estate project during a financial year. So name of input goods and in services, sand, cement, steel, bricks, like that, lot of goods details are given. Please concentrate, pa. If you are concentrating, we can complete it sooner. That's why. Okay. Rate of GST is also given. Value of inward supply received during the financial year. Now it is whether received from a registered person or not. Yes means yes, it is received from registered person. Otherwise, N means not received from a registered person. And that this alone, manpower supply is a question mark. See the question below. Compute GST payable under 9394 in the following cases. Manpower supply is received from a registered person. Manpower supply is received from a unregistered person. So, suppose if manpower supply is from a registered person, let's take this as yes. Can we do the question? Yes. Close this book or keep that book. Question also it is okay. If the question is visible in the screen, it's okay. Otherwise, you can see the book. Open your notebook. Don't see the answer in this. Please open the notebook. We will do the answer. Answer I have given, but I want you to try. So, please open the notebook. Step 1 is what here? Capital goods, correct? Check in the list, we have capital goods. Check in the list, we have capital goods. Yes, capital goods we have. Whether purchased from a registered person or unregistered person, unregistered person, it is given as N, means purchased from a unregistered person. So what we need to do? We need to pay GST under RCM. Write down. Step number 1, capital goods. Step number 1, capital goods equals to, how much is the value of capital goods? 40 lakhs into what is the rate of GST? 12%. 40 lakhs into 12%, 4,80,000. 4,80,000. Next one. After step 1 capital goods, what is step 2? Cement. So go to cement, second point, cement. Cement, whether purchased from registered or unregistered? Unregistered. So we need to pay, N is given, means unregistered. So we need to pay GST under RCM. At what rate? 28%. So 15 lakhs into 28%. Write down step 2, cement equals to 15 lakhs into 28%. 420. 4,20,000. Correct? Next, other inputs and input services from unregistered person. Other than cement, what else is? And don't count FSI. Why you should not count FSI, pa? FSI, electricity, you should not count in this. Why? Anyhow, that is excluded, correct or not? Remaining you see from unregistered person. Only one, flooring tiles, correct? Capital goods you considered, cement you considered. What else is from an unregistered person? Only one, that is flooring tiles. And what is the value of the flooring tiles? 10 lakhs. So write down step 3. Step 3. Balance from URP. Balance from URP divided by total inputs and input services. Balance from URP. Here and write. Listen and write. Okay, listen and write. Don't see, nothing I am writing. So please listen and write. Balance from URP divided by total inputs and input services into 100. Into 100 equal to. What is the balance from URP? 10. 10, only 10. Because we don't have anything else in the list. Only 10. Divided by total. While doing the total, don't take capital goods, don't take FSI, electricity. You see remaining total, just do the sum. Take calculator and do the sum. 10 plus 15, 25 plus 20 plus 15 plus 10 plus 5 plus 10 plus 20 plus 150 up to this. Sorry, plus 15 up to this. Up to this. How much? 120 lakhs. Correct? If you take calculator, press the numbers you will get. Trust me, it is 120 only. You don't have calculator, no. Divided by 120. GST exam requires calculator. You have to take and go, okay. Divided by 120. It's okay, it's okay. Trust me, it is 120 only. Divided by 120 into 100. What is 10 divided by 120 into 100? At least mobile you will have, na. In that also you can calculate. 8.33%. 8.33%. And 8.33% is less than or equals to 20%. So are we required to pay any GST? No, we don't have to pay any GST under RCM on this. Got it? Right there. So 10 divided by 120 into 100, 8.33% less than or equals to 20% hyphen no GST. Now do the total. What is the total GST payable under RCM 9.4? Total GST payable under RCM 9 subsection 4 equals to 9 lakhs. Total GST payable under RCM 9.4 equals to 9 lakhs. They are asking 9.3 also. Which one is 9.3? FSI. In this list only FSI is 9.3. So next line, GST payable under 9.3. GST payable under section 9.3. That is 5 lakhs into 18%, 90,000. Got it? This is the answer for the first part of the question. If manpower supply is received from a registered person. Now, let's do if manpower supply is from a unregistered person. If manpower supply is from a unregistered person, then what will happen? Come on. Can we start again? Again step 1. Same ah? Step 1, capital goods. Same na? Same. How much? 40 lakhs into 12%, 4 lakh 80,000. Step 1, capital goods, 40 lakhs into 12%, 4 lakh 80,000. No change in that. Next step 2. What is step 2? Cement. Cement purchased from a unregistered person. So cement, step 2, cement. How much is the value of cement? 15 lakhs. 15 lakhs into 28%. 15 lakhs into 28%, 4 lakh 20,000. Same. Now step 3. What is the balance from unregistered person? What is the balance from unregistered person? Now 2, that 10 plus 20. Flooring tiles also, manpower supply also. Manpower supply also. This is also from an unregistered person. Now total how much? 30. Write down. Balance from URP. Balance from URP divided by total inputs and input services into 100. Balance from URP. Balance from URP divided by total inputs and input services into 100. Okay. Equals to how much? 30 divided by 120 into 100. 25%, which is greater than 20%. I am making you write for one reason. You should get to know how to arrive at the answer. Okay. And don't be lazy. What I am asking to write is only few things. That also, if you are not writing, definitely you will not get first night in your life. Curse. Okay. So Goyala. Solra eludama ukkandu irukkinga. So 30 divided by 120 into 100, 25%, which is greater than 20%. What is the excess? 5%. What is the GST payable under RCM? 18%. So write down 120 lakhs into, see, 5% only extra na? 5% of what? 120 lakhs. Total 120 pa, 120 lakhs into 5% into, on that what is the rate of GST? 18%. Ayya, total 120 lakhs. In that 5% is only excess, so into 5%. On that, what is the rate of GST? 18%. So 120 lakhs into 5% into 18%. Do that. 1,08,000. So total GST payable under section 9(4). Total GST payable under section 9(4), 10,08,000. 10,08,000. First 9 lakhs, 4,20,000 plus 4,80,000 plus 1,08,000. So 10,08,000. 9(3) will be same. GST payable under section 9(3) same. What is that? 90,000. That is 5 lakhs into 18%, 90,000. Okay. 90,000. That's it. This is the answer for that. Answer is already there in the book. You can see that answer later, but already we did the computation related to this. Now look into section 9 subsection 5, page number 38. So we completed 9.3, we completed 9.4. Now we will see 9 subsection 5. Concentrate. Liability to pay GST on e-commerce operator in case of notified services. So there are total 4 notified services. In case of those 4 notified services, liability to pay GST is on e-commerce operator. What are those 4 notified services? Remember with the mnemonic HATE. H-A-T-E. H for housekeeping services. Example, Urban Club, Quicker, etc. A for accommodation services. Go a Bibo, make my trip. How can we forget Oyo also? Okay. Go a Bibo, make my trip. And T for transportation of passengers by any type of motor vehicle. Areyar, passengers, not goods, passengers. So porter is there now. Will it come under the list? No. Only transportation of passengers means Ola, Uber, Rapido, Redbus, etc. and all will come into this category. Okay. Other than omnibus by a company. Then, so just remember what is that service? Transportation of passengers. E for eating food from a restaurant. That is Swiggy, Zomato, etc. will come into this list. What are the 4 notified services? H, A, T, E. H for housekeeping services. A for accommodation services. T for transportation of passenger services. E for eating food in a restaurant. Okay. These 4 are covered under e-commerce operator liability, not RCM. This is not RCM. These 4 are covered under ECO liability, where liability to pay GST is on e-commerce operator. Understood? Now, supplier will not pay GST. For example, I am a restaurant, I am supplying food through e-commerce operator Swiggy, then Swiggy only will pay GST. I will not pay GST. Is it clear? Same way. So, I am a Ola driver providing transportation through Ola cabs. Now, in this case, Ola cab only will pay GST. I will not pay GST. Same is the case. I am a hotel and I list it through OYO and I will not pay. Hotel owner will not pay. OYO rooms will pay GST. Same way, there is a carpenter who provides service through Urban Clap. Carpenter will not pay GST. The Urban Clap only will pay GST. Are you understanding this? Clear? But we need to understand the conditions now. First, for housekeeping service, what is the condition? Supplier should be unregistered. What if the supplier is registered? It's not covered under 9.5. It's not covered under 9.5 means who will pay GST? Supplier only will pay GST. Is it clear here? So if supplier is registered, supplier only will pay GST. Then that is if the carpenter is unregistered, Goibibo will pay. If the carpenter is registered, the carpenter only will pay GST. Then accommodation service. Accommodation services. Again here also same. So that's why I made it like HATE. First 2 cases, the condition is same that the supplier should be unregistered. Next 2 cases, the supplier may or may not be registered. Okay. Now accommodation service also supplier should be unregistered. For example, I have a hotel and that hotel is unregistered, listed through OYO. Who will pay GST? OYO. Suppose if I am registered, listed through OYO, even then I will only pay GST, because if the supplier is registered, supplier only will pay GST. Then next, transportation of passengers by any motor vehicle. Here supplier may or may not be registered. So whether the driver is registered or driver is unregistered, or restaurant is registered, restaurant is unregistered, always e-commerce operator only will pay GST. Is that clear or not? Whether driver is registered or not, providing through Ola, Ola only will pay. Whether the restaurant is registered or unregistered, supplying food through Swiggy, Swiggy only will pay. Is that clear? Then, what are the exceptions to these 2 points, T and E? For T point, there is one exception. What is that? If there is a company, company means either private limited company or public limited company, providing transportation of passengers by omnibus. Omnibus means what? Capacity greater than 6 passengers, means 7 passengers. 7 passengers plus 1 driver seat means 8-seater vehicle. What is a 8-seater vehicle means? Innova provided in Innova in the middle row they are giving 3 seats. Innova there are 2 variants. In the middle seat there will be 2 bucket seats. So that first 2, middle 2, last 3 it will come under 7 minus 1, that minus 1, what is that? Driver seat. So passenger seats will be only 6, exactly 6 is not a omnibus, see there, it's not greater than or equals to 6, greater than 6, okay. So in the middle row if there is 3-seater, definitely that is a omnibus, is it clear? So you don't think omnibus means big bus and all, no, even Innova, Tempo Traveler, Maxi Cab, all these also will come under omnibus. If they provide it through e-commerce operator, say Redbus, etc., who will pay GST? Supplier only will pay GST. Is it clear? Read that. If the transportation is through omnibus by a company, then the company only will pay GST under FCM. So this e-commerce operator will not come, means it's not covered under 9.5. Same way, for eating food in a restaurant, also one exception is there. There is a restaurant inside a hotel. That hotel is charging room tariff. There is a restaurant. Where is that restaurant? Inside a hotel. What is that hotel? In that hotel, the room tariff, per day room tariff will be greater than 7,500. Per day room tariff greater than 7,500 means definitely it will be a 4-star or 5-star restaurants, correct? And in that restaurant, if 4-star, 5-star hotels, in that hotels, for example, Taj Hotel. In Taj Hotel, there is a restaurant. In that restaurant, if a person order food through Swiggy, who will order, sir? Some people are there, okay. Full money they will be having. So, lot of money when they have, they can order from anywhere here. They can eat gold and silver also, okay. And therefore, this particular, Taj Hotel restaurant, they are ordering. Now, who will pay GST? Will e-commerce operator pay GST? No. That restaurant only will pay GST. Is it clear? Read there. If the restaurant is in a specified premises. What is that specified premises? That is a hotel having a declared tariff equal to 7,500 or greater than 7,500. Greater than 7,500 rupees per day. Sir, all rooms are any one room. Any one room greater than 7,500 rupees per day. That is a hotel. In that hotel, if there is a restaurant selling food through Swiggy, the restaurant only will pay. E-commerce operator will not pay. Is that clear? This is about section 9 subsection 5. You need to remember these notified services, conditions and non-applicability of 9 subsection 5. Even though it is a notified service, but we have exceptions. In the exceptions cases, supplier only will pay GST. Then we have some important points in this regard, and there is a circular also on restaurant service through e-commerce operator, which is connected to the concept of TCS. TDS and TCS. So, we will take a break, and after break we will continue with the concept of TDS, TCS, and then we will come back to this page and complete. With that, this chapter also will be over, TDS, TCS chapter also will be over. We will meet after 15 minutes. Okay. So this e-commerce operator provisions we have discussed so far, and we have a connection to this, that is TDS and TCS. Kindly look into TCS, which is in page number 151. Now we are going to discuss TDS and TCS. This TDS and TCS, in the TCS aspect, is connected to e-commerce operator. That's why we are discussing this. Then we will complete that one page which we have left in that chapter. So look into page number 151. There are two sections here, section 51 and 52 of CGST Act. Section 51 deals with TDS, section 52 deals with TCS. And when there will be TDS, tax deducted at source, concentrate, whenever I am making supply of goods or services to a notified recipient, that notified recipient will be deducting 2% as TDS and he will remit me the remaining amount. What is the objective behind this 2% deduction? For example, you are that notified recipient. I make a supply to you, and whenever you are deducting 10,000 rupees and remitting as TDS to government, then government will know what is my turnover. How? Simple. For 10,000 if it is 2%, for 100% it is how much? How much? You calculate 10,000 divided by 0.02. How much you got? 10,000 divided by 0.02, that is 2%, 0.02. How much you got? 5 lakhs. So 5 lakhs will be my turnover. If I report a turnover less than 5 lakhs, immediately a system notice will come to me. The system will automatically send a notice to me stating that, boss, your recipient has deducted 10,000 as TDS, which means your turnover should be 5 lakhs. Why are you reporting a lesser turnover? Like that, a notice will come. For this audit trial only, they have brought in this system of TDS. Is it clear or not? Again, I am repeating, whenever I am making supplies to notified recipient, either goods or services or both, that notified recipient will be deducting TDS at the rate of 2% and they will be remitting that 2% to government. Is it clear? Now see there. When applicable, first we will complete TDS fully and then we will see TCS, so that you will know the differences between that. First focus on TDS computation. When TDS is applicable as per section 51 whenever we are supplying to notified recipient. Who are those notified recipients? Government and its family members. That is government, government society, public sector undertaking, government body or authority where their investment is greater than or equals to 51%. So who are all the notified recipients? Government. Government means central government, state government, local authority. Number 2, government, society. This TDS, TCS, please concentrate. I don't know whether you have studied it properly or not. So listen. Government, society. Number 3, public sector undertaking. Number 4, government body or authority where equity participation is greater than or equals to 51%. And now they added one more point. I am a registered person. I am making supply of metal scrap to another registered person. Then it will be covered under TDS. That newly they have added now. Registered person receiving metal scrap from another registered person. Previously only 4 points were there. Now 5th point they have added. I am a registered person supplying metal scrap. Metal scrap means what? Iron scrap, steel scrap, etc. to another registered person. That is also now covered under TDS. The recipient should deduct the TDS. Okay. So 5 recipients: central government, state government, local authority, government society, public sector undertakings, government body in which government has invested greater than or equals to 50%, 51%, then registered person making supply of metal scrap to another registered person. Who is liable to deduct and at what rate? Notified recipient will deduct. What is the rate at which they will deduct? 2%. And when TDS is not applicable, now concentrate. What is the reason or what is the objective behind this TDS? Just to find the turnover of the supplier. What if the supplier is an unregistered person? What's the point in knowing their turnover? So that's why TDS not applicable. So first one, supplier is unregistered. Or if the supply itself is exempted or non-taxable, what's the point in identifying the turnover of the supplier? So then also TDS is not applicable. Objective, if you remember, it will be easy for you to understand. That is, what is the objective of TDS? Mainly to catch the turnover of the supplier. So if the supplier is unregistered, or if the supplies are exempted or non-taxable, or if the contract value does not exceed 2,50,000. So what does it mean? Contract value means the total value of supply under the contract does not exceed 2,50,000. Then also TDS is not applicable. What if the contract value exceeds 2,50,000? TDS is applicable. Remember, the total value of supply under the contract is what we need to see. Total value of supply under the contract means, say I enter into contract with Tamil Nadu state government to supply face masks over a year. In a year, I have to supply them 8 lakh face masks. Each face mask will be 50 paise. So what is the value of supply under the contract throughout the year? 8 lakhs into 50 paise, 4 lakhs. And first month, I am delivering only 1 lakh face masks. 1 lakh into 0.5, 50,000 rupees only bill. But TDS is applicable or TDS not applicable on this bill? Applicable. Applicable, because you should not see the invoice value. You should see the contract value. If the total contract value of the supply exceeds 2,50,000, then only TDS is applicable. Otherwise, TDS is not applicable. Then next, supplies between notified recipients also TDS is not applicable. What is supply between notified recipients means? That is between government and PSU, between PSU and government body, between PSU and government society, between them. If there is any supply, TDS is not applicable. However, if metal scrap is supplied between them, then TDS is applicable. You understood or not? This is also another amendment. Supplies between notified recipients other than supply of metal scrap. If there is any metal scrap is supplied between the notified recipients, definitely TDS will be applicable in that case. And number 5, recipient is liable to pay GST under RCM. So recipient, because liability is not on supplier, liability is on whom? Recipient. Objective of TDS is what? To find the supplier turnover. When recipient is paying GST, why we need to catch the supplier? For that reason, TDS is not applicable when the recipient is liable to pay GST under RCM. Location of recipient and place of supply not in the same state means it is an intrastate supply, but the recipient is in the other state, then TDS is not applicable. TDS not applicable if it is an intrastate supply and recipient is in another state. Let's try to understand why TDS is not applicable in that case. For example, government of Andhra Pradesh, government of Andhra Pradesh is having a building in Tamil Nadu. They are having a building in Tamil Nadu. Can they have a building in Tamil Nadu? Yes, why not? They can have. Any person can own building anywhere. Government also can own. Now there is an architect. Where is this architect located? Tamil Nadu only. This architect is providing services to government of Tamil Nadu. Government of Tamil Nadu is the government of Andhra Pradesh is the recipient. Okay. Now, when architect is providing services to government of Andhra Pradesh, for these services, what is the place of supply? The place of supply is the location of building. What is the location of building? That is Tamil Nadu. Again I am repeating, carefully listen. There is an architect. Where is that architect located? Tamil Nadu. And providing services to government of Andhra Pradesh in relation to their building in Tamil Nadu. For these services, what is the place of supply? Location of building, that is Tamil Nadu. Now, what is the nature of supply? What is the nature of supply? The nature of supply is intrastate supply. Intrastate supply means CGST plus SGST, correct? CGST plus SGST. Which SGST? Tamil Nadu SGST. How Tamil Nadu SGST? Because the architect is in Tamil Nadu. Are yaar, architect supply Tamil Nadu, place of supply also Tamil Nadu. Therefore, it is an intra-state supply chargeable to CGST and Tamil Nadu SGST. But where is the recipient located? Andhra Pradesh. They can deduct 1%. 2% is the rate. If it is intrastate, 1% CGST, 1% SGST, they can deduct 1% towards CGST, but they cannot deduct 1% towards Tamil Nadu SGST. Why they cannot deduct 1% towards Tamil Nadu SGST? Because where are they registered? They are registered in Andhra Pradesh. You understood or not? Why? Because see, I am in Andhra Pradesh. If I need to remit as SGST of Tamil Nadu, then I should register there, and you cannot make government to register there. Is it clear or not? That's the reason why they are telling TDS itself is not applicable. Why TDS itself is not applicable? Tamil Nadu, they have to pay GST, but they are located in Andhra Pradesh. How can they pay GST to Tamil Nadu? They cannot pay. That's why TDS itself is not applicable. So tell me, what is the transaction? Intra, correct? Intra. But where is the recipient? Recipient is located in the other state. So that is this point. Whenever the recipient is in the other state, then TDS is not applicable. Now total 6 transactions. Again I am repeating the 6 transactions. Carefully listen. When TDS is not applicable, if the supplier is unregistered, if the supplies are exempted or non-taxable. Number 3, if the contract value of supply does not exceed 2,50,000. Number 4, between the notified recipients other than supply of metal scrap. Then if the recipient is liable to pay GST under RCM. Our last point, if it is a intra-state supply, but the recipient is located in the another state, then also TDS not applicable. That is this. And see these important points. TDS is computed on amount remitted by the supplier, by the recipient to the supplier, not on the invoice value. I raised an invoice for 1,50,000. Carefully listen. I raised an invoice for 1,50,000, but you are not remitting 1,50,000 to me. You will remit only 1,20,000. Why 1,20,000? Say 30,000. There is a retention money concept. Retention money means government will retain some money out of the contract price and they will not release full amount. So because maybe in future, if the work of mine is not good, they should be able to rectify that work, and they need to spend now. Why will they spend out of their pocket? That's why they will retain that 20%, say 30,000, and they will release to me at a later point of time. So right now to government I raised the invoice for 1,50,000 plus GST. How much they are remitting me? 1,20,000 plus applicable GST on 1,20,000. Now TDS is computed by government on 1,50,000, 1,20,000, 1,20,000, not on 1,50,000. First of all, for application of TDS, we need to check the contract value. If the total contract value exceeds 2,50,000 only, TDS will be applicable. So TDS is computed on amount remitted to supplier by recipient. And this just now we discussed when TDS is not applicable. Now look into the next page. Computation and compliance. TDS is computed on what? Value including GST or excluding GST? Excluding GST. Excluding GST. So see the total amount that they have remitted. In that amount they have remitted, take out the GST. On the remaining portion only TDS will be computed. And whatever TDS that is deducted by the notified recipient, they have to remit it to government. What is the time limit by which they need to remit it to government? 10th of the month following every month. For example, July month they deducted TDS. They need to remit it by 10th of August. And also they need to file a return, that is GSTR7. GSTR7 is a return to be filed by e-commerce operator, that is TDS deductor, GSTR7. That GSTR7 also to be filed by 10th of the month following every month. And they need to give a certificate that we have deducted the TDS like that, but no time limit for that certificate. That certificate is in GSTR 7A. 3 compliances. Compliance number 1, they need to deduct TDS and pay it by 10th of the month following every month. Plus at the time of remitting TDS, they should also file GSTR 7, compliance number 2. Compliance number 3, they should give a certificate, TDS certificate in GSTR 7A, no time limit for that. Then, suppose if there is a delay in filing GSTR 7, means there is a delay in payment of TDS also to government, because at the time of filing GSTR 7 only they will pay TDS also, who the government department or PSU etc., that notified recipient. If there is a delay in filing TDS return, then there is a delay in payment of TDS. So, 2 points will come. Number 1, as there is a delay in payment of TDS, they need to pay interest. What is the rate of interest? 18% per annum. In GST, rate of interest is always 18% per annum from the first day after due date, from the due date till the actual date. For example, January month, what is the due date? 10th of February. They made the payment or filed a return on 28th February. So, how many days delay? 18 days delay. For 18 days, they need to pay interest. How much ever is the TDS? Into 18% into 18 divided by 365. That will be the interest. Plus, late fee also they need to pay. Why late fee? Interest is for delay in payment of tax, whereas late fee is for delay in filing returns. How much is the late fee? 25 rupees per day. 25 rupees per day, subject to maximum 1000 rupees under each act, that is CGST Act, SGST Act, that is the late fee. You can see there the late fee for delay in filing return, 25 rupees for each day of delay, subject to maximum 1000. In our example, how many days delay? 18 days delay. 18 into 25. What is 18 into 25? 450. Maximum is 1000. So, 450 rupees under CGST and 450 rupees under SGST will be taken as the late fee for delay in filing return. This is under each act. Whether TDS deductor is required to file any annual return? No. Annual return not required to be filed, and the interest will be 18% per annum payable for the period of delay in payment of TDS TCS, and any contravention. So, as they have not deducted the TDS or deducted but not properly remitted or deducted but remitted less, like that, if they default in TDS, the penalty will be up to 25,000 rupees under CGST and up to 25,000 under SGST. Even this penalty, if you are not remembering, it's okay. This is for your information, not for exam. Not for exam, but what you need to remember is this late fee and this interest provision you need to remember. Now, whatever TDS, TCS that is deducted by the recipient, TDS deducted by the recipient will be reflected to the supplier in their GSTR 2A. Okay, TDS deducted by the recipient. You are recipient, you will deduct TDS and you will remit it to the government. It will come in my return. Okay, which return? GSTR 2A. In GSTR 2A, when you see, so say this. So, GSTR 2A will look like this. In GST returns, GSTR 2A, there is a area called as TDS TCS credits, part C. In the TDS TCS credits, once we click on TCS credits or TDS credits, we will be able to see how much is the TDS that they have deducted, who is the deductor, how much they have deducted, everything we will be able to see that. So, that is this information, and what we can do with that, like income tax, it will come in form 26As, we can use it as a credit against payment of our income tax liability. Same ditto, whatever TDS that is deducted by recipient will be coming into our 2A, and at the time when I pay liability as a supplier, at the time this TDS can be deducted. So, remaining amount I will pay to government, okay, net amount, that is this. So, TDS TCS deducted shall be reflected in 2A of supplier, which is reflected in cash ledger and can be used for payment of GST liability. Suppose if I want to use it for payment of interest, penalty, etc. and all also, I can use this TDS TCS deducted. That is with respect to this TDS. These are the points related to TDS. Now go back. We will see TCS. We will see TCS. TDS refers to tax deducted at source. TCS refers to tax collected at source. Section 51 is TDS. Section 52 is TCS. When TCS will be applicable? Whenever I am making supplies through e-commerce operator, the e-commerce operator will deduct the TCS. Income tax TCS and GST TCS is completely different. It is not the same. In income tax TCS, supplier only will collect the TCS from the recipient, but here it is not like that. Whenever we make supply through e-commerce operator will deduct the TCS like a TDS only. He will deduct the TCS and he will remit it to the government. Got it? So supplies through e-commerce operator. And when it will be called as supplies through e-commerce operator, supplier should be different from e-commerce operator. Means, for example, if I am a supplier and I have my own app, through my own app, if I am providing services, will it be called as supplies through e-commerce operator? Example, IRCTC provides the ticket booking through IRCTC app. Is it supplied through e-commerce operator? No. If they provide ticket booking through Ixigo app, then it will be coming under supply through e-commerce operator. Same way, SCTC or government, state government transport department, if they have their own app through which they allow passengers to book the tickets, then it is not supplied through e-commerce operator. If they allow the passengers to book the tickets through this Redbus app, then it will be coming under supply through e-commerce operator. Reliance Trends selling its garments through Ajio app, that is not supplied through e-commerce operator. If they sell garments through Myntra, then it will be called as supply through e-commerce operator. So supplier should be different from e-commerce operator. And such e-commerce operator should not be mere agent. Example, payment gateways. Payment gateways like Razorpay, Paytm, PhonePe, these are not called as e-commerce operators because they are just the payment agents. They will collect money and remit the money. Also logistics operators like courier agencies, delivery, then express bees and Shiprocket, like that lot of professional couriers. These are all the people who are involved in this delivery process. Again, they are not e-commerce operators because they do only delivery job. Okay, say this. So such e-commerce operators should not be an agent, that is payment gateway or logistics operators. Now we understand who will deduct TCS. E-commerce operator will deduct TCS. What is the rate at which TCS will be deducted? Again, there is an amendment in this place. The rate is 0.5%. Previously the rate was 1%. Now they reduced it to 0.5% as the rate of TCS. And 0.5% means in case of intrastate supply, 0.25% CGST, 0.25% SGST. If it is interstate sale, 0.5% IGST. When it is not applicable, first point same as TDS. So TDS rate is what? 2%. TCS rate is 0.5%. Non-applicability. Again, sir, what is the objective of TCS? Carefully listen, carefully listen. The same objective what we learnt in TDS is the objective of TCS also. Whenever this 0.5% is remitted by e-commerce operator to government, the government will know what is the turnover of the supplier. For example, you are an e-commerce operator, I am a supplier making supply through your platform to the customer. Now you remitted 500 rupees towards 0.5%. Then what will be my turnover will be recomputed by the government. So 500 divided by 0.5%. 0.5% means what? 0.005, correct? 0.005. You see that. What is 0.005? 500 divided by 0.005. 1 lakh will be my turnover. If I report a turnover less than 1 lakh, immediately a system notice will come. That is, GST portal will send me a notice stating that you have misreported the turnover like that. Okay, for that reason only they brought in this TCS. Again, the objective is what? To find the turnover of the supplier. What if the supplier is unregistered? Should they find the supplier turnover? No. So TCS is not applicable. See the first point in non-applicability of TCS, supplier is unregistered. Same point we have for TDS also, supplier is unregistered. Second point, what if the supply itself is exempted or non-taxable? We don't have to bother about the supplier na. So again, TCS is not applicable if the supplies are exempted or non-taxable. So this point also common between TDS and TCS. Then third point you see in TCS, that is notified service under 9.5. What are those notified service under 9.5? Just now we completed HATE. For these 4 notified service, who will pay GST? E-commerce operator only will pay GST, not by the supplier. So no need to deduct TCS because we don't have to bother about supplier. Is it clear? So which means 9 subsection 5 and this section 52 TCS is mutually exclusive. So whenever TCS is coming, 9.5 will not come. Whenever 9.5 comes, TCS under section 52 will not come. Then next, payment not collected by e-commerce operator. Suppose if the supplier already collected the money directly from the customer, then e-commerce operator will not deduct TCS out of his pocket. Is it clear? Whatever money e-commerce operator collected from the customer, out of that they will pay 0.5% and remit the amount to the supplier. Due to that reason, if the payment is not collected by e-commerce operator, but actually 99% of the cases payment is collected by e-commerce operator only. But I am telling you, if the payment is not collected by e-commerce operator, TCS not applicable. So just 5 non-applicabilities. What are they? Sorry, 4 non-applicabilities. Number 1, if the supplier is unregistered, if the supplies are exempted or non-taxable, if the supplies are notified under 9 subsection 5, or the payment is not collected by e-commerce operator. Then this TCS is computed on what? On the value. On the value, whatever value, including GST or excluding GST, definitely excluding GST, minus sales returns in a month, because usually in e-commerce transactions, sales returns is something which will easily happen. So if you see Myntra and all, lot of people will order garments from Myntra. They will wear, they will do the photo shoot and they will post it in Instagram, and thereafter they will return that garments, okay? They will return that garment stating that fit issue is there, etc., and all. And again, they will buy, they will wear garments and they will post it in Instagram. Because if you see their Instagram account, your lot of dress they are having, etc., like that. No, they are beggars only. So what they do is that they will buy once, thereafter rotation, it is like. And now it went to an extent where they are wearing it to the parties, hiding the sticker, etc., and all. They are wearing it to the parties also. And whether the person who is returning, taking it, will he smell and see whether it is used or not used. You understood? So he will just take the return. So returns is something which is usually happening. So we need to see sales made in a month minus sales returns in a month. That difference should be taken as the value for computation of TCS. Payment towards contract value minus returns during a particular month. And TCS deducted. Time limit is what? TCS remittance, same as TDS. TDS time limit is what? 10th of the month following every month. TCS also 10th of the month following every month. What is the return for TDS? GSTR 7. What is the return for TCS? GSTR 8. Time limit for GSTR 7 and GSTR 8. Same. 10th of the month following every month. Okay. And in case of TDS, they have to give a certificate. Like that, is there a certificate in TCS? No, no such requirement. And if there is a delay in filing TCS return, GSTR 8, will there be an interest? Yes. Just like TDS, whatever we discussed, same interest. 18% per annum payable for the delay in payment of TDS as well as TCS. But late fee, there is a difference. See the late fee. How much is the late fee for delay in filing GSTR 8? GSTR 7 late fee is what? 25 rupees per day, subject to maximum 1000 rupees under each act. But here you see 100 rupees per day, subject to maximum 5000 under each act. Why such a disparity, sir? GSTR 7, who is required to file? Government. Majorly government. GSTR 8, who is required to file? E-commerce operator, private person. How government you can ask them to pay more late fee and all. That's why small late fee, 25 rupees per day, subject to maximum 1000. E-commerce operator, private people only, let them pay, let them pay. 100 rupees per day, subject to maximum 5000. For example, same question we will take. January month TCS to be filed by 10th of February. If there is a delay by 20th, means 18 days delay. For 18 days delay, how much is the late fee? 18 into 100. 18 into 100, that will be 1800, but the maximum will be 5000. So 1800 CGST, 1800 SGST. And whether TDS deductor is required to file any annual return? No. But TCS deductor is required to file an annual return in GSTR 9B. By when they need to file that? By 31st December of the succeeding financial year. All annual return time limit is same. 31st December of succeeding financial year they need to file the annual returns. And next, same concept, TDS TCS deducted shall be reflected in 2A, which can be adjusted against the payment of liability, same. And TCS return can be rectified, but TDS return cannot be rectified. GSTR 7 cannot be rectified, but GSTR 8 can be rectified. You can see there, time limit for rectification of GSTR 8. So can GSTR 7 be rectified? No, that cannot be rectified. What is the time limit for rectification of GSTR 8? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. In 5 cases, the time limit will be same year. What are those 5 cases? Number 1, time limit for availment of ITC, for taking the credit. Time limit for issuance of credit note. Okay. Then time limit for rectification of GSTR 1, rectification of GSTR 3B and rectification of GSTR 8. All these 5 cases, the time limit is same. What is that? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. So in this you write down one point. So time limit for rectification is there now. There you write down on the side here. GSTR 7 cannot be rectified. 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 Then, so similar time limits. What is it? Similar time limits. You written this. Similar time limits. Okay. Below this write down note. Below this write down note. Same time limit for. Same time limit for what? Same time limit for what? Availment of ITC. Same time limit for availment of ITC. Then credit note, comma, rectification of GSTR 1 and GSTR 3B. Same time limit for availment of ITC, credit note, rectification of GSTR 1 and rectification of GSTR 3B. Rectification of GSTR 1 and rectification of GSTR 3B. Same time limit. Okay. Same time limit. In 5 places. What are the 5 places? Availment of ITC, credit note, rectification of GSTR 1, rectification of GSTR 3B and rectification of GSTR 8. Now look into the next page for illustration on TCS. So how TCS will work? You see this. First, Xiaomi is a supplier and it will list its mobile for sale through e-commerce operator Amazon. Xiaomi is listing their mobile for sale through e-commerce operator Amazon, for which Xiaomi will pay 1000 rupees plus GST to Amazon. Can you see the first point? Supplier Xiaomi enter into contract with Amazon to sell the mobile with a commission of 1000 rupees plus GST. For every mobile sold by e-commerce operator, what is that they get? 1000 rupees as commission. Means on the mobile who will pay GST? Supplier only will pay GST. Why? I told you, only for 4 notified services through e-commerce operator will pay. But all other cases who will pay GST? Supplier only will pay GST on the mobile. Next, step number 2. Step number 1 you all understood. Step number 2, e-commerce operator will get an order from the buyer, so for the mobile, and e-commerce operator will inform the supplier. Supplier will pack the mobile, will make the bill and will deliver it to Amazon. Mobile with an invoice for 10,000 plus 28% GST. So 12,800. They raise the invoice to Amazon. Now what Amazon is doing, they will deliver the mobile to the buyer and the buyer will pay 12,800. Up to this you understood? Now, whether TCS is applicable. Point number 1, supplier is registered. Point number 2, payment is collected by e-commerce operator and it is not notified under 9 subsection 5 and it is not exempted or non-taxable, it is taxable. So TCS will definitely be applicable. What is the rate of TCS? 0.5%. 0.5% of what? 10,000 or 12,800? 10,000 excluding GST. So e-commerce operator will pay TCS 10,000 into 0.5% 50 plus GST on commission. What is the commission that they get? 1,000. On the 1,000, 18% will be 180. 180 rupees they will pay GST on the commission. Understood up to this? Point number 7, clear? Now you are the e-commerce operator. You are remitting the money to the supplier. How much money you will remit? First, how much you got from the customer? You are Amazon here. How much you got from the customer? 12,800. From the 12,800, what you will deduct first? Commission. What is your commission? So minus 1,000. Got it? And on that 1,000, you have to pay GST also na. So that also you will deduct minus 180. Correct? So take your calculator. 12,800 minus commission. How much is a commission? 1,000. So minus 1,000 minus GST on commission, that is 180, and minus TCS. How much is the TCS? 50 rupees. What is left with you? 11,570 you will remit to the supplier. Is it clear here? Now what supplier will do? He need to pay GST on this mobile. On this mobile, GST is payable by supplier only. E-commerce operator will pay GST only on commission, but on mobile, supplier should pay GST. How much is the GST on mobile? 2,800. So 2,800 is the supplier gross liability and supplier will get 2 credits. 2 credits. Credit number 1. So Amazon has paid GST on commission na. Carefully listen. Amazon paid GST on commission, means Amazon will raise invoice to supplier for this commission. Correct or not? Amazon get 1,000 rupees pa. On that 1,000 rupees they pay GST. So they raise invoice to supplier, which means for supplier it is a invert supply. Amazon providing the services is a invert supply to Xiaomi and they can take ITC of this 180 rupees plus whatever TCS deducted by Amazon also can be taken as credit by the supplier, which means 2 credit supplier will get. This GST 180 as input tax credit and this TCS credit of 50. So you can see here ITC on commission 180 and TCS credit 50. So this amount they will reduce from the gross liability. So 2,570 is the net liability. Is it clear? So that is with respect to this working. Now any question can be asked in exam. Sometimes they may ask how much is the TCS. Sometimes they ask how much is the total liability of e-commerce operator, means GST on commission and TCS. Sometimes they will ask how much is the liability of supplier. You be careful, any segment can be asked in exam in this, okay. So you be careful with respect to how the entire system works. Accordingly read the question and you need to arrive at the answer. Got it? Now look into the next page. What if there are multiple e-commerce operator? Which e-commerce operator will deduct the TCS? If there are multiple e-commerce operators in a transaction, which e-commerce operator will deduct the TCS? Why will there be multiple e-commerce operators? Have a look into that example. There are 4 sellers, A, B, C and D. These sellers are small sellers. They wanted to sell through Amazon, but the problem is that not able to sell due to the reason that Amazon puts a number of conditions. You should be in this business for at least 5 years and you should have made this much of turnover and you should have met the quality standards, like that a number of conditions they will put. And I am starting my business now, how can I list it through Amazon? so not possible. So I will list it in Meesho. Meesho is a newly entered e-commerce operator, so no problem, they will allow. They don't have that much of conditions, so they will allow. I listed through Meesho. A, B, C, D listed their products through Meesho. But the problem is that Meesho is not something which is so popular and very less number of people are only using Meesho. So in this classroom, how many of you have Meesho app? See, this is the percentage, you understood. But Amazon, Flipkart is something which is so popular, hardly 10% of the population to 15% of the population is only using Meesho. Then how they will be able to cater? They will list it in Amazon. You understood? Meesho will list the products in Amazon. Amazon will agree Meesho. Why? Because Meesho is a company and they have into business for many years and they have comply with all the conditions, whatever Amazon asked. So Amazon will in turn list these products, like Meesho will list these products in turn with Amazon and will tell, okay, I am collecting 25% commission. In that 25% commission, I will give you 15% commission. Then Meesho gets how much? 10%, and Amazon gets how much? 15%. Is it clear? Now, a buyer XYZ will buy from Amazon, but actually the product will be delivered from Meesho. Many times it happened to me that I place order in Amazon, but the product will be delivered by Meesho, or the product will be delivered by Snapdeal, like that, and all some e-commerce operators are there. Many times from Nykaa also I got product delivered to my home. I did not understand from where I ordered all these things, but it was delivered by Amazon, but the product was supplied by some other e-commerce operator. Is it clear? So usually this happens like this. Now, coming back to this discussion, what happens here is that the buyer will make payment to e-commerce operator 2, that is Amazon. Amazon will cut 15% their commission and they will remit the remaining amount to e-commerce operator 1, Meesho. Will they deduct any TCS? No, no, no. Only seller side e-commerce operator will deduct the TCS. Who is the seller side e-commerce operator? Meesho. So they will cut their commission of 25%, not that 15 plus 25. 25 in total means extra how much they will cut? 10%, okay, and they will remit the payment minus TCS minus commission and GST on commission. Is it clear? Now one point you need to remember from this discussion, which e-commerce operator will deduct TCS? Which e-commerce operator? When there are multiple e-commerce operator, seller side e-commerce operator will deduct TCS. You can see here. Such e-commerce operator who finally releases the payment to supplier is liable to deduct TCS. That is which side e-commerce operator? Supplier side e-commerce operator. What if supplier and supplier side e-commerce operator is same person? For example, Reliance Trends, Ajio, and Ajio is listing with Myntra. You got it? Reliance Trends pa, Ajio pa. Ajio is one app of Reliance and they are listing through Myntra and they are selling it to the buyers. Now seller and seller side e-commerce operator is same, correct? Then literally only one e-commerce operator is there. Who is that e-commerce operator? That is buyer side e-commerce operator Myntra, correct? So they will only deduct TCS, see there. However, if the supplier and supplier side e-commerce operator is same person, then the recipient side e-commerce operator will deduct the TCS. And each e-commerce operator involved is required to pay GST on the commission, whatever commission that they are earning. Understood? Mark this as very important. Definitely they can ask this question. Then see the next one. Whether filing of nil GSTR rate is mandatory. What is GSTR rate? TCS return. So even if there is no transaction, should we file nil return? No, not required. If there is no transaction in a particular month, no need to file GSTR 8. Now listen, one more important point. Supply is made in October month. I am a supplier, you are e-commerce operator. I make supply through your platform. In October month. Means I will raise the invoice in October month. But you collected the payment in November month. Means you deliver the product in November. For example, I gave you the product on October 30th. You delivered the product to the customer on November 2nd. Possible na? Now, you collected money on November 2nd, but you should not remit it as TCS for November month. You should remit it as TCS for October month. Why like that? If you remit it for TCS as November month, carefully listen, yeah, please listen. If you remit it as TCS for November month, there will be a mismatch. How there will be a mismatch? I reported it as turnover of October, but you will deduct it as TCS of November, and they will say, in November you have not reported turnover, like that I will get a notice. Why I will get a notice? Yeah, I reported it for October. You deducted the TCS for November. Now, whenever you deduct the TCS, they will do recalculation. Whatever TCS you deducted divided by 0.5%. They will see the turnover. But supplier has not reported the turnover in November, so they will send a notice to me. Now, I have to reply the notice that already I paid it for October. To avoid this kind of dispute, what they are telling is that let e-commerce operator file this as TCS for October itself, so that it will match with the returns of the supplier. Is it clear or not? Read it again. Supply made in October month, invoice is raised, but the payment collected by e-commerce operator in November month, TCS to be remitted for which month? October month. Net value of taxable supplies made during a tax period. That is the wording used. Net value of taxable supplies made during a period, not payment received during the period, made during the period. And balance in credit ledger cannot be used for payment of TCS. Of course, because TCS, whatever deducted by e-commerce operator should always be paid in cash. Credit ledger cannot be used. Then, which means TCS deductor will have two GSTINs. Means in this example, Amazon will have two GST registrations. One as a normal GST registration for payment of this GST. Another is GST registration as a TCS deductor for deducting this TCS, which means every e-commerce operator will have two registrations. Okay, one for what? One for payment of regular GST liability, another for payment of TCS. So that's why when they log in into that registration for payment of TCS, electronic credit ledger and all will not be there. When they log in into their normal registration, electronic credit ledger will be there for payment of liability through input tax credit. Is it clear? What is electronic credit ledger? What is electronic credit ledger? ITC. Your input tax credit will be available in that electronic credit ledger. Now look into e-commerce. What is the meaning of e-commerce? E-commerce means supply of goods or services or goods and services, including digital products, over digital network or electronic network is known as e-commerce. Maybe for definition they can ask, what is e-commerce? Goods, services, both goods and services, including digital products. Digital products means what? Video lectures. Video lecture is a digital product. Video lectures or movies, etc. through digital network or e-commerce electronic network. Who is a e-commerce operator? Any person who owns, operates or manages digital or electronic facility or platform for e-commerce is known as e-commerce operator. Is it clear? Means the one who owns or one who manages this particular digital network or electronic facility is known as e-commerce operator. Then look into the next page, tax implications on ECO. Yes sir. For example, it is, this is not October, November only. For example, you replace it with January, February also. You replace it with December and January also. Okay. What I mean to say is that supplies are made in this month, means invoice is this month, but e-commerce operator collected the payment in the next month. Then in that case, e-commerce operator should not deduct TCS in the month in which he collected money, but e-commerce operator should deduct the TCS based on the invoice month, Then see the next page. What are the tax implications on e-commerce operator? We have three popular e-commerce models: online marketplace model, direct sales model, inventory led model. Maybe they can ask a theory question. What are the various e-commerce models like that? You need to write this. What is online marketplace model means? Product will be listed, inventory not maintained, product will be listed, inventory not maintained. Whenever they get an order, they will inform the supplier and the supplier has to deliver the product to e-commerce operator. This is online marketplace model, and it is a very simple model for the e-commerce operator because they don't have to maintain any warehouse, inventory, etc. and all. Okay, that is this. Amazon, Flipkart will do this. And inventory led model, opposite of this. Inventory led model, quick commerce companies, Zepto and Blinkit, what they do is that they will not inform the supplier, they will only maintain the inventory. As soon as the order is received, immediately they need to deliver the product. So due to that reason, they will only maintain the inventory. That is inventory led model. Direct sales model. Direct sales model means there is no third party e-commerce operator. I will sell my products through my own app or own website. That is called as direct sales model. Is it clear? Next, supply of goods or services through e-commerce operator is divided into three. Supply of goods through e-commerce operator. Supply of goods through e-commerce operator. Example, Amazon. Second, supply of notified services through e-commerce operator. What are those notified services? Housekeeping, accommodation, transportation and eating food in restaurant. Example, Swiggy. Then supply of other services through e-commerce operator. Example, Book My Show. What it's? Other services not covered in HATE. Now, in the first case, who will pay GST on the transaction? In the first case, who will pay GST on the transaction? Supplier. In the second case, who will pay GST on the transaction? E-commerce operator. Very good. In the third case, who will pay GST on the transaction? Supplier. Understood? So, first case GST on supplier, second case e-commerce operator, third case supplier. Now concentrate. In the first case GST payable by supplier, then what e-commerce operator will do? Pay GST on plus TCS. Very good. Then second case e-commerce operator will pay GST on transaction. So whether any GST payable on commission and TCS? No. Third case, GST payable by supplier. So e-commerce operator will pay GST on commission and other charges, and TCS also will be applicable. Is it clear? Next, when a person is supplying their goods or services through their own platform, that is direct sales model, it is not called as supplies through e-commerce operator, it is normal supplies. Also agents like Paytm, PhonePe, OLX, etc. are not called as e-commerce operators, for your information. Now look into the next page. Registration requirement in case of e-commerce transaction. These are all extra points which can definitely be tested in the exams, okay, because every attempt, if you see, they are asking one 4 marks question on TDS TCS, okay. So that's why I gave you all the information, whatever is there. Registration requirement in case of e-commerce transaction. Remember, every e-commerce operator is compulsorily required to get registered irrespective of threshold limit. And which e-commerce operator? Two e-commerce operators we discussed. One e-commerce operator who is liable to pay GST under 9(5), that HATE. Another e-commerce operator who is required to deduct TCS. These two e-commerce operators compulsorily required to get registered. Then I am selling goods through e-commerce operator. Please concentrate. I am selling goods through e-commerce operator. Compulsorily I need to register. Okay. However, for example, if I want to sell through Amazon, Flipkart, etc., compulsorily I need to register. However, if I am making only intra-state supplies within the state, then I don't have to register. Without registration also I can supply goods through e-commerce operator. So if I am making supply of goods through e-commerce operator, I am making only intra-state supplies, not through e-commerce operator in more than one state, means directly also I am not making interstate supplies, and through e-commerce operator also I am not making interstate supplies, and I obtain a UEN. What is UEN? What is UEN? UEN refers to unique enrollment number, right there, unique enrollment number. UEN is unique enrollment number. Suppose when you are reading, if you don't know the full form of these terms and all, in the first page itself I have given the abbreviations. In that abbreviations itself I have included all these things, but I am just writing it for you for convenience sake. So in this case, whether the supplier is required to get registered or not required to get registered, not required to get registered. That's the reason why whenever in Flipkart or in case of this Meesho, etc., when you give your PIN code, they will tell this product cannot be shipped to your location. Like that it will say. Why? Because that supplier is unregistered. He is making only intrastate supplies. Due to that reason, you cannot buy it from them in the other state. You got it? So this following conditions should be satisfied. If you are making only intrastate, not through e-commerce operator in more than one state, and you obtain unique enrollment number, even without registration you can supply goods through e-commerce operator, but when you need to register, as and when aggregate turnover exceeds threshold limit. In other cases, suppose if you make interstate supplies and all, compulsory registration for supplier of goods. What about supplier of services through e-commerce operator? No compulsory registration. They need to register as and when aggregate turnover exceeds threshold limit. Then, what is the compliance to be followed by e-commerce operator in that case? If there is a supplier who is unregistered, and whose turnover does not exceed threshold limit, but obtain a unique enrollment number, is supplying goods through e-commerce operator. E-commerce operator should ensure that this supplier has obtained UEN, only then he is supplying through their platform. See, this is the compliance to be done by the first case. What we discussed is the compliance to be followed by supplier. This case what we are discussing is compliance to be followed by e-commerce operator. So e-commerce operator should ensure that he is, e-commerce operator should ensure that that unregistered person has obtained the UEN, then only they are making supply through their platform. Number two, should not permit the supplier to make interstate supplies. Is it clear? Means this supplier should not make interstate supplies. Why? If he makes interstate supply, he need to compulsorily register na. So that's why e-commerce operator should ensure that this supplier is not making interstate supplies, and e-commerce operator required to deduct TCS or not required to deduct TCS? Not required to deduct TCS. Why? Because we studied that if the supplier is unregistered, TCS is not applicable. And should the e-commerce operator declare these details in GSTR 8 or not required to declare? Declare. Definitely declare. Then only government will know that this supplier has crossed the threshold limit and he need to register. For that reason, should declare the details in GSTR 8. Whenever you get a question, so this is important for theory. When you get a question on what are the compliances to be followed by e-commerce operator with respect to unregistered supplier, 4 points you need to write. Number 1, e-commerce operator should not allow the supplier to make supplies without obtaining unique enrollment number. E-commerce operator should not allow supplier to make interstate supplies. E-commerce operator should not deduct TCS. However, these details should be reported in GSTR 8. Then look into the next one. What are the compliances to be followed by a supplier if the to be followed by e-commerce operator if the supplier is opting for composition scheme? If the supplier is opting for composition scheme, then what are the compliances to be followed by e-commerce operator? Like that, another theory question they will ask. Be careful for this question, don't write this answer. Is it clear? So be careful. If they are asking what is the compliance to be followed by e-commerce operator if the supplier is unregistered, this answer you need to write. What is the compliance to be followed by e-commerce operator if the supplier is opting for composition scheme? Just 3 points. Point number 1, should not permit this supplier to make interstate supplies. Why? If the person is opting for composition scheme, makes interstate supplies, he is disqualified from the composition scheme for that reason, and should deduct the TCS and should declare these details in GSTR 8. Why TCS is applicable? Because the supplier, even though under composition scheme, but they are registered na. Definitely a registered person only can go for composition scheme. That's why. So supplier is registered, so deduct TCS and declare the details in GSTR 8. These 3 points. Okay. Next, You may get an illustration like this on TCS, combining everything, all the points. So it's a very good question. It's a comprehensive question. You can say this. Don't see the answer, please. We will work out. Sapna Education Private Limited is receiving supplies through e-commerce limited, an e-commerce operator who has provided the following supplies during December 2020 through e-com limited. Number 1, supply of goods taxable at 12% by registered supplier, supply 5 lakhs, returns if any 50,000. Now, I want you to tell me, analyze and tell me who will pay GST on this transaction. Supplier, e-commerce operator. I hate this silence. Anyone answer. In this case, who will pay GST on the transaction? Supplier, e-commerce operator. Supplier. I heard e-commerce operator. Remember, only 4 notified services. 4 notified service only e-commerce operator will pay GST on the transaction. What are those 4 notified services? HATE. This is not services. This is goods. This is goods. So definitely e-commerce operator will not pay GST on the transaction. Who will pay GST on the transaction? Supplier. Then what is the liability on e-commerce operator? Whether they need to deduct TCS or not required to deduct TCS in this case. First, whether the supplier is registered? Yes. Whether the supplies are taxable? Yes. And payment is collected by e-commerce operator? Yes. Is it covered under 9(5)? No. So therefore TCS will be applicable on 5 lakhs. Got it? But 5 lakhs, 5 lakhs minus 50,000. 5 lakh minus 50,000. Next, second point. Supply of goods taxable at nil rate by registered supplier. Whether TCS is applicable or not applicable in this case. Why not applicable? Because the supplies are exempted or nil rated. So TCS not applicable. Very good. Third point. Supply of housekeeping services by unregistered supplier. TCS is applicable or not applicable? Why not applicable? Because it is covered under 9(5). How you know it is covered under 9(5)? Housekeeping services, if the supplier is unregistered, it's covered under 9(5). So TCS is not applicable. Then supply of other services by registered supplier. Whether TCS is applicable or not applicable? Applicable. Why? Because the supplier is registered and the supplies are taxable, okay, and due to that reason it's not given as exempted. If it's not given as exempted means it will be taxable. Got it? Taxable. So TCS applicable. So TCS is applicable on what? 5 lakh minus 50,000 plus 1 lakh 50,000. How much? 6 lakhs. On 6 lakhs, what is the rate of TCS? 0.5%. That is the first question they have asked. Determine the amount of tax to be collected at source by Ecom Limited, that is 0.5%. 6 lakhs into 0.5%. The amount of TCS is 3,000. And second question. Determine the consequences if the said amount is paid and return is filed on 15/1/2021. This transaction is for which month? December month. What is the due date? 10th of January. But when are they paying? 15th of January. How many days delay? 5 days delay. For that 5 days, first they need to pay late fee. How much is the late fee? 25 rupees per day, 100 rupees per day? 100 rupees, because it is TCS. 100 rupees into 5, that is 500 under CGST and 500 under SGST. What is the maximum late fee? 5,000. So, but they need to pay only 500 and 500. Plus, are they required to pay interest? Yes. What is the TCS? 3,000. 3,000 into, what is the rate of interest under GST? 18% into, what is the number of days? 5 days into 5 by 365. How much? 7 point. So round off to 7. Ignore that fraction. So always tax, interest, etc. to be rounded off to nearest 1 rupee. So 7.3 something. So rounded off to 1 rupee and late fee will be 1,000 rupees. Understood? With this we completed TDS and TCS. Now Come back to that third chapter. One page we have not discussed, which is connected to this discussion. Please see that. Page number 39. Page number 39. Important points. See the first point, page number 39. When e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. I told you. Why? Just now we completed the discussion. Section 95 and section 52 are mutually exclusive. So when 95 is there, 52 will not come. When 52 is there, 95 will not come. Then only in case of notified services, e-commerce operator is liable to pay GST, correct? For notified services. In other cases, who will pay GST? Supplier shall pay GST and e-commerce operator shall pay GST on what? Commission. Next. Every e-commerce operator who is liable to pay GST and who is liable to deduct TCS is compulsorily required to get registered. Just now I told you, 2 e-commerce operators compulsorily required to get registered. Then what about supplier of goods through e-commerce operator? Please respond. Please respond. Supplier of goods through e-commerce operator. If they are not making intrastate supplies but making interstate supplies, compulsorily required to get registered. However, if they are making only intrastate supplies, then they are not required to compulsory register but should obtain a unique enrollment number. Every supplier of goods through ECO is compulsorily required to get registered. However, if they are making only intrastate supplies of goods, then they should register as and when aggregate turnover exceed threshold limit. What about notified services or other than notified service? What about service provider through e-commerce operator? They need to register when? We already discussed that chart. It is just the connecting point. So they need to register only when aggregate turnover exceeds threshold limit. There is no compulsory registration for them. Okay. Then, so whenever e-commerce operator is liable to pay GST, that is HATE, housekeeping service, etc., they need to compulsorily register. Am I right, Pa? Where they will register, sir? If they have a physical place of business in India, they will register. What if they don't have a physical place of business? Check whether they have a representative. Example, Ola is required to pay GST under 95. Agreed. Because they are providing transportation service. Whether Ola is having physical place of business in India? Yes. So they will register. What if it is Uber? Uber is also required to pay GST under 95. Yes. But Uber is not located in India. It is located outside India. Then what we need to see? Check whether they have a representative office in India. Yes, they have a representative office in India. So that representative office will register and will pay GST. Is it clear? What if they neither have physical place nor they have a representative office in India? Then in that case, what they need to do? Read that. Read that and tell me what they should do. What they should do? Shall appoint, underline that, highlight that, shall appoint a representative. When they don't have a physical presence or they don't have a representative, they shall appoint a representative in India and that representative shall register and pay GST. Is that clear? So that is about this. Then look into this circular on restaurant services through e-commerce operator. This is an area which is actually very, very important because they have not asked a question in this and there is a possibility of asking a question because this circular they have given last year, but they have not asked any question on this circular so far. It's an amendment which is not tested in exam yet. So there is a high possibility of asking questions on this. Please listen. First, what is the rate of GST applicable on restaurants? 5% without ITC. Means what? They cannot take ITC on. What is their inward supply? Commodities, ingredients they purchase na, on that they can't take ITC. So lot of ingredients they purchase na, rice, dal, then chili powder, turmeric powder, everything they cannot take ITC. So what is the rate of GST? 5% without ITC. So can they avail ITC on inward supply or they cannot avail ITC on inward supply? cannot avail ITC on inward supply. Understood the second point? Connected to first point because it is without ITC. Third point. Now, in case that restaurant, for example, yesterday our friend showed me one invoice. He purchased something from Kakda, Ramprasad, like that one restaurant. And that restaurant sold food through Swiggy or Zomato. He received one invoice. Now, on that invoice, who will pay GST? That Kakda restaurant will pay or the Zomato will pay? Zomato will pay. How much Zomato will pay? 5%. If Kakda is paying 5%, that restaurant is paying 5%, Zomato also will pay the 5% only. Can Zomato take ITC on their inward supplies? Zomato will have some inward supplies, app services or other services and all they are receiving na. On that can they take ITC? Yes. The restriction is only to the restaurant. Even though e-commerce operator pay 5%, now e-commerce operator will purchase some things na for their business. What services they will receive? Marketing services they will receive, and they will receive advertising services, and they will be receiving technology services for development app. All these things can they take ITC? Yes. See the third point. E-commerce operator can avail ITC on its inward supplies even though they pay GST on restaurant service at 5%. Then GST payable by e-commerce operator at 5% only using electronic cash ledger but not credit ledger. Why like that? Because if restaurant pay GST, can they use credit ledger? Restaurant, if pay 5%, can they use input tax credit? No, because they don't have input tax credit, correct? Then if Zomato pays also, they cannot use ITC, they have to pay by cash. Then what they can do with the ITC? What they can do with the ITC? They will have other transactions. What is that other transactions? If you observe, every e-commerce operator who is supplying food started other business. What is the other business? Swiggy started Instamart. Zomato started Blinkit. You understood? And they are supplying other things also. On that, they have to pay GST na. For that, they can use this ITC. Not for restaurant service ka 5% GST. Got it or not? Read that. GST payable by ECO at 5% only using cash ledger but not credit ledger. E-commerce operator shall also pay GST on delivery charges. They are putting na delivery charges 30 rupees, 40 rupees. Platform fee, correct? 3 rupees, 5 rupees, like that platform fee they are putting. And advertisement charges. Advertisement, the moment you open an app, you will see no sponsored, banner and all. And sometimes they will tempt us. I am yummy, won't you eat me? Like that and all, it will send a message. You understood? I mean, one restaurant, to promote one restaurant, it will send a message like that. All these are advertising services, okay? And that they need to pay 18%. E-commerce operators shall also pay GST on delivery charges, platform fee and advertising charges at 18%. Can they utilize the ITC for payment of this? Yes. Yeah, they can take ITC. 5% they cannot use that ITC, but that 18% they pay na other services. Definitely for that they can use. They can utilize ITC availed for payment of this GST liability. Got it? Then e-commerce operator, if supplies goods along with restaurant service through their platform, they shall issue separate invoices. Supply goods along with restaurant service. That is, when you buy from Swiggy food as well as commodities. Commodities also you can buy using Instamart, but it will never be one bill. So that's why if you open the app itself, there are two tabs. For food, separate tab is there. For Instamart, separate tab is there. If you buy food, separate invoice. If you buy anything through Instamart, separate invoice. Why they maintain separate billing? Because on food, they need to pay GST. But on Instamart, they will not pay GST. Supplier will pay GST. They pay GST only on commission. So they need to distinguish that. That's why Zomato, needless to say, they created a separate app itself. That is Blinkit, like that. Separate thing they have created. But Swiggy is a classic example where they maintain separate billing. Why separate billing? Mainly because their liability will differ. But because of the separate billing, there is a practical challenge also. One restaurant, immediately next to restaurant, one provision store is there. From restaurant also, provision store also you are ordering. Both are in the same location, but two delivery people will come. One for bringing restaurant food, another for bringing that provision store goods. You understood? And because of which 2 times we need to pay delivery charges. Actually, the delivery executive who is buying from restaurant can also take from the provision store. He can deliver, but even then the bill will be separate, because of which 2 times delivery charges we will be paying. Is it clear? That is a practical challenge here. So mainly because liability will differ. E-commerce operator, if supplies goods along with restaurant service through their platform, they shall issue separate invoices. Got it? So quickly read it once for yourself. Just read it once for yourself. நடுவில் போகிறதுக்கு ஏன்டா கிளாஸுக்கு வரீங்க? See, I am doing it for free only, pa. I am not charging anything from you. Even for that booklet also I gave it for free. You know what is required for you? Sit and attend the class. That also if you are not able to attend, then many times I felt like, why will students fail? Many times I got this doubt. Why will students fail in exam? Everyone is putting hard work. Everyone is studying. Why will they fail? Then many times I got the answers when I am taking class itself. Because see, when you don't have the interest, when you are leaving in the middle itself, which means what? You are not able to sit in a class where you are not spending money also, then that shows your dedication. Only the dedicated person will fall till the end and they will travel till the success. Remaining people and all in the midway itself they will go. You understood? It's CA exam, pass percentage and all don't see. There are non-serious idiots. These non-serious idiots, what they do, just like that they will come into the course and they are writing. Otherwise, seeing them, you don't get disappointed. Really a hard-working person, if a dedicated person is there, if not in one attempt, another attempt they will clear. Another attempt they will clear. I have observed them. Your background is of no use. Whether you are from big school, small school, CBSE, state board, school toppers also failed in CA exam. And those who failed in school also have completed CA exam in first attempt. You understood? So to complete CA exams, you need a kind of dedication. That dedication and perseverance, purmai. So you need that. Only when you have that perseverance and the dedication, definitely success is possible. Definitely it is possible. Because, I have seen that success in my life, and so I can say, because I am from an orphanage and I don't have any good background in my education. I am from an orphanage, and thereafter I did not have the command over English also. I don't know how to speak English also. Today I am taking entire class in English, and so today I have everything. I did not have anything to everything only because of my dedication and perseverance. Possible. Why it is not possible? So everyone can be successful, but how much dedication you have and what is the priority that you are giving? Your priorities will change your life. To what priority I am giving? Am I giving priority to my subject? Yes, definitely it is possible to achieve. Why can't? But my priority is something else. When my priority is something else, you will achieve in that, but you will not achieve in this. Are you getting this? Change your priorities. What is important in your life, you decide. Definitely success will come. Every person on this earth, I believe that they will get a success. But to what extent they put the hard work and they are determined, they will get. So my advice to you is that daily morning when you get up with a positive thought. Today, I should definitely read something, and that should be towards achieving the success in my exam. Only when you have that kind of attitude, you will become successful. If you feel like, okay, we will see later, procrastination, I am not able to sit for longer time, and what about personal life, education life? What is personal life for you, yaar? Till you complete CA, there is no personal life. Only education is required. Why personal life? Personal life, you know, when you need to talk. After completing CA, when you go for job, there you need to talk about work-life balance, etc. and all. Not during the time when you study. So, till the time when you studied 12th standard, you were perfect. Because someone was there above you to tell you what you should do, what you should not do, etc. The moment after 12, completely you lost. Why you lost? Because no one is there to tell you what to do, what not to do. Your parents also thought, okay, fine, you joined for CA course, you know what it is. Beyond a point of time, no one will be there to take your hand and walk along with you. That is something which is missing. That's the reason why there are a lot of failures. If someone slaps on your face and make you sit idiot, sit and attend the classes, you will attend. Thereafter, because of that reason, you will definitely become successful. You understood or not? That part is missing here. If that part is there, everyone will be successful. You take that role. You take that role and you tell to your friends, when they are crossing that line, when they are enjoying their life, tell them that you should not do this. And because of your advice, if he becomes successful tomorrow, he will never forget you here. Are you understanding this? Fine. So I gave you this lecture for one reason. What is that? I requested 4 days for you to sit. That 4 days also you are unable to sit. Then you think about how much serious you are. Okay. Next. I told you in the first class, yes, it is difficult only, not possible. Everything will not be going in our mind. Beyond that, you are sitting, beyond that you are listening. That's where it shows your dedication, and it will come here. Success will come here. Why it will not come? Let's see. Fine. So you read that circular once. You understood now all the points related to this. Now we will see one small easy going topic which is possible for exam. See the accounts and records. So don't laugh, really it is easy only, trust me. Page number 174, accounts and records and e-waybill. Accounts and records and e-waybill. In this page 174, accounts and records. What are the records to be maintained under section 35? So there are two sections. This accounts and records is a new chapter that they have added. So if you see now, in 2 pages, accounts and records is over. Section 35, 36 and other points over. Then e-waybill only. Got it? So it's a small topic. Usually we skip and go. And what they do is that in one question they will add this for 2 marks or 3 marks, because of which we cannot attempt for full marks. One more point which I advise to you all is that please try to attempt for 100 marks. If you are able to attempt for 100 marks, definitely the possibility of success is more high and aggregate problem will not be there. When you attempt itself for 70 marks, don't expect 50 and all. You attempt for 70, you get 40s only. You attempt for 90s, you are in 50s. You attempt for 100 marks, definitely your score will be somewhere in 60s easily. Attempt does not mean writing the question number and coming, okay. So I mean you need to write the answer for that, okay. So see this section 35, what are the accounts and records to be maintained by every registered person? There are some accounts and records like I formats. These are the accounts and records. Again, don't write the mnemonic in exam, you write like pointers. Every registered person as per section 35 is required to maintain the following accounts and records. Point number 1, I formats. What is I? Inward supply. Accounts related to inward supply. F, foreign trade. Foreign trade means what? import and export. O, outward supplies. Outward supplies means sales, etc. Okay. Then I, F, O, R, RCM. Out of those inward supplies, on what and all inward supplies you need to pay GST under RCM, that records also you need to maintain. Then M, manufacture related. So manufacture related means what goods you are manufacturing, etc. and all that production related records. A, advances received, paid or adjusted. Then T, tax details. Tax details means input tax and output tax. Then yes, stock details means closing stock, which place you have maintained, how much stock is there, etc. All these records to be maintained. So tell once again, I, inward supplies. F, foreign trade means import or export. Then O, outward supplies. Then R, RCM. M, manufacturer production. A, advances received, paid, adjusted. T, tax details. What tax? Input tax, output tax. Yes, stock details. Now, how you need to write, I will teach you written. Whenever you get a question, what are the accounts and records to be maintained? As per section 35 of CGST Act, a registered person is required to maintain the following accounts and records. A, all accounts and records pertaining to, see directly don't write inward supplies. All accounts and records pertaining to inward supplies along with inward supplies you are purchasing from whom? From whom? Suppliers. Along with details of the suppliers, with what documents you will have on purchase? Invoice, debit note. Invoice, debit note, credit note, then delivery challan. Okay, then e-way bill. Along with the details of invoices, debit notes, credit notes, delivery challans and e-way bill. You understood? You have to remember this. But you need to add masala, tinkering work, before, after, etc. and all, and you need to write like that. So then definitely you will get full marks. If you write only this, if it is a 4 marks question, you will get only 2 marks. Write these extra points. So therefore all these extra are general things. So if you write that, definitely 4 out of 4. Little bit effort if you are putting, you will get extra 2 marks. It's good only, why should we waste that? Next, second point what you write, that is A. B, what you will write? All records pertaining to, don't write foreign trade, pertaining to import of goods or services and export of goods or services along with supporting documents. Okay, then C, all accounts and records pertaining to outward supplies along with, outward supplies to whom? Recipients, along with details of recipients, with tax invoices, debit notes, credit notes, delivery challans and e-way bill. Got it? Then next point, out of the inward supplies, those inward supplies on which the person is required to pay GST under reverse charge mechanism. One more thing, avoid short forms. To the extent possible, write full. Avoid short forms. RCM means in that answer, in the first place where you are writing, write reverse charge mechanism in brackets RCM, and thereafter next you use RCM. At least one time in that answer, if there is any abbreviation, write full. Thereafter you write the abbreviation. Is it clear or not? Next. Thereafter, next. M, all accounts and records pertaining to the goods manufactured by such registered person, along with details of goods produced, goods lost, goods destroyed during the production, like the general thing you write. Next, all accounts and records pertaining to advances received from whom? Customers, and advances paid to suppliers and adjusted against what? Final payment to be made. You got it? Then tax details, all accounts and records pertaining to input tax, that is tax paid on inward supplies and tax payable on outward supplies. Then all accounts and records pertaining to the stock of goods manufactured or procured. You got it? So like that, don't write just one point, write little bit, at least two lines like that you write, so that the answer will be pakka. Next, in this, two accounts and records are not required to be maintained by a person opting for composition scheme, that is T and S. So for them what it is? I pharma, TS is not there, I pharma. Same answer for every question, you understood? I pharma, the T and S not required for a person opting for composition scheme. Now see below, as per section 35, where these accounts and records to be maintained? The above accounts and records to be maintained by every registered person in principal place of business and records pertaining to additional place of business in each additional place of business. Focus. I have registration in Tamil Nadu. In Tamil Nadu, I have 4 places of business. Chennai is my principal place of business. Coimbatore, Madurai and Salem is my additional place of business. Now, in Chennai, my principal place of business, I need to maintain the accounts and records related to Chennai, Coimbatore, Madurai and Salem. But in Coimbatore, I have to maintain the accounts and records relating to only Coimbatore. In Madurai, only Madurai. In Salem, only Salem. Only in principal place, all records to be maintained. But in additional place, only records pertaining to that additional place. Got it? Next. What is the period for which these accounts and records should be maintained? Normally, it is 6 years from the due date of filing annual return. What is the due date of filing annual return? 31st December of succeeding financial year. Example, for financial year 2024-25, what is the due date of filing annual return? GSTR 9. GSTR 9 is the annual return. What is the GSTR 9 due date? 31st December 2025. Okay, 31st December 2025 plus 6 years. What is plus 6 years means? That is 31st December 2031. Till that time, we need to maintain the accounts and records pertaining to financial year 2024-25. Is it clear or not? Next. This is when normally it is like this. Financial year, due date of GSTR 9, that is annual return, from there plus 6 years. And this 6 years, you write it as months also, because in some places it is used as 6 years, some places they have used as 72 months. So better you write as both 66 years or 72 months. Both are same only, 6 years. 1 year is 12 months. So 6 into 12, 72 months. You got it? Next, suppose for this financial year, we went for an appeal. So in this financial year, there is a tax dispute. And on that tax dispute, we went to an appeal. And appellate authority gave the decision. Appellate authority gave the decision. On which date they gave the decision? Say they gave the decision on 25th September 2031. So for this financial year, we went for an appeal. And when we went for an appeal, they gave the decision on 25/9/2031. Now, what is the period for which we need to maintain the accounts and records? A, normal time limit. What is that normal time limit? 31st December 2031. B, 1 year from the outcome of this decision. This decision they gave na appeal authority. After this decision also you need to maintain accounts and records for 1 year. Because in this 1 year, department may go for appeal. See, the decision is in your favor. Department may go for appeal. At that time, court will ask to bring the records. I will say, no sir, 6 years over, records are gone, like that you cannot say. So 1 year from the appeal date, that is appeal outcome date. What is the appeal outcome date? 25/9/31 plus 1 year. What is that? 25/9/32. So 31st December 2031 or 25/9/2032, whichever is Earlier or later? Later, whichever is later, that is 25/9/2032. Till that time, we need to maintain the accounts and records. That is this. You can see here, 1 year from the disposal of appeal proceedings or 72 months, that is 6 years from the due date of filing annual return, whichever is later. Till that time, we need to maintain accounts and records. Okay. Then, every transporter or warehouse keeper, even though unregistered, there is a special provision for transporter and warehouse keeper. Even though they are unregistered, they should obtain unique enrollment number and maintain necessary records. Generally, these I formats is applicable only to a registered person. See there, the above records to be maintained by every registered person, correct or not? But even though there is a warehouse keeper or a transporter, even though not registered, but they should maintain some records and should obtain a unique enrollment number. So far we have seen 3 people to obtain unique enrollment number. Who are they? Number 1, supplier of goods through e-commerce operator who is making intrastate supplies. Number 2, transporter. Number 3, e-commerce operator. This also can be asked as a theory question. Who are required to obtain unique enrollment number? Only 3 people are required to obtain unique enrollment number. Number 1, every supplier of goods through e-commerce operator if they are not making interstate supplies. Number 2, transporter. Number 3, e-commerce, that is warehouse keeper. Okay. And sir, whenever their aggregate turnover exceed threshold limit, then they will register. Okay. So warehouse keeper, transporter. Then next, see this. What are the accounts and records to be maintained? Additional records. That is given in Rule 56. Section 35 read with Rule 36. Rule 56. See the first one. Everyone is required to maintain I formats. That is general. What we are learning is other records or elimination from these I formats. First, being a manufacturer, I formats they need to maintain. Plus extra what they need to maintain if they are a manufacturer? Process accounts. Process accounts means you prepare in costing. Process accounts, that, and details of waste and byproducts. In that itself, we get the waste and byproduct details, that also. So literally, your process costing you need to follow. Got it? And you need to maintain for a manufacturer. Got it? Next, trader. See, because we don't know, in exam they can ask any question. They can ask what are the records to be maintained by manufacturer, what are the records to be maintained by agent, what are the records to be maintained by a person opting for composition scheme. So this variation you need to remember. Okay. Manufacturer what? Come on. All accounts and records, extra process accounts and details of waste and byproducts. Then trader, everything except manufacture. They are not doing manufacture, na? So that's why everything except manufacture, but other records not required. Service provider, everything other than manufacture, correct? Because service provider will not do manufacture, but extra what they need to maintain is details related to goods or services utilized in outward supply. Listen, I'll give you my example. I am engaged in sale of books plus also providing sale of lectures. For sale of lectures also I will be giving book free. You understood? Sale of lectures, sale of books. For sale of lectures also I will be giving books for free. Now sale of books alone is exempted. Sale of lectures is taxable. But I procure the paper. How much of the paper is used in books for sale of books? How much of the paper procured is used in books for sale of video lectures? Is it clear? This utilization should also be maintained. Records related to purchase I will maintain, records related to sales I will maintain, but how much of the purchase is used in what sales, that utilization table also I should maintain. Is it clear or not? That is this. Details related to goods or services utilized in outward supply. Then composition scheme, what accounts and records they need to maintain? I pharma, TS not required. Then agent, what are the accounts and records to be maintained by agent? Everything, everything. I formats, plus extra, they enter into contract with every principal na. So principal will authorize them to act as a agent. That copy of authorization, copy of contract, details of authorization from each principal. Then in consignment chapter you would have studied, every consignment agent will send the account statement to the consignor. In that account statement they will mention how much sales is made, how much commission they deducted, etc. That account statement also should be maintained. Account statement, statement of accounts with respect to each principal. Got it? So tell me, as an agent, what are the extra records? Come on. Authorization from each principal and statement of accounts with respect to each principal. Then works contractor. Works contractor is required to maintain what are the accounts and records, everything other than manufacture, because works contract is a service. So manufacturer not required. In addition to that, records separately with respect to each contract, means contract wise they need to maintain records, and payment received with respect to each contract. For every contract, how much is the payment received? Why? Because in construction contracts, AS7, when you recognize the income, what you will do? So total contract price, that is like into payment received till date divided by total payments. That is one of the method for determining percentage completion. For that reason, they are telling every contract you maintain how much payment received, so that it will be easy to determine the percentage completion, and based on that you can recognize your profit on contract. Got it? That is why payment received with respect to each contract we need to maintain separately. Then registered transporter. Registered transporter will maintain what accounts and records? Everything, but he is a service provider, so except manufacturer, and in addition to the details of goods transported. Next, unregistered transporter. Unregistered transporter not required to maintain I formats. Why? This I formats is required to maintain only by a registered person. Unregistered person not required. However, unregistered transporter is required to obtain unique enrollment number and maintain necessary records. What are those necessary records? Now wait, don't see. You tell me. You are a tax officer, pa. You are a tax officer, and I am an unregistered transporter. You tell me what records you expect from me. What records you need, so that I need to maintain that. You tell me. Use your brain as a tax officer. Goods transported, awesome. Whatever is the goods that I am transporting, I need to maintain that. Next, person, consignor details, consignee details. Which person, goods, from where I transported to. So starting point, ending point, super. Next, first you said description, consignor details, consignee details, then starting point, ending point, etc. What else you need? Value of those goods, very good. Value of those goods. Invoice means value of those goods, etc. Next, vehicle. Which vehicle I am transporting. During this transportation, whether I kept the goods anywhere. So all these details you need, correct? Now you read. Description of goods, consignor details, consignee details, vehicle details, delivery address. Done? You understood? So next, being a warehouse keeper, registered warehouse keeper, what records I need to maintain? I formats. As I am a service provider, manufacturer records not required. And being a unregistered warehouse keeper, what records? I formats not applicable, because I formats is only for a registered person. Being an unregistered person, should I obtain unique enrollment number? Yes. And I need to maintain necessary records. Come on, activate your brain and tell me. I am a warehouse keeper, unregistered warehouse keeper. You are a tax officer. What you expect from me? Details of goods stored. Next. Value. Next. Whose goods I am storing? Next. Period. Very good. What is the date on which I deposited? What is the date on which I cleared? Next. Suppose in this, if there is any loss, possible na? So these details are required. See there, description of goods, value of goods, details of depositor, date of deposit, date of disposal, in this any goods lost or destroyed. Easy pa. So these are the records to be maintained by every registered and unregistered person, being a warehouse operator or a transporter. Got it? Then we'll take a break and we'll meet at 2, just 5 minutes early, please. And we'll meet at 2 o'clock and we will discuss today afternoon the concept drill questions on exemptions, on charge under GST and on TDS and TCS. Okay. After that, I'll be starting a very important chapter after completing that, input tax credit. That is the agenda. Okay. Thank you. Okay, we'll start. Firstly, let's complete the discussion of exemptions. I already gave you homework. I asked you to try that once. So please look into that questions. Take page number 18. You tried, right? Okay, presuming that you have tried. Question number 1. The Karnataka Cricket Association, Bengaluru, requests the Commissioner of Police, Bengaluru, to provide the security in and around the cricket stadium for the purpose of conducting the cricket match. The Commissioner of Police arranges required security for a consideration of 6,000 per day. Turnover of Cricket Association during the previous year exceeds threshold limit. These actually services provided by government to business entity, because services provided by government, this is not Department of Post, this is not airport or port, this is not transportation of goods or passengers, and this is not railways, this is others. Other services provided to business entities. Anywhere we have in the 14 exemptions this point? No. In the list of 14 exemptions we don't have this. And whether the first general exemption is applicable in this case? No, because the turnover during the previous year exceed threshold limit. And second general exemption also not applicable. Why? Because the value exceeds 5,000. So due to that reason, the said activity will be taxable. The said activity is taxable. Justification: not covered under specific exemptions. Write down: not covered under specific exemptions, not covered under specific exemptions and general exemptions, not covered under specific exemptions and general exemptions with respect to services provided by, government to business entity. With respect to services provided by government to business entity. Next, not covered under specific exemptions and general exemptions with respect to services provided by government to business entity. Number 2, services provided by senior advocate to firm of advocate who in turn provided services to XYZ Limited. Aggregate turnover during the previous year exceeds threshold limit. What is your answer? Taxable. Why? Because senior advocate providing service to firm of advocate, you should not take firm of advocate as a recipient, you should take XYZ Limited as a recipient, and we need to see their turnover. If their turnover during the previous year exceeds threshold limit, then it will be taxable. So XYZ Limited is, write down, XYZ Limited is deemed to be recipient. XYZ Limited is deemed to be recipient and their aggregate turnover during previous year exceed threshold limit. Their aggregate turnover during previous year exceed threshold limit. XYZ Limited is deemed to be recipient and their aggregate turnover during previous year exceed threshold limit. Then third one, Z Limited, a tour operator, provides tour operator service to a foreign tourist 5 days and 10 hours in Goa, 4 days and 13 hours in Maldives, where the total consideration for the tour is rupees 10 lakhs. We have an exemption. What is the exemption that we have? A, that is total consideration. How much is the total consideration? 10 lakhs into number of days the tour is conducted outside India, 4 days 13 hours. I told you greater than or equals to 12 hours means you need to count it as full day, that is 5 days divided by, so 5 days and 10 hours in Goa, that you count as half day. So 5.5 plus 5, that is 10.5. 10 lakhs into 5 by 10.5. How much? 10 lakhs into 5 by 10.5. 4 lakh something. Oh, you want me only to do calculator? Fine. Okay, I'll do. So 10 lakh, wait here, no issue here. 10 lakh into 5 divided by 10.5. So 4,76,190.76, so 191, or B 10 lakhs into 50%, that equals to 5 lakhs, whichever is lower is exempted. So then what will be the taxable value? The taxable value will be the balance. So if 5 lakhs, whichever is lower is 4 lakh 76,191 is lower, then what is the remaining amount? 10 lakhs minus this. So 10 lakhs minus this is 5 lakh 23,809 will be taken as the taxable value. So whichever is lower is exempted. Whichever is lower is exempted. So the remainder is taxable. Whichever is lower is exempted. So the remainder, the balance will be taxable. Okay. Next. The next one, fourth one, a consulting firm in India provides services worth 25 lakhs to RBI related to foreign exchange reserves management. What will be your answer if the consulting firm is located outside India? Related to this foreign exchange management and all, we don't have any exemption. And what will be your answer if the consulting firm is outside India? Then also it will be taxable because it will come under import of services. So let it be in India or under import of services, both places we don't have any exemption. So for services related to foreign exchange reserves management, got it? And if supplier in India or outside India, if supplier in India or outside India, the said activity is not covered in notification number. What is it? Notification number 12 of 2017. What does 12 of 2017 deals with? List of services which are exempted. Then next, number 5, a foreign diplomatic mission in India receives services worth 40 lakhs from local suppliers. What is your answer in this case? Foreign diplomatic mission, won't it be exempted? It is exempted na. Services provided by foreign diplomatic mission is exempted, not service received by foreign diplomatic mission. If you remember the exemptions, what we saw is services provided by. Here foreign diplomatic mission is receiving the services, that is not exempted, it will be taxable. So right there, only services provided by them is exempted. Only services provided by them is exempted, not services received by them. Next, a charitable trust rents out a religious place meant for general public for a wedding ceremony with a total rental charge of 15,000 rupees per day. So why? Because it is not less than 10,000 rupees per day. If it is less than 10,000 rupees per day, then it will be exempted, because first of all it's a religious place meant for general public. It is registered as a trust. So the charges should be less than 10,000 per day, otherwise it is taxable. Okay. So charges, why it is taxable? Charges greater than or equals to 10,000 per day. That's why it is taxable. Is not exempted. Charges greater than or equals to 10,000 per day is not exempted. Then next, a technology business incubator provides consulting services to startups with a total fees of 30 lakh per annum. It is exempted. Why it is exempted? Because services provided by incubator is exempted. I told you that we have only 2 incubators. One is technology business incubator, software and technology entrepreneurship board. These 2 incubators are notified and therefore it is exempted. So services by approved incubator is fully exempted. Services provided by approved incubator is fully exempted. Next, look into 8.1. A regional airline earns 50 lakhs from passenger transportation service under the regional connectivity scheme. Such amount is received in the 4th year of operations. Under regional connectivity scheme, it is exempted only for a period of 3 years. So right there, exemption only for a period of 3 years from its operations. So consideration as viability gap funding up to 3 years from the commencement of operations. Otherwise, it will be taxable. Then, a common biomedical waste treatment facility charges 12 lakhs for the treatment of waste from various clinical establishments. What is your answer in this case? Taxable. Why? Previously, we had this exemption. Now, in healthcare service, I did not discuss. In healthcare service, I discussed only 2 exemptions. What are they? Services provided by, that is healthcare services provided by clinical establishment, authorized medical practitioner, paramedics. This is not a healthcare services. And even healthcare services in relation to animals or birds. This is not that. So therefore, it will be taxable. Not covered under exemptions. Not covered under exemption with respect to. Not covered under exemptions with respect to healthcare services. Not covered under exemptions with respect to healthcare services. Then next, Tirumala Tirupati Devasthanam owns residential complexes in Tirumala. They are given on rent to pilgrims who visit Tirumala for darshan. Daily rent of these units is as follows. Category A, 800 rupees per day. What is your answer for category A? Exempted, because the charges is less than 1000 rupees per day. Therefore, it is exempted. Category A is exempted. Category A is exempted because it is less than 1000 rupees per day. Then category B. What about category B? So category B and category C both are taxable. Why it is taxable? Because it is greater than or equals to 1000 rupees per day. So only less than 1000 per day the exemption is available. Then next, transportation of passengers by air in economy class, service provided by Indigo Airlines from Sikkim to Mumbai, exempted. Why? If the starting point or ending point in northeastern states, okay, starting point or ending point in northeastern states or Bagdogra is exempted. Mostly it should be in economy class, and in the given question it is economy class only. Due to that reason it is exempted. What will be your answer in the above case? If it is not economy class but a business class, then it will be taxable. Exemption only with respect to economy class. Exemption only with respect to economy class. Then Pune Municipal Corporation charges 40,000 as registration fees for opening a shop in the market near railway station. What is your answer? First, it is services provided by government, because Pune Municipal Corporation is government, by government. It is not covered under Department of Post. It's not covered under Indian Railways. It's not covered under airport or port. It's not covered under transportation. So it is other services. Other services to a business entity. Yes, to a business entity. And is it covered anywhere in the 14 specific exemptions? No. Is it covered in the first general exemption? turnover during the previous year does not exceed threshold limit. Not given. Not given means, so don't apply that. Okay. And what is the value of supply? Value of supply is 40,000. So definitely it will be taxable. Not covered under specific exemptions and general exemptions. Not covered under specific exemptions and general exemptions with respect to government services. Not covered under specific exemptions and general exemptions with respect to government services. That's why it will be taxable. Then Delhi edition of Hindustan Times is transported by rail for a freight of 12,000 from New Delhi to Kolkata. Whether this is taxable or exempted? Why it is exempted? It is exempted because it is by rail. It is by rail. That to newspapers and magazines. So it is covered under notified goods. As it is covered under notified goods, that's why it is exempted. Next. IIM Ahmedabad charges 3,50,000 per company for participating in campus recruitment to select students for providing job. Is IIM an education institution? Yes. But they are not collecting money from students. They are collecting money from the corporates, companies for the purpose of providing the services. Therefore, it will be taxable because only, write down, only services provided by an education institution, by an educational institution to its students or faculty or staff is exempted. See, I am writing this justification, not that I like to write and all, okay, happily I can tell taxable, exempted and go. But why am I writing this? Because in exams, what I have observed with respect to the answer sheets of many students is that they are just writing the answer, but they are not giving proper explanations. Because of not giving proper explanations, what will happen? So they will not give full marks, keep that in mind. So we have to give the justification. You read to write the explanation, definitely at any cost. Then that's why what explanation you need to write, you need to know. That's why I have given those answers. Then next, 16, Kerala Industrial Development Corporation gives an industrial plot of land. Somewhere we have something of this sort, SIDCO, long-term lease of land, correct? And that is exempted. Only what is exempted? Upfront charges. Read this. Kerala Industrial Development Corporation gives an industrial plot of land to X Limited on a lease for a period of 85 years. Is it long-term lease? Yes. What is a long-term lease? Greater than or equals to 30 years. One time lease rent being 30 lakhs. This plot will be utilized by X Limited for development of infra for finance business. Is it covered under the exemption? Yes, it is exempted. Long-term lease of land, long-term lease of land by SIDCO to any person, okay, only upfront charges, is exempted. Only upfront charges is exempted. Then next, general insurance business provided by Max Bhupa Company under Pradhana Mantri Suraksha Bima Yojana. Definitely it's a government notified scheme. Therefore it is exempted. Government notified scheme, government notified insurance scheme. Due to that reason it is exempted. Then Mr. Shekhar provides catering services to Osmania University Hyderabad for rupees 15 lakhs. Where Osmania University will come, category 1 or category 2? Category 2. So due to that reason it will be taxable. only catering services provided to category 1 institution is exempted. Okay, so only catering services to category 1 is exempted. In exam, don't write category 1 and all, you write so educational institution providing education up to 12th standard or equivalent. Then next, 19, service by way of access to Madura Lucknow highway on payment of toll charges of rupees 2500. What is that I told you? Toll charges is always exempted. Toll charges other than by way of annuity, toll charges other than annuity is exempted. Toll charges other than annuity is exempted. Then Skill Up Private Limited provides skill development training services to economically weak students where the cost per student is rupees 90,000 but they collect only 9,000 from student and balance paid by state government of Tamil Nadu. What is your answer? So what is the expenditure borne by government? Expenditure borne by government, if you see, so greater than or equals to 75%. In this case 90% na. Expenditure borne by government is 90%, which is greater than or equals to 75%. That's the reason why the entire training program is exempted. Okay, entire training program, not the money received from government, entire training program, entire training program is exempted. The entire training program is exempted. Then next, ABC Limited received a service from the central government relating to transportation of goods by rail on 5th October 2023. The service was provided as part of an interstate supply. Discuss whether this service is exempt and who is liable to pay GST in this case. Services, received a service from government means service provided by government and by rail. In case of rail, what is exempted? Only notified goods or specified goods. Is it notified goods or specified goods? No. So therefore it will be taxable. Okay, only specified goods or notified goods. Okay, transported by railways is exempted. Only specified goods transported by railways is exempted. Then 22, a municipal corporation provides horticulture services for maintaining public parks in residential colonies and charges 1 lakh to the central PWD, Public Works Department. Discuss whether this service is exempt from GST. First, municipal corporation is a government. Central Public Works Department is also government. So therefore where it will come? Interdepartmental services. The list of specific exemptions we have now 1 point. What is that? Interdepartmental service. I gave an example of police department, income tax department, that one. So it is exempted. Write down specific exemption with respect to services provided by government. Specific exemption with respect to services provided by government hyphen interdepartmental services. Interdepartmental services. Then 23, a shopping mall provides electricity to its tenants as part of a composite supply that includes renting space. The electricity charges are billed separately. Discuss whether this supply attracts GST under what conditions it might be exempted. They provide electricity to its tenants as a part of composite supply that includes renting space. The electricity charges are billed separately. So what is your answer in this case? Exempted na? So exempted. Why it is exempted? Because transmission or distribution of electricity is exempted. Transmission or distribution of electricity is exempted. Only renting is taxable. Only renting is taxable. In brackets write down not a composite supply. Why not a composite supply? When one supply is exempted, how it will become composite? It will not become composite. Okay. Next, 24. A private contractor provides services related to solid waste management to governmental authority. It is services provided to governmental authority under a contract valued at rupees 3 lakhs. Discuss whether this service is exempt from GST. Is it covered? What are the activities we discussed? Public health, sanitation conservancy, solid waste management, slum improvement and upgradation, then water supply. So this is covered under that exemption, exempted. So this is notified services provided to government authority. Notified services provided to government authority. Under that point it will be exempted. Then 25. A contractor supplies services related to public health and sanitation to a municipal corporation for rupees 5 lakhs on 1st November 2023. Is this service exempt from GST? Yes. Where it will come? Services to government authority or government? Government. Pure services provided to government. Pure services provided to government with respect to, because municipal corporation means it is government, okay. Pure services provided to government with respect to Article 243G or 243W of Constitution. Pure services provided to government with respect to Article 243G or 243W of Constitution. Then 26. A district mineral foundation trust. Basically it's a government authority because it is established by state government, okay. So it's a government authority. Undertakes the construction of a community health center in a mining affected area. The total contract value is 30 lakhs. Discuss whether this service is exempt from GST. Yes, it is exempted. Where we discussed any service provided by government authority to any person is exempted. Hope you remember that chart. The first chart we discussed in services provided to government, okay. So this is the chart which we were discussing. You don't have to open the book, just look into the screen. What is the chart I am referring to? Yes, this one. So what I told you is that first of all, services provided by government authority to any person is exempted. This point only I stressed here again, that services by government authority in relation to function is fully exempted. So therefore, where this will come? So DMFT is a government authority. DMFT is a government authority. Why it is a government authority? Government authority means what? Government authority means any authority or body established under an act of parliament or state legislature to carry out the functions under Constitution. Public health is a function under Constitution, okay. Health center is a activity under Constitution and it is established by government. So that's why DMFT is a government authority, and any service provided by them, any service provided by them is exempted. Any service provided by them is exempted. Then next 27, Indian Railways of South Central Zone provide services to Eastern Zone and earned 4 lakhs for the month of December. Exempted. It's a new amendment. Service provided by one zone or division. Services provided by one zone or division to another zone or division. Another zone or division is exempted. Then next, Tamil Nadu Board of Secondary Education collected 8,50,000 from Chetan Vidyalaya for providing affiliation services. What is your answer? What you have written? Is it exempted or taxable? Why taxable? Sir, affiliation fees collected only from a school which is owned or managed or controlled by government is only exempted. Is it clear? So, affiliation fees collected from a school owned or operated or managed by government or government authority or government entity is exempted. Only from that school which is owned, operated or managed by the government or government entity or government authority is exempted. But here it is a private school. So therefore it will be taxable. Okay. No. So this is basically registration fees for opening up a shop. Correct. So then it will come under registration charges. You are right, Pa. I thought it as renting. Actually it is not renting, as registration charges. Registration charges, correct. So sorry, kindly rectify it. Registration charges under any law for the time being in force. Renting is taxable. I discussed it as renting. It is exempted. It will come under specific exemptions. It will come under specific exemptions where registration charges under any law. Registration charges under any law. So because of that reason it is exempted. Good. Done, finished. Now we have this RCM. So take page number 9, 6, page number 6. Concept drills on charge under GST. First you need to answer whether it is taxable or exempted, and after answering whether it is taxable or exempted, you need to answer who is liable to pay GST. What we will do, we will discuss 10 at a time. Okay. So what you need to write there, taxable means T, exempted means E, FCM means F, RCM means R. Okay. So that we can discuss the answers for that. 5 minutes, first 10 questions. Come on. The objective is that 10 out of 10 we should get, because you are referring and writing. You understood? You are referring and writing. The objective is that 10 out of 10 we should get. Come on, start. Okay, because first 10 questions, 10 minutes I will give you. Make it fast. If you have completed, continue doing others also. Continue writing if you have done. Done. Okay, see the answer for the first question. ABC Private Limited appointed Mr. Zakir as their independent director. Definitely independent director means not an employee, and paid him sitting fees of rupees 1 lakh. So is it taxable or exempted? We don't have any exemption for director service. It will be taxable. And who is liable to pay GST? Is it covered under the list of activities covered under RCM? Yes. Director services to company or body corporate is covered under RCM. So ABC Private Limited shall pay GST under RCM. Then next, number 2, micro apparels. Registered dealer in Chennai, Tamil Nadu avails fashion design services of rupees 50 lakhs from Prabhu Designs in Singapore. First, it is not OIDR services. Other than OIDR services, other than OIDR services by NTR is only exempted. By micro apparels is not non-taxable recipient because they are registered. So they will not come under non-taxable recipient because only individual trust government. So due to that reason it will be taxable. And who will pay GST? Of course, the recipient will pay GST under RCM. So micro apparels will pay GST under RCM. Then next, express parcel post services provided by Department of Post to a business entity, aggregate turnover during previous year or aggregate turnover exceed threshold limit, that is irrelevant because Department of Post only 3 exemptions: postcard, inland letter or registered post of envelope less than 10 grams. Other cases it will be taxable, and Department of Post always FCM. So there are some service of government which will always be FCM. Department of Post, railways, transportation, airport or port, and then renting of immobile property to unregistered business entity. So Department of Post only will pay GST under FCM. Then ABC Limited avails service of Rudra Goods Transport Agency for transportation of goods from factory located in Mumbai to its Nasik depot and paid freight of 1 lakh, and applicable GST is 5%. So for GTA services from factory to depot and all, we don't have any exemption. So therefore it will be taxable, and by default it will be RCM. If nothing is given, it will be RCM for GTA services. Only when they specifically says that they have opted for FCM, it is FCM. So default option will be RCM. So who will pay GST? ABC Limited shall pay GST under RCM. So default, in brackets write down default option. The default option will be RCM option. Then Bharat Jewelers sole proprietorship paid 50 lakhs for sponsorship of Miss India beauty pageant for sponsorship services. So only sponsorship money collected by recognized sports body is exempted. This is not a recognized sports body, therefore it is taxable. But sir, beauty pageant somewhere we discussed, that is entry ticket not for sponsorship, it is taxable. So who will pay GST in this case? For sponsorship service, what is the condition for RCM? Recipient should be body, corporate or firm, but the recipient here is sole proprietorship. That's the reason why it will be coming under FCM. So the organizer will pay GST under FCM. Okay. So next, look into next one. Mr. Veer is an agent of life insurance company in rural area and acting as business facilitator. The insurance company pays commission of 8 lakhs. It is exempted. Business facilitator or business correspondent of an insurance company in rural area is exempted. So the payment of GST shall not arise. Next, ABC Enterprises, dealer in cars, appointed Mr. A as a recovery agent to recover the amount payable by the defaulters of EMI. So for recovery agent, we don't have any exemption. Therefore, it will be taxable. And recovery agent service will come under RCM only if the recipient is bank, financial institution or NBFC. Otherwise, it will be FCM. So therefore, who will pay GST in this case? Mr. A. Mr. A only will pay GST under FCM. Only if it is bank, it will come under RCM. Then 8th one, X owns a commercial plot of land where somewhere in a place commercial plot of land 2000 square meters. He is giving such land on lease for 30 years. Is it a long term lease? Yes. For a consideration of 2.5 crores to builders who will construct a commercial complex for sale to business entities where the entire consideration is received after obtaining completion certificate. Is it taxable or exempted? When it is exempted, TDR, FSI, long-term lease of land is exempted if it is used for residential units booked before completion certificate or first occupation. This is what? Residential, commercial. Due to that reason, it will be taxable. And long-term lease of land is covered under RCM. So who will pay GST? India Builders. India Builders will pay GST under RCM, TDR, FSI and long-term lease, that point. Next, 9th one, Y owns a plot of land of 1000 square meters in a posh residential area in Bengaluru. He is giving such land on lease for 30 years for a consideration of 3 crores to monthly developers who construct residential units, and all the units are sold before obtaining completion certificate. So to what extent it is exempted? To the extent of residential units booked before completion certificate, correct or not? Divided by total carpet area, both are same because all are residential units. All are residential units and all got booked before completion certificate. Therefore, it will be exempted and GST shall not be payable. So TDR, FSI and long-term lease to a promoter or builder where that is used for residential units to the extent of units booked before completion certificate. Here everything is booked before completion certificate, so fully it is exempted. Then 10, Mr. Ramesh owns a commercial property and it is given to Mrs. Pacific Private Limited on rent, in which Mr. Ramesh is one of the directors. Consideration involved is rupees 2 lakh per month. Now carefully listen. For commercial property, we have only one exemption. What is that? Accommodation services. This point is not covered under accommodation services. Therefore, it will be taxable. And who will pay GST in this case? In case of accommodation services, commercial property. So two conditions should be satisfied for RCM. Condition number one, supplier should be unregistered. Yes, nothing is given, so Mr. Ramesh is unregistered. Condition number two, recipient should be registered. Recipient should be registered. Commercial property you check, don't check Residential property for commercial purpose. Commercial property you need to check. For commercial property, it is taxable. First that you understood that it is taxable. Then what is the condition for RCM? Supplier should be unregistered. Is supplier given as registered? Hey, respond pa. Supplier is given as registered. No, unregistered. Then what is the condition number 2? Recipient should be registered. Is recipient given as registered? No, recipient is also not registered. So nothing is given means what is that I asked you to assume? Unregistered. So both are unregistered. Due to that reason GST not payable. Right there, GST not payable. GST not payable. Today only I discussed this. URP to URP. When both are unregistered, so GST is not payable like that. Okay, no GST. Why? Because both are unregistered. That is this point. So GST not payable as both supplier and recipient, as both supplier and recipient are unregistered persons. Okay. So 10 out of 10 for how many? Genuinely. Don't cheat yourself. No one? Okay. Let's try next 10. Objective 10 out of 10. Come on. Done? Can we discuss? See this. Question number 11. Mr. Madan appointed as arbitrator for handling an environment issue faced by Save Forest Arbitrator Services, a government agency whose aggregate turnover during the previous year exceed threshold limit, taxable, because the exemption is only to government authority or government entity, not to the government agency. Government agency is also like a business entity whose turnover during the previous year exceed threshold limit, therefore it is taxable. Advocate service and arbitrator service, wherever it is taxable, it will be covered under RCM. So therefore government agency shall pay GST under RCM. Okay. Then next one. Bala Tour Operators, a partnership firm, provided cars on rent to Brainery Private Limited for transportation of its employees, and the rate of GST is 5%. So renting of motor vehicles. For renting of motor vehicles, we have 4 exemptions, and this situation is not covered anywhere in the 4 exemptions, therefore it is taxable. And for condition for RCM, 3 conditions should be satisfied. Supplier should be other than body corporate, yes. Recipient should be body corporate, yes. And the rate of GST should be 5%, yes. All 3 conditions are satisfied. So Brainery Private Limited shall pay GST under RCM. Then next one. Tips Music Private Limited transfer the copyright related to music to a company for using the said music in their advertisement. So what is your answer with respect to this? For temporary transfer of music, we don't have any exemption. It will be taxable. And temporary transfer of music will come under RCM. Correct or not? No. No. I told you. Original literary, dramatic, artistic and musical works by an individual. This is by a company. So RCM will not come. It is FCM only. So Tips Music Private Limited shall pay GST under FCM. If it is by individual only, it will come under RCM. Then Rudra Limited has taken a residential property for providing accommodation to its newly joined employees from Mr. Ashok and paid a consideration of 2 lakh per month. It's a what property? A residential property. Residential property to unregistered person or registered person. Nothing is given, means unregistered person. Correct. But for what purpose it is? Residential purpose or commercial purpose? Commercial purpose. Because for providing accommodation to its newly joined employees, it's not for residential purpose, it's commercial purpose. Commercial purpose means it will be taxable. Commercial purpose, so right there, commercial purpose, even though it is residential property. 2 exemptions are there for residential property. Residential property for residential purpose to an unregistered person. Residential property for residential purpose to a registered individual for family stay. It is none of this. So it is for commercial purpose. As it is for commercial purpose, it will be taxable. And what is the condition for RCM? Residential property, recipient should be registered. Recipient should be registered. Here recipient is not given as registered. So GST not payable. Write down GST not payable. Why GST not payable? As both supplier and recipient are unregistered. But sir, you wrote taxable. Yes sir, taxable. Service is taxable, but GST not payable, as both supplier and recipient are unregistered persons. Then next, X Limited has taken security agency service from Task Force Security Limited, for which payment of 95,000 is made. For security agency only to education institution is exempted. This is not an education institution, therefore it will be taxable. And we have 2 conditions for RCM, security agency. Supplier should be other than body corporate. But if you see, supplier is body corporate, so it will come under FCM. Task Force Security Limited shall pay GST under FCM. Then next, Mr. Atul is an agent of life insurance company. The insurance company pays commission excluding tax 6 lakhs to him. So is it taxable or exempted? Only in rural area it is exempted, correct. Is it given as rural area? No. So due to that reason it will be taxable. Whether insurance agent is covered under RCM? Yes. insurance company shall pay GST under RCM. Then temporary transfer of copyright pertaining to music composed by Mr. A.R. Rahman, registered person, to Arrays Private Limited, a registered production company. Temporary transfer of music is taxable, and as it is by an individual, so it will come under RCM. So Arrays Private Limited shall pay GST under RCM. Then service provided by Mr. Shyam, a recovery agent, to HDFC Bank against a commission of 40,000 rupees. Is it taxable or exempted? It will be taxable. It will be taxable. And is it to bank, financial institution, NBFC? Yes. So that's why it will be coming under RCM. So HDFC Bank will pay GST under RCM. 19. Temporary transfer of copyright on 5/10/2020 pertaining to a book authored by Mr. THARUN'S, registered person, to Taxman Publication and a registered publisher. Mr. THARUN'S wanted to avail ITC with respect to inward supplies, means opted for FCM. So first of all, copyright service is taxable. It will come under FCM. Why? Because author opted for FCM option. That's why it is FCM. But there is a lock-in for 1 year. 1 year lock-in. From which date? From the date of exercising option. Hope you remember the discussion. From the date of exercising option. 1 year lock-in. Services provided by Mr. Mohan, a business facilitator, to Bank of Baroda for its rural branch, is exempted. Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent to a rural area is exempted. So the payment of GST shall not arise. Now 10 out of 10 for how many? Okay, fine. Next 10. At least this time, let's fulfill the target. I am making you do first and I am discussing, because then only you make mistake. I want you to commit mistake. You know when the success will come in exam, when you commit mistake before exam, rather than committing mistakes in exam. You understood? So you have to commit. As many mistakes as you commit, that much perfection you will be getting into. Okay? And how to eliminate the mistakes? You need to practice and write as many tests as you can. And that should be evaluated by someone. Either it can be your friend or your mentor or some other person. So test you need to write, and when you start writing test only you know what are the mistakes that you are doing, but that someone should evaluate. You should not evaluate, because you will cheat yourself. You will think, okay, correct only I have written like that. No, someone should evaluate, ensure that it is happening. So it's not about how much you are reading, it's about how much you are practicing. Done. See the next one. Question number 21. Messrs. Surya Travels registered person has given on hire an electric car to MRF Limited. Registered person for 20 days. Messrs. Surya Travels raise invoice on MRF Limited to pay GST at 12%. What is your answer? Is it taxable or exempted? So it will be taxable. Okay, it will be taxable because we don't have any exemption with respect to this. Electric vehicle we have exemption, but that is more than 12 passengers, that too to a local authority. Here it is taxable, and it will not come under RCM, it will be FCM. Why? Because the rate of GST is 12%. That's why it will be FCM. So Surya Travels will pay GST under FCM. Then 22. Vijay Travels registered person has given on hire a tempo traveler. For tempo traveler we don't have any exemption to Swami Associates. Messrs. Vijay Travel raise invoice on Swami Associates for 5%. So it is taxable, but it will not come under RCM. Why? Because supplier should be other than body corporate, yes, and recipient should be body corporate, but here recipient is not body corporate. That's why Vijay Travels shall pay GST under FCM. Then Zoom Cars Private Limited, a registered person has given a car on hire to XYZ Limited, a registered person. Again, we don't have any exemption with respect to this. This will be taxable. Okay, and here it will not come under RCM because the supplier should be other than body corporate, but the supplier is body corporate. So therefore, it will be coming under FCM. Zoom Cars Private Limited will pay GST under FCM. Innovate Private Limited paid 50 lakhs as sponsorship money to an event organized by Indian Hockey Federation. Indian Hockey Federation, it will be exempted because Indian Hockey Federation is a recognized sports body, National Sports Federation, due to that reason. Messrs. ABC Security Agency, a registered partnership firm, has provided security services to Future Limited. Future Limited is not registered under GST as a turnover not exceeded threshold limit. We don't have exemption for security agency here because security agency only to category 1 education institution is exempted, so taxable. And for RCM, supplier should be other than body corporate, yes, but the recipient should be registered, but the recipient is not registered. That's why it will be coming under FCM. ABC Security Agency shall pay GST under FCM. Then next 26. XYZ Limited availed services of Vimal Goods Transport Agency. Applicable GST is 12% for transportation of goods by road from factory located in New Delhi to its Jaipur depot and paid a freight of 1 lakh. What is your answer? Taxable. So for GTA services, we don't have exemption in this place. So factory to depot like that, it is taxable. And the default option, no need to apply. 12% if you see it is FCM only because the rate of 12% is given only in FCM. So therefore, who will pay GST in this case? Vimal Goods Transport Agency. But sir, you said default option. When you will get default option if it is not given? Here given, clearly given 12%. The 12% will come only in case of FCM. Mr. Batra is an arbitrator and he provided services to Save Nature Garment Agency, whose turnover during previous year is 400 lakhs, taxable, because only garment authority or garment entity or garment is exempted. Moreover, the turnover during previous year exceeds threshold limit, which means that it is taxable. And who will pay GST? Save Nature Garment Agency will pay GST under RCM. 28. Department of Police, Tamil Nadu, provided security services to Taj Group of Hotels, whose turnover during the previous year exceeds the threshold limit and charges 20,000, taxable, because it's not covered under first general exemption because turnover during previous year exceeds threshold limit. Not covered under second general exemption also because the value exceeds 5,000, so taxable. And always services provided by government to business entity is covered under RCM. So Taj Group of Hotels will pay GST under RCM. Then Mr. Santosh received 40 lakhs as a consideration for transfer of development rights related to a promoter. TDR, normally TDR will be taxable if not given as residential units And in case of TDR FSI long term lease, who will pay GST? Promoter or builder? Promoter or builder will pay GST under RCM. 30. Measures ABC Road Lines, a GTA, provided service to a partnership firm for transportation of organic manure. They opted to pay GST under FCM. What is it? Exempted. Why exempted? Organic manure is notified goods. As it is exempted, payment of GST shall not arise. Now, anyone 10 out of 10? Very good. Congrats. Good. Good here. Good. Next. Next is 7 pa. Next is 7. 7 more. With that, this is over. Okay. Done? Okay. Say this, question number 31, GRT Premium Kitchen is located in GRT Regency, a 5-star hotel in Chennai offering rooms in the range of 5,000 to 12,500 per day, means more than 7,500 per day. And such kitchen supplied food through Zomato to their premium customers. It will be taxable, and who is liable to pay GST? Whether the restaurant will pay or Zomato will pay? Restaurant will pay GST under FCM section 9 subsection 5 not applicable. Section 9 subsection 5 not applicable because the restaurant is in the specified premises. Urban Club, an e-commerce operator, facilitated housekeeping service in Delhi with a total taxable value of 2,50,000 in August 2024. The housekeeping service provider is registered under GST. Calculate the GST. First of all, it is taxable? Yes. How much? Like, who will pay GST in this case? It is taxable, but who will pay GST in this case? Urban Club will pay or the housekeeping service provider will pay? Housekeeping service provider. Housekeeping service provider. Housekeeping service provider shall pay GST on 2,50,000. Again, section 9(5) not applicable. Why 9(5) not applicable? Because the supplier is registered. For housekeeping service and accommodation service, supplier should be unregistered. Then 33, Swiggy, an e-commerce operator, facilitated restaurant service in Mumbai with a total taxable value of 10 lakhs in the month of July 2024. The restaurant providing the services is not registered under GST. Calculate the GST liability in this case. What is your answer? So taxable. So because who will pay GST? E-commerce operator. Whether the restaurant is registered or restaurant is not registered, always GST payable by e-commerce operator. So Swiggy shall pay GST on rupees 10 lakhs at the rate of 5% under section 9 subsection 5. I told you the rate of GST on restaurant is 5%. Okay. And next 34, B Limited is a promoter of real estate residential project in Mumbai. One of its project is situated in near Nariman Point. It's a residential complex having 27 floors. During December 2021, B Limited procures the following from unregistered suppliers: cement, other inputs and input services like that they have given. Compute the GST payable under RCM. We don't have capital goods. So first itself is cement. How much cement is procured from unregistered person? 5 lakhs out of 15 lakhs. So 5 lakhs into 28%. 5 lakhs into 28%. That will be 1,40,000. Then next, others from unregistered person divided by total into 100. What is that others from unregistered person? 60 plus 40, 100 lakhs divided by total 15 plus 100 plus 80, 195 lakhs. How sir? 15 total, 100 is total, here 80 is total. Okay, 195 into 100. What is the percentage? 51.28%, which is greater than 20%. Now listen, to get the perfect answer, you take some 4 digits after decimal. 51.228 2820, okay, 2821 I think, 2821 percentage, which is greater than 20%. So GST payable, how much is the GST payable? 195 lakhs. In that 195 lakhs, what is the excess beyond 20? 31.2821%. On that, what is the rate of GST? 18%. You do that. 195 lakhs into full amount you take, 195 lakhs into 31.2821% into 18%. You will get one answer. What is that? 10,98,000 round. Small fraction difference will be there. 10,98,000. So what is the total GST payable? 10,98,000 plus 1,40,000. So that will be 12,38,000. This is the GST payable under RCM. This will be taxable. Next, what will be your answer in the above case? If B Limited is a promoter of real estate commercial project. For commercial project, this is not applicable. This 9.4 is applicable only for real estate, residential real estate project, not for commercial project. So we don't have anything, no liability. Section 9.4 not applicable in case of commercial project. It is only in case of residential project. Then next, Mr. A director of XYZ Private Limited, provides personal service of renting his immobile property to a company on 1st November. Okay, and the monthly rent is 50,000. Is the company required to pay tax under the reverse charge mechanism? First, we will try to understand. It is an immobile property, but they did not give what type of property. So we will take it as commercial because he is giving it to a company. Now he didn't tell which property. So therefore we will take it as commercial and therefore it will be taxable. But to bring it into RCM, supplier should be unregistered. Yes, supplier is unregistered, but recipient should be registered. Recipient is also unregistered. So due to that reason, so there is no GST. No GST as both supplier and recipient. As both supplier and recipient are unregistered. What if recipient is registered? Then it will come under RCM. Then next, a partnership firm operates a fleet of omnibuses and offers passenger transportation service through Ola platform. Determine who is responsible for paying GST and what will be your answer if the supplier is a company. First of all, it is taxable. If supplier is partnership firm, then what it will be? FCM, correct. If supplier is company, then if supplier is firm through e-commerce operator, then e-commerce operator shall pay. If supplier is firm, ECO shall pay. That is Ola shall pay. If supplier is company, omnibus, for omnibus we have an exception. If supplier is company, who will pay GST? Supplier, company shall pay. Supplier shall pay GST. Is it clear? Because we have an exception. Transportation by a company in omnibuses through e-commerce operator is not covered under 9.5. So 7 questions. How many of you got 7 out of 7? Okay, fine. I did not expect for this because all these are critical questions only. And tell me after this whether you got the confidence on this. Yes? Fine. See, I am trying to create you the confidence for each and every chapter. But end of the day, this batch can never be a substitute for regular batch. For your information, regular batch is for 100 hours. This I am just giving you important areas, important chapters, etc. and all to get you the confidence to write the question. It is like a revision. But if you feel like this itself is sufficient, anyhow he is giving it for free, so regular batch we don't have to. No, don't buy my regular batch, it's okay, but you tell to other people. So don't try to cheat them and don't divert them in a wrong direction. You tell to your juniors, buy some regular batch. Okay, yaar, Tarun Raj is not a great faculty, it's okay, but at least some other faculty will be there, na? You have to attend regular. This is only a revision. You don't think, okay, if this itself is sufficient, how we are? If this itself is sufficient, then what's the point in taking hours and hours of classes? You understood or not? So as you attended the classes, it will be okay. If you have not attended the classes, it is not okay. Got it? Because you don't know now what is really the depth of the subject. How will you know if you have not attended the classes? Fine. Say this. TDS and TCS. What's the page number? It's there or not here? I think I gave it somewhere here. It's there. It's there. You see in page number 44. Page number 44, discuss whether TDS is applicable based on the information given below. Page number 44, it is there. So 4 questions only. Can we directly discuss? Yes. See the first question. Supply of stationery to Fisheries Department, Kolkata, where the contract value including 18% GST is 2,60,000 and the payment made is 15,000 excluding GST. What is your answer? Whether TDS is applicable or TDS is not applicable? Not applicable, because you see the value of supply under contract. Value of supply under contract. Value of supply under contract is 2,60,000 into 100 divided by 118. How much 2,60,000 into 100 by 118? 2,20,000, which does not exceed 2,50,000. Therefore, TDS not applicable. TDS not applicable, because one of the conditions for TDS is that the value of supply under the contract should exceed 2,50,000. While counting the value of supply under the contract, it should be excluding GST. Okay, excluding GST. Clear? Value of supply under the contract equals to 2,60,000 into 100 by 118, 2,20,000, which does not exceed 2,50,000. Therefore, TDS is not applicable. Then next question. Interior decoration of Andhra Bhavan located in Delhi. Service contract is entered into with Government of Andhra Pradesh, registered only in Andhra Pradesh, where the contract value including of 18% GST is 12,39,000 and payment made is 10 lakhs. A slight change you need to make here. Service contract is entered by Mr. A in Delhi. Service contract is entered by Mr. A in Delhi with the government. Service contract is entered by Mr. A in Delhi with the government of Andhra Pradesh. Okay, this is the background. Now, we need to see first what is the location of supplier. You tell me what is the location of supplier right there. Location of supplier. What is the location of supplier? Delhi. And what is the location of recipient? Andhra Pradesh. And what is the place of supply? Place of supply is location of property. Where is the property located? Property is located in Delhi. Whether it is intrastate supply or interstate supply? Intrastate supply. But where is the recipient located? In another state. Okay. It is an intrastate supply. It is an intrastate supply. But recipient in another state. But recipient in another state. But recipient in another state. Therefore, TDS is applicable or not applicable? Not applicable. This is also one of the non-applicability of TDS. It's an intrastate supply, but the recipient is in a different state. Okay. Next. Clear? Look into third one. Supply of printed books and printed postcards to West Bengal, West Delhi Post Office Out of the total contract value of 9,72,000, contract value for supply of books exempt from GST is 7 lakhs, and for supply of printed postcards taxable under GST at 18% is 12 lakhs, 2 lakh 72. Means this 12 lakhs, 9 lakh 72 is what? Inclusive of GST. How you know it is inclusive of GST? They said total contract value. Total contract value means this 9,72,000 is total, all inclusive. Okay. Now we need to see value of contract value of taxable supply. What is the contract value? What is the contract value of taxable supply excluding GST? Contract value of taxable supply excluding GST. Out of that 9,72,000, what is the value of taxable supply? 2,72,000. In that 2,72,000, take out GST. What is the remaining portion? 100 divided by, what is the rate of GST? 18%, 118. So how much? 2,72,000 into 100 by 118. 2,508, which does not exceed 2,50,000. Therefore, TDS is applicable or not applicable? TDS is not applicable. So when you have both taxable and exempted supplies in the contract, take out exempted supplies, see the taxable supplies, and that total should be more than 2,50,000, then only TDS will be applicable, otherwise TDS is not applicable. Then next one, maintenance of street lights in municipal area of East Delhi. The maintenance contract entered into with Municipal Corporation of Delhi also involves replacement of defunct lights and other spares. However, the value of supply of goods is not more than 25% of the value of composite supply, and this activity of maintenance of street lights is an activity entrusted to municipality under Article 243W of the Constitution. Where it will come? We have discussed one exemption, that is, say this, pure services. Second one, composite supply with respect to Article 243 GRW, where the value of goods does not exceed 25% of total is exempted. In this case, what is the value of supply of goods? Not more than 25% of the total. Therefore, this activity is what? Exempted. As this activity is exempted, whether TDS is applicable or not applicable? Not applicable. Right there, composite supply of service to government, composite supply of service to government, where value of goods does not exceed 25% of total. Composite supply of service to government where value of goods does not exceed 25% of total is exempted. Therefore, TDS is not applicable. All these questions are on application of TDS, whether applicable or not applicable. But in exam, when you get this type of questions, you need to write the reasoning as to why it is not applicable. Next, look into the next one. Discuss whether TCS is applicable based on the given information. Number one, Top Fashions, a designer cloth dealer and registered in the state of West Bengal, effected supply through Quick Deal, an e-commerce operator. Net value of taxable intrastate supplies effected for the month of October was 1,50,000. Tell me whether TCS is applicable, whether the supplier is registered. Yes. And whether the payment is collected by e-commerce operator. Yes. So definitely, and it is taxable also. Definitely TCS is applicable. So right there, so TCS equals to 1,50,000 into 0.25% is towards CGST, and that is how much? 1,50,000 into 0.25%, 375. Same way, 1,50,000 into 0.25%, 375 towards SGST, because it is given as intrastate supplies. That's why. And brackets write down recipient is registered. recipient is registered, and supplies are taxable. Supplies are taxable. That's why TCS is applicable. Okay. TCS 1,50,000 into 0.25% under CGST, 1,50,000 into 0.25% under SGST. Then next one, DEF Limited, an e-commerce operator, collects 6 lakhs in November 2025, which includes 4 lakhs for taxable goods at 12% GST and 2 lakhs for exempted goods. So TCS is applicable only on taxable goods. So they have not given as to whether it is intra or inter. That's why we are just taking TCS. What is the value of taxable goods? 6 lakhs or 4 lakhs? 4 lakhs. So 4 lakhs into 0.5% towards IGST. What is 4 lakhs into 0.5%? 2000 is the TCS. Okay. 4 lakhs into 0.5%. Okay. TCS not applicable on exempted supplies. TCS not applicable on exempt supplies. TCS not applicable on exempt supplies. Next, question number 3. ABC Limited, an e-commerce operator, collected 6 lakhs for sales made in December 2024. After a customer return and refund of 1 lakh, the net sales amount become 5 lakhs. The GST rate on this sales is 18%. So what we need to do? How much will be the TCS? Sales minus sales returns. What is the sales during the month? 6 lakhs minus sales returns. What is the sales returns? 1 lakh. So therefore, during the same month, we should take out into 0.5% towards IGST. Towards IGST. How much? 5 lakhs into 0.5%, 2,500. Okay. Then next, PQR Limited, an e-commerce operator, receives advance payments of 2 lakhs in March 2025 for sales expected to be complete in the next month. The total value of sale including GST at 18% is 3 lakhs. No TCS. TCS is deducted only in the month of. TCS is deducted only in the month of sales, invoice, definitely not based on advances. Why not based on advances? Because the supplier will not pay GST based on advance. It is goods. So GST not payable on advances in case of goods. So due to that reason, supplier will report it in April 2025. So therefore, TCS to be deducted. TCS to be deducted in which month or for which month? For April 2025. That is the month in which supplies are made. The month in which supplies are made through their platform. Through their platform. Not, okay, through their platform. Got it? Not based on advance. Get it clear? On advance they will not pay. Only based on the supplies made through their platform. When the supply is made through their platform, April 2025, next month. So that's why TCS to be deducted for April 2025. Next, number 5. A product is listed on Amazon but is also available through Snapdeal's delivery service, which the customer opts for. Payment is made through Amazon, but Snapdeal handles the logistics. Which e-commerce operator should handle the TCS and how? So there are 2 e-commerce operators, correct? One is Amazon and another is Snapdeal. Which is the supplier side e-commerce operator? A product is listed on Amazon but is also available through Snapdeal's delivery service, which the customer opts for. Payment is made through Amazon. Payment is made through Amazon, but Snapdeal handles the logistics. Definitely, seller side is Amazon, not Snapdeal, because seller is listing in Amazon. Thereafter, Snapdeal will come. This is the flow. Seller, then Amazon goes with Snapdeal. And this Snapdeal again with customer. Okay. So now in this case, Amazon is e-commerce operator 1 and Snapdeal is e-commerce operator 2. So therefore, who will deduct TCS? Amazon. Supplier side e-commerce operator. Suppliers side e-commerce operator, that is Amazon shall deduct TCS in case of multiple e-commerce operators involved in a transaction. In case of multiple e-commerce operator involved in a transaction, supplier side e-commerce operator will deduct. What if supplier and e-commerce operator are same? Then recipient side e-commerce operator, already we discussed that. Okay. So this is about TDS, TCS, and kindly look into the questions on amendments. So 7, 8 you skip. Question number 18, page number 59. Question number 18, page number 59, there is one question on the amendment related to metal scrap. Metal scrap related amendment, I gave one question, please see that. Question number 18, page 59. Tata Steel Limited, a registered supplier in Jharkhand, sells metal scrap falling under Chapter 72 of the Customs Tariff Act worth 25 lakhs to Mahindra and Mahindra Limited, another registered person in Maharashtra on June 15, 2024. The transaction involves a scrap of iron and steel. Additionally, BHEL, a public sector undertaking, purchases 15 lakh worth of metal scrap from Tata Steel Limited on June 20, 2024. BHEL is also a registered person under GST. For both transactions, the applicable GST rate is 18%. Determine the TDS liability for Mahindra and Mahindra and BHEL on their respective purchases from Tata Steel. First, is Tata Steel registered? Yes. And whether Mahindra and Mahindra is also registered? Yes. Supply of metal scrap by a registered person to a registered person, definitely TDS is applicable. What is the value? What is the value of metal scrap sold by Tata Steel to Mahindra and Mahindra? 25 lakhs. On the 25 lakhs, what is the rate of TDS? 2%. So 25 lakhs into 2% is how much? 50,000 will be taken as the TDS. And is it IGST or CGST, SGST? Simple. What is the location of Tata Steel? Jharkhand. What is the place of supply? Place of supply is Maharashtra, because ending point should be taken. The place of supply in case of goods is ending point of goods. What is the ending point of the goods? Maharashtra. Therefore, it will be coming under interstate supply. And what is the type of GST that is involved? IGST. IGST will be applicable in this case. Then next, second. Suppose if they are making sale to BHEL. Sir, BHEL, PSU is given, but they have not given whether they are registered or not registered. Then in that case, whether TDS is applicable? Definitely, because supply to PSU is a notified recipient. Moreover, remember one point, that is, every person who is liable to deduct TDS is compulsorily required to get registered. Okay, so PSU is a notified recipient. So supply of metal scrap to PSU, definitely TDS will be applicable. Okay, and what is the value? What is the value? 15 lakhs. 15 lakhs into 2%, 30,000. And PSUs will always have registration in Delhi. So supplier in Jharkhand, place of supply, that is ending point in Delhi. So that is also interstate supply chargeable to IGST. Understood the answer for the first part? Quickly read it for your reference. Just go through it for your reference. Okay. Then next, second part, calculate the total amount payable by both Mahindra and BHEL to Tata Steel Limited including GST after TDS deduction. Simple. First you take Mahindra and Mahindra. What is the value? 25 lakhs. And how much is the GST? 4 lakh 50,000 because 18%. They have to add the GST minus TDS. TDS will be 15. So remaining amount they will remit. Same is the case BHEL. 15 lakhs. IGST 18% 2 lakh 70 minus TDS 2% 13. So 17 lakh 40 will be taken as the value. That is amount to be remitted. If Mahindra and Mahindra Limited fail to deduct TDS on its purchase, what will be the implications under CGST Act? So if they fail to deduct TDS, then in that case they need to pay late fee and they need to pay interest. See there. So failure to deduct TDS attracts interest at 18%. And even there is a late fee. How much is the late fee? 25 rupees per day subject to a maximum of 1000 rupees under each act of CGST and SGST. Got it? As this supply of metal scrap is an amendment, they can ask this question. And sir, supplies between notified recipients, there is no TDS. If that be the case, Tata Steel is also a registered person, BHEL is a PSU. Between notified persons, there is no TDS na sir. Between notified persons, there is no TDS only if it is other than metal scrap. For metal scrap, definitely TDS will always be applicable. Is it clear? Fine. So we completed all the questions related to the morning discussion. We will take a break for 15 minutes and then we will continue with the new chapter, that is input tax credits. Come soon, please, because I don't want you to miss the introduction. So we are now going to discuss one very important chapter in CA intermediate, that is input tax credit. So definitely you can expect some good number of questions on this ITC. It's not like a standalone question, but in every question they will connect, and mostly case scenario MCQs also they will be connecting this. First we will understand what is the concept of input tax credit. Already we have seen this in the beginning, that is first chapter. There is a registered person, and that registered person is having some inward supplies, and on that inward supplies there is some price plus GST paid. What is that price? Say 1 lakh plus 12,000 rupees is paid as GST. This 12,000 is known as input tax credit. Again the registered person will make some outward supplies for which they will receive price plus GST, say for 1,50,000 into 12%, that is 18,000 is their output tax. This output tax is also known as gross liability. This 12,000 is input tax credit, which is set off against the output tax liability. So that is the net GST payable. So there are three journal entries in relation to this. First, for purchases, it is purchase account debit 1 lakh, ITC account debit 12,000, to supplier account 1,12,000. Then for sales entry, recipient account debit 1,68,000 to sales 1,50,000 to GST payable 18,000. GST payable shows a credit balance, means it's a liability, and ITC shows a debit balance, means it is an asset. So we can set off this 18,000 against this 12,000. So the set off entry will be GST payable account debit 18,000 to ITC 12,000. So the difference amount 6,000 will be taken as the GST payable, that is net liability. Now in this context we need to understand three terminologies: availment of ITC, utilization of ITC, reversal of ITC. Availment of ITC means taking credit. Where we will take credit? In GSTR 3B. Already I told you, in 3B we have table 4. In the table 4 we will avail the ITC, that is called as availment of ITC. As soon as you enter into that particular table 4 of GSTR 3B, it will travel to one ledger called as electronic credit ledger. So through 3B we will do that. Then utilization of ITC. Utilization means once I avail the ITC, that ITC I will adjust against my liability, that is known as set off with liability. Again it will happen through 3B only. Then reversal of ITC. Sometimes I will take the excess ITC, or wrongfully I will avail the ITC, that needs to be reduced. To reduce the ITC I will do reversal. Where I will do reversal? In the same GSTR 3B only we will do reversal of ITC. You can see here in GSTR 3B table 4 eligible ITC, you can see ITC available. First we will avail the ITC, then ITC reversed, means reduction of ITC. The balance is known as the net eligible ITC. Okay, so this is what we will be doing in reversal of ITC. Again, where we will do reversal of ITC? Through GSTR 3B. Availment means taking credit, utilization means set off, and reversal means reducing the ITC balance. And so therefore what is the net GST payable? So input tax credit means GST paid on inward supplies, which can be availed as input tax credit and utilized for payment of GST on outward supplies, and therefore net GST payable will be gross GST payable. What is gross GST payable? Tax on outward supply minus input tax credit. So these are the basics which already we know. Then you can see in the next page there are three ledgers which are maintained by GST network on behalf of every registered person. Three electronic credit ledgers which are maintained by GST network on behalf of every registered person. As these ledgers are not maintained by the registered person, so it will have a contra effect. For example, ITC is asset, so it will show a debit balance. As they maintain the ledger, it will show a credit balance, just like your cash book and passbook concept. Okay, then liability is credit balance, but as they maintain the ledger, the liability will be showing a debit balance. Is it clear? So electronic ledgers, there are three electronic ledgers. One is electronic liability ledger. What does it contain? It contains the gross GST payable, how much ever liability that we have. Then electronic credit ledger, what does it contains? It contains the input tax credit that we have availed. Then electronic cash ledger. It contains the GST that we have deposited. So coming back to this example, so this GST payable 18,000 is there na. This 18,000 will be reflected in the liability ledger. This ITC we avail 12,000, right? That 12,000 will be reflected in credit ledger. Whereas 6,000 net amount we need to pay, that 6,000 rupees will be deposited in the electronic cash ledger. Now, look into availment of ITC in GSTR 3B. How much ITC we will avail in 3B? For that we need to read section 41 read with rule 36 sub rule 4. So section 41 contains this information. 41 deals with availment of ITC. What does it say? First, you see the supplier. Supplier will add the invoice in GSTR 1. Which invoice? B2B invoice. What is B2B means? Sale to a registered person, and he will file it in GSTR 1 and say this. So what supplier will do? So supplier will enter the details in GSTR 1. In GSTR 1, so he will take add invoice. In that add invoice, you can see here, so first an invoice will be added. In that, recipient GSTIN will be given. Recipient GSTIN will be given. As soon as the recipient GSTIN is given and this invoice, they will mention the value etc. and click on save, and they will file this GSTR 1. As soon as supplier files GSTR 1, this data will be auto populated in the GSTR 2B of the recipient. Now, I am the supplier, I added here. As soon as I add here, it will be reflected in your 2B. So, as and when you open your GSTR 2B, you will be able to see what are all the invoices which has been added by your supplier. So, that data will be reflected here under ITC available. Got it? And therefore, it is reflected in 2B of the recipient. This is called as matched ITC. Matched ITC means that much is reflected in 2B of the recipient. Now, what recipient can do? Recipient can avail this ITC in his 3B, but fully he can take? No. He need to make some adjustments. What are the adjustments that he need to make? This 3 minus 3 plus he need to make. That is, recipient while availing the ITC in 3B from the matched ITC, so total 6 adjustments they need to make. What are those 6 adjustments? 3 things they need to reduce. Means even though it is coming in 2B, but they should not take. What are they? Number 1, blocked ITC. Blocked ITC means there are some inward supplies which are kept under blocked ITC, which are ineligible. Even though used for business purpose, we should not take. Like motor car is a block credit, food and beverages is a block credit, outdoor catering is a block credit, membership of a club, health and fitness center is a block credit. Like that we have some list of blocked credits. So even though it is coming in 2B. Sir, why it will come in 2B? Because the portal don't know whether it is a blocked credit or not to you. So because of that, they will be giving it in 2B. They don't know. You purchase, you gave your GSTIN, so portal will give it to you in 2B. But you should not take that credit. Okay. So that's why we need to reduce it. Then non-business purpose. Non-business purpose means personal purpose. So what happens? Many of my relatives know my GSTIN. So what they do, they will buy something and they will be giving GSTIN, my GSTIN, and they will purchase it. And when they purchase it, I will be getting in my 2B some washing machine purchased, fridge purchased, etc. and all. Where from I am purchasing washing machine for my business, and for my business washing machine is no way connected, as if I am washing the clothes of the students. Got it? And therefore washing machine is no way connected to me, and it will come in 2B. Why it will come in 2B? Maybe the portal don't know now which business I am there in, so they will give, but as it is used for non-business purpose, I should not take the credit. Is it clear? If I take the credit, lot of people are taking credit practically, but if department comes and asks, where is the washing machine? Sir, washing machine not there, sir. Then ITC wrongly availed, unnecessarily I need to pay the penalty. So non-business purpose, I should not take credit. Then exempted outward supplies, that is my inward supplies are used for exempted outward supplies. Can I take the credit? No, I should not take the credit. Why like that? Because when my outward supply is exempted, am I paying tax or I am not paying tax? I am not paying tax, then how can I enjoy the ITC on my inward supply? So I should not take. But portal don't know whether my outward supply is taxable or exempted. So for that reason, they will give me credit in 2B, but I should not take. These are the three things which reflected in 2B or not reflected in 2B. Reflected in 2B, but ineligible. Got it? So these three are coming in 2B, but ineligible. I should not take. What are they? Blocked ITC, ITC for non-business purpose, that is inward supply used for exempted outward supply. Clear or not? Then there are three things which is not coming in 2B. As per law, only whatever is there reflected in 2B. How it will be reflected in 2B? Whenever your supplier files GSTR1, it will be coming in your 2B. Law says whatever is there in 2B, that much only can be taken as credit. But we have three exceptions to that. Even though it is not coming in 2B, we can still take the credit. What are they? Number one, that is GST paid under RCM. Whatever GST that you are paying under RCM, you can take as ITC. There is no need that it should be coming in 2B. Number two, pertaining to earlier tax period. Pertaining to earlier tax period means it was pertaining to January. You have not taken in January, but you want to take in March. You can take in March even though it is not coming in March month 2B, because it was reflected in Jan month 2B. So not reflected in March month 2B, definitely you can take because you have not taken in the month of January. Then reavailment of ITC reversed earlier. First you would have taken the credit, and after taking the credit, because of some reason you reverse the ITC, means reduced. Okay, then again you can reavail the ITC. This may not come in this month 2B, even then you can take. What are the three things? Even though not coming in 2B, we can still take GST under RCM, ITC pertaining to earlier tax period not availed in that period, and reavailment of ITC reversed earlier. These adjustments, 6 adjustments we need to make to the ITC reflected in 2B, then you will get ITC as per 3B. Got it? And this much only can be taken as credit. Now my question is, why will it not come in 2B? Why will it not come in 2B? You purchase and you have it in the books, but why it will not come in 2B? What could be the possible reason why it will not come in 2B? Tell me. Number one, supplier not file GSTR1. Is it clear? Supplier not file GSTR1. Number two, supplier filed GSTR1, but this invoice he missed. Number three, supplier filed GSTR1 but reported incorrect details of invoice. Instead of 18%, he reported 12%. Because of that reason, it will not be coming in 2B, but it will be there in books. Is it clear? ITC as per books, that is based on invoices, versus auto-populated in 2B. Why will there be difference? Because of these three reasons. GSTR1 not filed, or GSTR1 filed but invoice missed, or GSTR1 filed, invoice also reported, but incorrect details are there in the invoice. But can we take ITC as per books? Never. ITC as per books is of no use. We need to take ITC only as per 2B, and for that also we need to make these 6 adjustments, then only it will be called as ITC as per 3B. Are you getting this? Clear? What are those 6 adjustments? 3 minus blocked ITC, inward supply for non-business, inward supply for exempted. 3 plus RCM pertaining to earlier month, reavailment of ITC reversed earlier. Be careful, in exam they will give lot of transactions. You need to cautiously read, analyze it, and then only take the ITC in GSTR 3B. This is only called as ITC availed. Okay. Next, you can see this. When ITC as per GSTR 2B is less than the ITC as per books. Say ITC as per books is 4 lakhs, ITC as per 2B is only 3 lakhs. Okay. So why? Because of these 3 reasons. Only ITC as per 2B is relevant for availment of ITC. So only that reflected in 2B should be taken, but whatever is there in your books cannot be taken. As and when supplier files GSTR1 or rectifies GSTR1, carefully listen. So what are the mistakes that has happened here? Supplier not filed GSTR1. As soon as there is a mismatch between your 2B as well as your books, what will you do? as a recipient, you will call the supplier beep, 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 okay, and left, right, center you will take him. That is what you are doing for the purpose of, like I am not getting ITZ, you understood or not? So therefore, definitely supplier will file, it is your money, correct or not? It is your money, you already paid to supplier and he did not file return, so therefore you will ask him to file the return. You go to an extent where you will take his login details and you will file his return, because it is your money, you need it, so you will file. And say supplier file GSTR1 when at a later point of time. Now can I take ITZ? Yes. As and when supplier files his GSTR1 at a later point of time, it will come in 2B of that particular month. So definitely we can take ITZ, no issue. Then second case, third case, what you will do? Again, you will ask the supplier to rectify his GSTR1. He filed, but he missed your invoice. He filed, he added your invoice, but he reported incorrect information. What you will ask him to do? You will ask him to rectify GSTR1. He will rectify at a later point of time. What is the time limit for rectification? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Today only we discussed what is the time limit for rectification. By that time, the supplier can definitely rectify. Then we will get the credit. Yes, whenever supplier rectifies, in that month it will come in my 2B, then I can happily take the ITZ. You can see here. So when ITZ as per 2B less than ITZ as per books, only ITZ as per 2B is relevant for availment. As and when supplier files GSTR1 or rectifies GSTR1, ITZ shall be reflected in 2B and that can be availed in 3B. Is that clear? Suppose if ITZ in 3B is greater than ITZ in 2B, so this many people will do. What they will do? They will take excess credit than 2B, and that may be because of genuine reasons or that may not be because of genuine reasons. Maybe they want to cheat or fraud the government. They can do that. Then in that case, what is the action taken by the department? Department will send a notice to you. That is Rule 88D. Say this: if ITZ in 3B greater than ITZ in 2B, a system generated notice shall be given under Rule 88D. That is not B, Rule 88D. Rule 88D, and accordingly reply needs to be furnished. So please give the page number reference to Rule 88D and refer that page. Rule 88D. It is in returns chapter. Can you tell me that page number, please? Returns chapter, it is there. If you turn the page, you will find returns under GST. Okay, I will check. You write the page number. Not returns, sorry, not returns. In this itself, page 98. Page 98, this information is there. Page 98. Page number 98, this information is there. You can see that page number 98. Page number 98 you can see. So when Rule 88D gets attracted, tell me, when Rule 88D gets attracted, if ITZ in 3B greater than ITZ in 2B. So look into Rule 88D. What does Rule 88D says? See the trigger point for Rule 88D. When Rule 88D will come? If the difference in ITZ claim, that is, you avail the credit in 3B more than credit as per 2B, immediately a system generated notice will come, that is form GST DRC 1C. You can remember this is Rule 88D na, before alphabet. D before alphabet is C, DRC 1C, and you need to give a reply. So how they will give the notice? Either they will upload in the portal or they will send it over mail. You need to give a reply. What is the time limit within which you need to give reply? 7 days. 7 days. What is the reply that you will give? Suppose if it is genuine cases. What is the genuine cases? Number 1, it is your RCM liability. Ayya, 3 cases, even though not reflected in 2B, you can take na. What are they? Number 1, RCM. So prove that it is RCM liability. So you can reply accordingly. Number 2, what is that? ITZ pertaining to a particular month, not availed in that month, but you are availing now. So you produce that statement, sir, it was coming in January month 2B, but I have not taken in January. So you can check my 3B. So now I am taking. So that will be your reply. And third reason, what is the third reason? Wrongly you have availed and you have reversed, and again you are re-availing. So you will show them, sir, first I have availed in 3B, then I reversed in 3B, now I am re-availing. So those evidence you produce, that is the reply, if it is genuine cases. Otherwise, if you have taken ITC in excess, pay that. Either give the reply or pay the difference, or partly give the reply and partly pay the difference. But you need to respond within 7 days. Pay the difference, explain the difference, partial payment and explain the balance. What will happen if you are not giving any reply, or you gave reply but they are not okay with that reply, then in that case what they will do? They will again give a notice under section 73-74, which is a very, very dangerous notice. Once we get that notice, penalty also will get attracted and they will recover. How they will recover? They directly come and take money out of our bank account. That is called as garnishee order, which you will learn at CA final level. So they will directly come and freeze our bank account and they will take money out of our bank account. That is this show cause notice under 73-74. And till the time we pay the difference or explain the difference, what will happen? Concentrate, very, very important. Till the time we pay the difference or explain the difference, what will happen? They will block our GSTR1, means we cannot file our GSTR1 because there is a notice which is given under Rule 88D. So first, not allowed to file return in GSTR1. If you are not able to file GSTR1, you are not able to file GSTR3B. If you are not filing GSTR1 or 3B for consecutive 2 tax periods, your e-waybill will be blocked. You got it? Your e-waybill gets blocked. And also this will lead to suspension of your registration. These are the 4 consequences. What are the 4 consequences? Till when? Like when these 4 consequences will come? Till the time you are not paying the difference or explaining the difference, your GSTR1 will be blocked. Number 2, GSTR3B will be blocked. Number 3, for 2 consecutive periods, if 1 or 3B not filed, e-waybill will be blocked. Thereafter, number 4, it will lead to suspension of registration. Got the clarity about Rule 88D? So, conclusion. Don't take more ITC than 2B. More ITC than 2B. Whatever is there in 2B, unless it is genuine. Next, you see this GSTR1. What is GSTR1? Already we know. What is GSTR1? A return that contains the details of outward supplies to be filed by every supplier, registered person. 2A and 2B, both 2A and 2B contains inward supply details. Both 2A and 2B contains inward supply details. But what is the difference between 2A and 2B? 2A is a dynamic document, which means it will keep on changing based on supplier's GSTR1, like a Google Sheet. I am sending you a Google Sheet. If I modify here, that will get modified there also. But 2B is like a static document. Once a cutoff date happens, by that cutoff date, whatever returns which are filed by supplier, those details only will come in 2B. Is it clear? And that is the difference. You can see there, 2A based on GSTR1 or invoice furnishing facility. This invoice furnishing facility concept is applicable for those who are under QRMP, quarterly return monthly payment, furnished by every supplier. Recipient can generate a statement of inward supplies in GSTR 2A auto-populated from GSTR1 filed by the suppliers. But 2B is a static month-wise auto-drafted statement for regular taxpayers. It is like 2A only but remains static. So what is the difference between 2A and 2B? Maybe it may come as a theory question, not a task, not important also, but maybe asked. What is the difference between 2A and 2B? So type of the return, 2A is a dynamic return, but 2B will be static. TDS TCS details will be there only in 2A. So already I told you, TDS TCS details will come in 2A, not in 2B. It will not be in 2B. Details of invoices if GSTR1 filed after due date. What is the due date of GSTR1? 11th. By 11th, if they file only, it will come in 2B. If they file it after 11th, it will come in 2A. Okay. So reflected, but in 2B it is not reflected. Then when it will be reflected? It will be reflected in next month 2B. However, it is reflected in subsequent 2B. What is the purpose of 2A? Just for reference only. But 2B is for the purpose of availment of ITC. For availing ITC, which return is relevant? 2B. Because we take the ITC as per 2B only na. Next. Say this GSTR 3B. What is GSTR 3B? That's a consolidated return that contains the details of outward supply. How much is my liability? How much is my ITC? What is my net liability? How much is the late fee or interest that I need to pay? Everything will be there in 3B return. Now, say this already we discussed, that is supplier will report the details in GSTR1 or IFF and he files it by due date. It will come in recipient 2B, that is matched ITC. These are the 6 adjustments we need to make. Then it is called as ITC availed in 3B. First 3 reflected in 2B or not reflected in 2B? Reflected in 2B but ineligible. That's why we will take out. Correct. Next 3 reflected in 2B or not reflected in 2B? Not reflected in 2B but eligible. That's why we are adding this. Okay. Next one. So far what we have discussed is section 41 read with rule 36 sub rule 4. Now another rule, section 41 read with rule 37A. What does it says? My supplier filed GSTR1. It came in my 2B. Concentrate. My supplier filed GSTR1. It came in my 2B. But what happened is that I availed the ITC also. My supplier did not file his 3B. Means what? He filed GSTR1 but he did not file 3B, means he did not pay tax. Only when he filed 3B he will pay tax. Otherwise there is no tax payment. At the time of filing GSTR1 whether a tax is payable? No. At the time of filing 3B only tax is payable. So that idiot is a smart fellow. He filed GSTR1 and it came in my 2B. So I took the ITC also in 3B, but thereafter he did not file 3B. When he is not filing 3B, I have to reverse my ITC. I have to reverse my ITC. But sir, what is the time limit that is given to him, to supplier, to file the 3B? September 30th of next financial year. What is the time limit given to him, pa? September 30th of next financial year. Means 6 months from the March financial year end. April, May, June, July, August, September. By September 30, he should file the GSTR 3B, September 30 of next financial year. If he files, no problem. No problem. If he is not filing, then whatever ITC that I have already availed needs to be reversed. With interest or without interest? Without interest, if it is by November 30. Means how many months I have? 2 months. October and November. October and November I have to reverse. If I am reversing by November 30, I am the sense recipient reverses by November 30, no problem, no interest, just I need to reverse. If I miss it, then I have to pay interest at the rate of 18% per annum. Are you getting this? Now, see this chart, reversal of ITC if supplier not file GSTR 3B. Actually here, for whose mistake who is getting penalized? Supplier mistake, recipient is getting penalized. See this, supplier reports the invoice in GSTR1 and files it within the due date. Understood? Based on this, where it will come? In recipients 2B, auto populated. So what recipient did? He took the ITC in his 3B. This is normal. Now, supplier not filed GSTR 3B by September 30th of next financial year. So what recipient should do? He need to reverse the ITC after September 30 but before November 30 of the next financial year. If he misses it, see there, if not reversed by November 30 of next financial year, interest at the rate of 18% shall be payable. From which date to which date? From the date of utilization till the date of reversal or payment. You got it? From the date of utilization till the date of reversal or payment. Sir, what is the meaning of date of utilization? That's there in the next part. We will see that. But let's try to understand this first. So, if not reversed by November 30th, recipient has to pay interest. If reversed by November 30th, no problem, no interest. Just the ITC will be reversed. Okay. Now, can this reversed ITC be again re-availed? Yes. When as and when supplier files his 3B. Supplier will be filing his 3B at a later point of time. As and when supplier files his 3B at a later point of time, we can re-avail this ITC, and this re-availed ITC will not come in 2B. Even then we can take. That's what we discussed. See the previous page. See the previous page. Even though not reflected in 2B, we can take na. Third point, re-availment of ITC reversed earlier. Got it? Re-availment of ITC reversed earlier we can take, even though it is not coming in 2B. One more advantage we have for this re-availment of ITC. What is that? Without any time limit. Usually there is a time limit for availment of ITC. What is that time limit? 30th November of succeeding financial year or date of filing and return, whichever is earlier. But this particular re-availment of ITC can be availed any time. As and when supplier files the 3B after September 30th, we can re-avail this ITC. Understood or not? Now, there is one big question that we all will get here. How will recipient know that the supplier not filed 3B by September 30th of the next financial year? That portal only will tell us. Where the portal will tell? In our GSTR 2B. In our GSTR 2B, you open GSTR 2B after September 30 of next financial year. For example, financial year 2024-25, financial year 2024-25 completed na. Now, 2025 September, 2024-25 financial year completed, 2025 September, afterwards you open 2B. In the 2B, go to ITC reversal. Go to ITC reversal. Can you see there? ITC reversal. Click on that ITC reversal. You will find some amount. This much amount you need to reverse. Is it clear? They will only tell us how much we need to reverse. Means what portal will do? Will follow up with the suppliers and check whether they are filing 3B or not. You don't have to do anything. They will only check. And they will give us the information that these are all the suppliers who did not file 3B. So, you need to reverse. Now, what is that you need to do? Reverse it. Then follow up with the supplier. What is that? Boss, you did not file 3B, and if you are doing like this, next time onwards I will not purchase from you. So, you try to create a kind of pressure. Okay. So, that is whatever I said is polite. Okay. Like that and all, no one will speak. And thereafter, he will file the 3B. When he files the 3B, we can re-avail the ITC. Is it clear? Next, say this. So, what is the time limit by which we need to reverse the ITC? November 30th. If not, interest will be payable at the rate of, from which date to which date? From the date of utilization till the date of reversal or payment. What is the meaning of date of utilization? Date of utilization means, first we need to see the month in which the balance in ITC falls below the wrongly availed ITC. For example, ITC wrongly availed with respect to an invoice issued by the supplier for which supplier not filed 3B is 12,000. How much is the ITC wrongly availed? 12,000 with respect to a supplier who did not file 3B. Okay. And invoice date is 4/5/2024. Which month? May 2024. Got it? Now, every month starting from May 2024, every month starting from May 2024, we need to see opening balance, ITC availed, ITC utilized, closing balance. May 2024 opening 40 means some previous month closing, opening plus ITC 32. including in this 32, this 12,000. Got it? In that 32, one invoice is there belonging to that stupid supplier. Okay, 12,000, 12,000. Now, what is the ITC utilized? 50. What is the closing balance? 22. Now, listen, whether the closing balance, that is balance in ITC, is below 12. What is the wrongly availed ITC? 12. Whether the closing balance is below 12? No. So, for May month, we have not utilized the ITC. Is it clear here? First, you need to see the month in which balance in ITC falls below the availed ITC. So, May month we have not utilized. Then go to June month. June month opening balance 22 and plus ITC availed 18. ITC utilized 30. Closing balance 10 means how much we have utilized? 2000. So, balance in ITC falls below the availed ITC. By what extent? 2000 means 2000 we have utilized in the month of June. Again, July 10,000 opening balance, 15,000 ITC availed and ITC utilized 5,000, closing balance 20,000. Balance increase means reversed. No. Balance decreased means utilized. Balance increase does not mean reversed or paid. Is it clear or not? The balance will increase because of many reasons, but balance decreased only you should see. Balance increase does not mean reversed unless you are actually reversing it. Is it clear? Balance increases does not mean reversed. Then next, again August month, opening balance is how much? 20. What is the ITC availed? 20. ITC utilized 36,000. And what is the closing balance? 4,000. Now already 12. 12 came down to 10. Correct? Then how much we have utilized? 2,000 utilized. And that 10 came down to 4. Means how much we have utilized? 6,000 is said to be utilized. In which month? August month. Now 2,000 utilized in June and 6,000 utilized in August. Accordingly, this June month 3B due date, August month 3B due date or actual date of 3B, whichever is earlier, will be taken as the date of utilization for computation of interest. Is it clear? So, first you need to see the month in which balance in ITC falls below availed ITC. Step 2, take the due date of 3B or actual date of 3B for that month, whichever is earlier, that is taken as the date of utilization for computation of interest. So, in this case, for June 2000 utilized, for August 6000 utilized, for June and August, see the due date of 3B, actual date of 3B, whichever is earlier. So, you will know what is that date. That date is the date of utilization. From the date till the time actually you are reversing or paying, you need to compute the interest. That date will be given in the question itself. Okay. Next. So, definitely interest computation on ITC, they can start asking because high time they need to ask question on this. Already they tested in one attempt in MCQ. Definitely they can ask this question. So, you need to get the clarity, that's why I gave you this. Understood up to this? What is the meaning of date of utilization? Is it clear? Now listen. What our supplier will do, he will file 3B. Our supplier, if he is not filing 3B only, this torture. Yes or no? If our supplier not filing 3B only, this torture. Supplier filed 3B. But there is a mismatch. Liability in GSTR 1 greater than liability in GSTR 3B. Kindly modify. Liability in GSTR 1 greater than liability in 3B. Then what will happen? This above rule will not come because he filed 3B. He filed 3B. So, now the supplier don't want this problem to happen to the recipient. They don't want to receive the call from the recipient. So, what they did is that if we are not filing 3B only, recipient will come and ask us to file 3B, etc. and all. So, let's avoid this rule itself by ensuring I am filing 3B. Supplier will file 3B. But there is a difference between GSTR 1 and GSTR 3B. Liability in GSTR 1 10 lakhs, but they will show only 2 lakhs as their liability in 3B and they will pay 2 lakhs. How much short paid? Now, for that 8 lakhs, they will receive one notice. See this. supplier filed GSTR1 and GSTR3B, but liability in GSTR1 greater than liability in GSTR3B. In this case, whether recipient is required to reverse ITC or not required to reverse ITC as per Rule 37A, no. Recipient is not required to reverse ITC as per Rule 37A. When the recipient is required to reverse ITC as per Rule 37A, if the supplier has not filed 3B, he filed 3B, that's why that Rule 37A not applicable to the recipient. Are you with me? Next. Now, who will receive this notice then? Recipient or supplier? Supplier will receive the notice. System generated notice to supplier in form GST DRC 1B. You can remember this easily. This is which rule? Rule 88C. So what is the alphabet before? 1B. DRC 1B notice they will receive. Now within 7 days what they need to do? Same like Rule 88D. What they need to do? Either pay the difference along with interest or explain the reasons for difference. Suppose if they have not explained or officer not satisfied, what they will do? Not replied within 7 days or replied but officer not satisfied, what will do? Recovery of such difference along with interest and penalty. Got it? Now that is what I have given as difference between Rule 88C and Rule 88D. Now what is the difference between 88C and 88D? Situation difference. In 88C what will happen? Supplier reported more liability in GSTR1 but paid less liability in GSTR3B. So Rule 88C will come into picture. 88D when it will come into picture, recipient, that is not to the supplier, to the recipient. Recipient availed more ITC in their 3B than their 2B. You got it? Next, both the cases notice will come. Both the cases notice will come. What is the form of the notice? First one is 88C. So DRC 1B. Here 88D. So DRC 1C. Notice will come. And how the notice will be given? Common. They will upload in the portal plus communicate in the email. That's common. What is the time limit within which we need to reply? 7 days. That's also common. And thereafter, what is the reply that we need to give? Either pay the difference or explain the difference or partly payment, partly explain. That is also common. Both the places. Are you understanding? Then what will happen if we are not giving proper reply or we are not making the payment, etc.? Then in that case, for 88C, you observe no further notice. Already notice given. No further notice. Direct recovery. Is it clear? Direct recovery. See there. Recovery of tax liability. Liability posted in liability ledger. But in the next case, 88D, another notice they will give. Already one notice, that is notice number 1. Now another notice they will give and then only recovery will be initiated. This is the another difference. Is it clear? So where we have difference? First place we have difference. First place we have difference. Again, notice form also we have difference. Then if no response or unsatisfactory response, here also we have difference. And what will happen on the impact on filing returns, etc. till the time we explain the difference or pay? Same. This is common. Both the places it is common. What will happen? Our GSTR1 will be blocked. Our GSTR2B will be blocked. Sorry, GSTR3B will be blocked. And because of this 2 months, if you are not filing, e-way bill will be blocked. And this will also lead to suspension of registration. Understood here? When 88C, when 88D, got the clarity? 88C when liability in 1 more than 3B, more than 3B. Next, 88D when ITC in 3B more than 2B. So with this, we completed availment of ITC. Availment of ITC, all the provisions related to that we completed. Now we are moving on to the next part, that is utilization of ITC. So I told you that there are 3 things. First, availment of ITC. Everything related here is about taking the credit only, correct? Second, I took the credit, now I need to set off with my liability. For that, what is the manner of utilization of credit? That is given in section 49 subsection 5. Section 41 talks about availment of ITC. 49 subsection 5 talks about utilization of ITC. Okay, concentrate here. What is the manner of utilization of ITC? Listen. That is, I have credits. I have CGST credit, I have CGST credit, SGST credit, okay, then UTGST credit, then IGST credit, and compensation cess credit. No need to make note, just listen. I have CGST credit, okay, then SGST credit, UTGST credit, then IGST credit and cess credit. All the credits I have, and I have liabilities also. So this is my credits, and I have liability CGST payable, then next SGST payable, and next UTGST payable, and IGST payable, and finally cess payable, compensation cess payable. Now, can I use CGST credit for payment of CGST? Yes. SGST? Yes. No. UTGST, IGST, cess, I cannot use. I cannot use CGST credit for payment of cess. So CGST credit can be used only for CGST or IGST. What about SGST? Means SGST credit I can use only for payment of SGST or IGST. Then UTGST credit means UTGST credit can be utilized only for payment of UTGST payable or IGST payable. Then what about IGST credit? Is there any restriction? Which means can I use it for payment of all? Yes. But compensation cess, I cannot use it for payment of compensation cess. I can use it only for payment of all liabilities other than compensation cess. What about compensation cess? I cannot use it for payment of anything except compensation cess. Now, if you observe this column, that is IGST column and IGST row, there is no restriction. That is IGST liability we can pay using any credit, IGST credit we can pay using, like IGST credit we can use for payment of any liability, correct? There is no restriction with respect to IGST. But in the other cases, other three, CGST for payment of CGST, SGST for SGST, UTGST for payment of UTGST. Got it? Now, this is the first rule. Easily you can remember the first rule or first principle. IGST is like Mr. A, okay, and CGST is like his wife, Mrs. A. SGST, UTGST is like his parents. He will adjust with his parents will adjust with him. He will adjust with his wife will adjust with him. But his parents will never adjust with his wife will never adjust with his parents. You understood or not? So, IGST can be set off against, CGST can be set off against IGST. Then SGST, UTGST against, IGST against, but SGST, UTGST against CGST, not possible. Not possible. So always, every house same problem only, na, in-laws problem. So therefore, this is with respect to that. Before marriage and all, it's a different story. No, too much of cringe and all they will be doing, and so she will feel like her mother is not mother, and this person's mother is only mother, like that and all. And this person's mother also will tell two good things. You know, how beautifully she is cooking, how beautifully she is doing everything. The moment she comes into home, every torture will start, okay? And this person, Mr. A, literally will lose the peace in his life, okay? And that is this. So from that example, you can remember this rule number 1. So what are the 2 points that you need to remember? There is no restriction with respect to IGST. That is, IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Amongst the other taxes, respective credit can be utilized for payment of respective liability, and cross utilization not allowed. Sir, then what about this cess? Cess is no way connected to family, okay? This is like relatives. No way connected to family. They will connect with them only. Got it? Because even if we do good also, they will speak. Even if we do bad also, they will speak. So, unnecessary people on earth. So, therefore, they are no way connected to this discussion. Is it clear or not? And they can adjust only with them. Got it? See, cess can be adjusted only against cess liability. Next, look into principle number 2, priority. What is the priority of utilization? IGST credit, okay. First, IGST credit can be utilized for payment of IGST liability, okay. Thereafter, so I am earning pa. First, I will meet my needs. Thereafter, my wife or my parents. Any priority can I give? No, gone. Life will be miserable, okay. No priority. Any manner, any proportion. Case to case basis, I need to decide. Is it clear or not? So my wife should tell, you are only important, my parents are not important. And with parents, I need to tell, you are only important, wife is not important. Case to case basis, we need to balance. Otherwise, completely gone. Life will become a mess. So, IGST credit first for IGST. Thereafter, CGST or SGST, UTGST, any manner, any proportion. Okay. For me, I don't have any problem, okay. And I'm telling you this because, you know, a lot of my friends, they will be sitting with me and they will speak for hours and hours about their problem. I have only one problem, that I don't have parents. But they have a number of problems because they have parents. You understood or not? They will be telling, and from that only I thought this can be connected in the class, okay. So I am connecting this. Then CGST credit, what they will do? First they will be selfish, they will think about themselves only. Thereafter, husband will come into picture. You got it? CGST credit first for CGST, then IGST. Parents also like that only. After marriage, first they will think about themselves and then only, you know, this guy will come into picture. So, unfortunate male on earth. Got it? So, SGST credit first for SGST, then UTGST for UTGST, then only IGST. Is it clear? And seriously, some men regulations, okay? Men related, Indian Men's Act 2025, like that something should come, okay? So, then say this. Principle number 3. Principle number 3, carefully listen. You understood the first principle and second principle? Third principle. Third principle, first, whose money will be gone? Correct. Then only CGST, SGST or UTGST. Got it? So, which credit should be exhausted first? IGST. Before utilizing CGST, SGST credit of IGST should be completely exhausted and order should be followed as per the above principle. Okay, that is, you know, I have observed this many times. Like I am not now carrying any wallet with me. I don't have a wallet. Everything GPay. Or to my people, I have given cash and I will ask them to spend. Because every time I keep cash in my wallet, and my wife will pay all bills, that is milk person bill and every bill, water can bill from my wallet only. She is having money, I will give her, and she is also earning, but even then first she will exhaust my wallet only, and then only if not there, then she will be taking out of her wallet, okay, that's usual. So which credit will be exhausted first? IGST credit before utilizing CGST or SGST credit. Then Fourth principle, that is for payment of IGST liability. That is, I have a liability. So what should I do? I should check whatever money that I have. If I don't have, wife, very good. I cannot directly go to parents because they will spit on my face, correct or not? So because the moment a male becomes married person, so if he goes again to the parents, definitely they will say, donkey's age you got and still you are dependent on us, like that. So therefore, first IGST liability will be paid out of IGST credit, then CGST credit, then SGST or UTGST credit. Are you getting this? These four principles. Next, what is the difference between that second principle and this fourth principle? What is the difference between these two? In the second principle, I have one credit but multiple liabilities. So IGST first for IGST, then CGST or SGST, any manner, any proportion. But in this fourth principle, I have one liability but multiple credits. Got it? Next, see this, IGST credit after utilizing for payment of IGST liability can be utilized for payment of CGST, SGST in any proportion. So multiple answers are possible in the exam. Then which view should be taken? Depending upon CGST, SGST liability, it should be apportioned. For example, you just write down this illustration somewhere. So gross liability, gross, that is CGST, SGST and IGST, CGST, SGST and IGST. Gross GST is 5,000, 5,000 and 10,000. This is the gross, 5,000, 5,000 and 5,000. And ITZ, if you see, 2,000, 2,000 and 10,000. Compute net GST payable. Compute net GST payable. So CGST, SGST, IGST, gross GST is 5,000, 5,000, 5,000 and ITZ is 2,000, 2,000 and 10,000. Compute net GST payable. So what we will do in this case first? First, which credit we need to use? IGST for payment of IGST. Gone. Then what is left? 5,000. That 5,000 we can use it for what? CGST or SGST or both? Both. Correct? You tell me, what should I do? Why? If I use full 5,000 for payment of CGST, what will happen? This liability gone. But this 2,000 I cannot set off with 5,000. Correct. So 5,000 minus 2,000, 3,000 becomes my liability, which is a wrong answer. How it is a wrong answer? Simple. What is your total liability? What is your total ITC? So what is the correct answer? 1,000 you should get. Okay. So easy way you remember. What is the liability ratio? What is the liability ratio? Equal. So excess credit you distribute equally. Liability ratio, if you see equal, so you distribute it equally. So what is the correct way of doing answer in this case? CGST, SGST, IGST. Gross GST payable. Gross GST 5,000, 5,000, 5,000. First IGST credit. IGST credit. How I will use? 5,000 I will use first. Thereafter I will use 2,500, 2,500 and then the respective credits CGST and SGST credit. How much? 2,000 and 2,000. When I am utilizing, I will get a net liability. What is that? Net GST. Net GST will be 500, 500 and nil. So the total is 1,000. This is the answer. Is this the only answer? No, no. This is not the only answer. There is a possibility of CGST 1,000, SGST 0, IGST 0. Or there is a possibility of CGST 0, SGST 1,000, IGST 0. Got it? Because the total will be 1,000. But any answer you will get marks provided the total of the net liability should not more than 1,000. the total of this is there now, the total of this should be 1000. Then you will get the correct. Okay. And what you need to follow? Simple path. Excess credit, you divide it between CGST, SGST in its liability ratio. That's what note I have given. You have written the answer for this. Now see the note. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST in any proportion. So multiple answers are possible. My view is that depending upon CGST, SGST liability, it should be apportioned. Got it? Then GST compensations should be utilized only for payment of GST compensations on outward supplies. With that, we have completed two parts. Section 41, availment of ITC. Section 49, subsection 5, utilization of ITC. We are left with only three sections. These three sections, input tax credit will be over, but these three are major sections. Section 16 talks about conditions for availment of ITC. Section 17, apportionment of credit and blocked credits. Section 18, input tax credit in special cases. Look into section 16, conditions for availment of ITC. So total 8 conditions we have. Condition number 1, only a registered person can avail ITC. Of course, unregistered person cannot avail ITC, only a registered person can avail ITC. Then that inward supplies on which ITC to be availed should be used or intended to be used. Intended to be used means I am using it now or I am going to use it in future, even then I can take ITC. Unlike section 32 income tax depreciation, it says only when the asset is put to use you can claim depreciation, but here it is not like that. Even if you are not using it, you are going to use it in future, you can claim the ITC. Used or intended to be used in the course or furtherance of business. Then recipient should be in possession of tax paid document. So tax paid document means what? Either tax invoice or debit note or ISD invoice or bill of entry. ISD means input service distributor. If you want, you write down there, ISD means input service distributor. Input service distributor. Who is an input service distributor? Head office pa. Head office will be distributing the credit to the branch office. There is a head office. Under the head office there will be lot of branch officers, and we raise invoice to the head office. That head office will take the credit and distribute the credit to the branch office. That is also one of the tax paid document on which ITC can be availed. So the recipient should be in possession of tax paid document. What is that? Tax invoice, debit note, ISD invoice or bill of entry. Bill of entry in case of import. And number 4, recipient should have actually received the goods or services. For example, invoice is in the month of May, but the goods are received in the month of June. When the ITC can be availed? May month or June month? June month only ITC can be availed. May month ITC cannot be availed, because only when the goods are actually received, the goods or services, ITC can be taken. Supplier, and one more point also we will see from recipient point of view. 7, recipient should have filed the returns. I told you this. How we will avail the ITC? Only through 3B. Without filing 3B, ITC cannot be availed. So first 2 basic conditions, then next 3 conditions by recipient, next 3 conditions by supplier. You remember like that. What are the first 2 basic conditions? Only a registered person can avail ITC, and inward supply should be used or intended to be used in the course or furtherance of business. And then 3 conditions by recipient. Recipient should be in possession of tax paid document. Recipient should have actually received the goods or services. Number 3, recipient should file the return in GSTR 3B. Got it? Then 3 conditions by supplier. Already you know that. You tell me what supplier should do. Should file the GSTR 1 and report the details. Correct or not? Then he should file 3B, means he should pay the tax. By when he should pay the tax? September 30th of next financial year. Otherwise we will reverse the ITC. Correct? So say this. Supplier should have furnished the details of invoice in GSTR 1. Supplier should have paid tax with respect to such supply within September 30th of next financial year. Then supplier has one more liability also. GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted. What does it mean? If you see here in GSTR 2B, there are 3 columns: ITC available, ITC not available, ITC reversal. If it is there in ITC available only, we can take. What if it comes in ITC not available column? We cannot take. Why will it come in ITC not available? Because of the supplier's mistake. Because of the supplier's mistake, it will come in ITC not available. If it comes in ITC not available, we will not be able to take ITC with respect to that. Okay, that's what they are telling. GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted. Suppose if it is coming in ITC not available, can we take? No. As per section 38, in few cases, ITC shall be restricted in 2B. What are those few cases where ITC is restricted in 2B? That is given in section 38, which you can see in returns chapter. You just take page number 166. You give the reference there, refer page number 166. Give reference, refer page number 166. That section 38. Information is in page 166. So when you are reading that point, section 38, that is in page number 166, take that page number 166. So 3 conditions to be fulfilled by supplier. In that first condition we understood. What is that first condition? Supplier should file the GSTR1 and he need to report the details. Second condition, supplier should pay the GST by September 30th of next financial year. Third, because of section 38, it will come in GSTR 2B, ITC not available. If it comes in ITC not available, we cannot take. Why will it come in ITC not available? Because of the mistake of supplier. What mistake supplier will do? See this. See this. Point number 1. Supplier is a newly registered person. So if you are buying from a supplier who is a newly registered person, this will be coming in your ITC not available. So can you take or you cannot take? You cannot take. Okay. Second, supplier has filed GSTR1 but not 3B. So it will come under ITC available or ITC not available? ITC not available. Means for any prior periods, he filed 1 but not filed 3B. This month again when he filed GSTR1, it will come under ITC not available. Then supplier liability in GSTR1 greater than 3B, means he paid liability less, okay, or he availed more ITC, that is supplier availed ITC in 3B greater than 2B. Supplier has received demand notices, means what? He defaulted in payment of tax and such default continues, or supplier is required to pay 1% of liability through cash ledger. There is one provision, like 1% of the liability they need to pay by cash ledger. If they are not paying 1% of their liability through cash ledger, then also even though they file GSTR1, even though it is coming in 2B, but in 2B it will be kept under ITC not available, then we will not be able to take ITC. Is it clear? What are those situations here? 6 situations you can see. So first, you are buying from a supplier. Ask the supplier, are you fresh, sir? Yes. So sorry, I will not buy from you. Why? Because he is a newly registered person. You understood? Fresh means you don't understand in any other way. So he is a newly registered person. Number 2, sir, are you filing 1 but not filing 3B? Yes. Sorry, sir, I will not buy from you. Are you taking more ITC in your 3B than your 2B? Yes. I will not buy from you. Or are you having any demand notices and you did not pay tax? Yes. I will not buy from you. Did you pay 1% of your liability through cash ledger? No, I will not buy from you. Which means, what does the law says? Like KYC, know your customer. KYS, know your supplier. You understood? Get all these details from the supplier. I don't know which supplier will give all these details. And naturally what happens, we buy without knowing all these things. We will be thinking that ITC will be available, but it goes to ITC not available, which means we cannot take the ITC. Is it clear? Got it here? What are the 5 cases? Supplier. 6 cases, supplier is newly registered. Number 2, filed 1, not filed 3B. Liability in 1 greater than 3B. ITC in 3B greater than 2B. Defaulted and notices is there. Next, did not pay 1% of liability through cash ledger. Now what happens in this case? When it comes in ITC not available, suppose if it comes in ITC not available, what we will do? We will go to that supplier and ask, boss, it is coming in ITC not available, means you would have done any of this mistake. Kindly rectify this mistake. As and when they rectifies this mistake, we will get it in ITC available and we can enjoy the ITC. Is it clear here? Now come back to this. So tell me what are the 8 conditions? Come on, first 2. Only registered person can take ITC. Next, inward supply should be used or intended to be used in the course or furtherance of business. Next, 3 by recipient. Should have actually received the goods or services, should be in possession of tax paid document, should have filed 3B. Next 3, supplier. Number 1, filed GSTR1. Number 2, should have paid the tax by September 30th of next financial year, or should not be covered under section 38. Okay. If is covered under 38, it will come under ITC not available. Now see the next part. What is the meaning of input tax? Input tax means either CGST, SGST, UTGST or IGST. Either it is paid under FCM or it is paid under RCM. Even RCM paid also we can take credit, I told you. But it does not include composite tax. What is composite tax? Tax paid under composition scheme. First of all, a person who is opting for composition scheme should not charge GST to the customer. Even if they charge GST to the customer cannot take ITC. That is this. It does not include tax paid under composition scheme. It also includes tax paid on reverse charge. Even IGST on import of goods. On import of goods, we pay some IGST in addition to customs duty. That IGST also can be taken as credit. Then see the next part. Contents of invoice for availing ITC. That is, a person availing ITC, one of the condition if you see, should be in possession of tax paid document. What is a tax paid document? Tax invoice. But what is a tax invoice? Any paper, if it contains these minimum details, that is a tax invoice for availment of ITC. What are those minimum details that should be present? Apart from date, what minimum details it should have? It should have description of goods or services. Number 2, it should have total value of supply of goods or services and the amount of tax charged and GSTN of supplier and GSTN of recipient and place of supply in case of interstate supplies. 5. What are those 5? Description, value, tax, GSTN of supplier and recipient, place of supply if it is interstate supply. Then what is the meaning of inward supply on which we take ITC? Inward supplies are broadly divided into 3: inputs, input service and capital goods. What is capital goods? Any goods which are purchased and capitalized in the books is known as capital goods. Then what is inputs? That is not capitalized, charged to P&L is known as inputs. Input service is any service received. Then look into a concept of deemed delivery. Listen. That is, you are placing an order with me, so I raise an invoice to you, but you are asking me to deliver the goods to a third person. I am raising invoice to you. You are a registered person. I am raising invoice to you, but you are asking me to deliver the goods to a third person. In that case, you cannot take ITC because you have not received the goods. one of the condition for availing ITC is that you should have received the goods. That third person also cannot take ITC because even though they received the goods, but invoice is not in their name. So then who will take ITC? Definitely the billing address only will take ITC. The date on which the third person has received the goods or services, it is deemed that the billing address has received the goods or services and they can take ITC with respect to that. Is it clear? So when the goods are delivered to any person or service are provided to any person on the instructions of the recipient, if the goods or service are provided to any other person, the date on which such person has received the goods or services, which person? The third person has received the goods or services, it is deemed that the recipient has received the goods or services and they can take ITC. Arey, this is not only for goods, even for services. For example, if there is a coaching center which is raising invoice in the name of your father, because your father is doing some business, in the name of your father the coaching center is raising invoice, and even though they provide services to you, can your father take ITC? Definitely your father can take ITC. Your parents can take ITC. How, sir? The date on which you received the service is deemed that your father has received the service and they can take ITC. Only one problem, that is you should be part and parcel of the business. If you are part and parcel of the business, definitely your father can take ITC. I don't know, definitely you might be into some coaching center already, you would have attended and you would have paid fees, that to CA intermediate and all. So lot of fees they are looting nowadays, like 70,000, 80,000, 90,000 like that and all they are collecting. On the top of that plus GST, and this GST can we take as credit? Nothing specific. Generally I am telling lot of coaching centers are charging like this, okay? And then in that case, can we take ITC? Why should we lose? Definitely we can take ITC. How can we take ITC? Simple. You go to your father, if your father is having business, any business, GSTIN, and you ask your father to make you as an employee in the business, hardly 1 minute work, one document, sign. So you become part of your father's business. Now you go to the coaching center and ask them, sir, I need invoice in my father's name. This is the GSTIN. Coaching center will tell, no, I cannot give invoice and all, like that provision is not there. You show this, deemed delivery, explanation to section 16 subsection 2. If they are not satisfied, this video bite you show to them, okay? And you tell them that it is possible and therefore invoice needs to be given. They will not give because they have to report B2B invoices and all. They will not give, but they can give. You force them to give so that definitely you can take ITC. Maybe what is the time limit for availing ITC? November 30th of next financial year or date of filing and return. You attended coaching recently only in a year. So maybe you would have attended coaching last year, correct? Financial year 2024-25 you would have attended coaching. Time limit is November 30, 2025. Lot of time is there, you understood? Definitely it is possible and you can go and ask them, so why you lose that money? So whatever GST, sir, at least 5,000 also, it is money only na sir. Why we need to lose that? And for coaching center also it is not a problem because anyhow they are paying it to government. Actually it is a benefit to you, and for coaching center also it is not going to pinch. Just they need to raise the invoice and government already getting the money. At least this way some 5,000 rupees we will get or 10,000 we will get. We will contribute it to our family. Yeah? You understood or not? That is this deemed delivery. And in case of bill to ship to transaction, billing address can avail ITC. Then, and don't post this and all, don't make it as a reel and don't post it, etc. and all. So whatever I said in English, don't convert into Tamil and don't post it in as a reel and try to get, because see, when GST department comes and speaks to you, you will not be able to handle. I can handle, but you cannot handle that. You understood? Before speaking all these things, so the backup should be there. For me, backup is strong. I don't have any problem. Any case, if it comes, I know how to come out of it. You understood or not? But for you, it will be difficult. So that's why be careful before all these things, speaking all these things. Then, goods received in lots or installments. What is it? Goods received in lots or installments? That is, at a time we will not receive the entire goods, but we will receive it in installments. Example, I am a dealer. you are asking me to deliver some goods, say 100 units. For 100 units, I raised you invoice. First month I am delivering 40, second month I am delivering 40 units, third month I am delivering 30 units. When can you take ITC for this 100 units? Only in the last month. So you cannot take 40 units first month, 40 units second month and 30 units third month. ITC shall be availed only on receipt of last lot or installment of goods. Then look into the next one, reversal of ITC for non-payment of consideration to supplier. What is that? If there is a recipient who is not making payment to supplier within 180 days from the date of invoice. I am your supplier, you are my recipient, you have not made payment to me. Even then can you take ITC? Yes. In 8 conditions, is there anywhere it is given that recipient should make payment to supplier, only then recipient can take ITC? Nowhere. Means recipient can definitely take ITC, but recipient is not making payment to supplier within how many days? 180 days from the date of invoice. Then so much of the ITC availed by the recipient, needs to be reversed along with, needs to be reversed along with interest. At what rate? 18%. From which date? Date of, very good, date of utilization till the date of reversal. Again, as and when you make payment to me, can you re-avail the ITC? Yes. As and when you make payment to me, you can re-avail the ITC. Whether it should come in 2B? No. Whether there is any time limit? No. Happily you can take the ITC. That is this. If the recipient has not made payment to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier. For example, within 180 days, you paid 60%, 40% not paid. Means how much you need to reverse? 40% portion you need to reverse, okay? And within 180 days, you did not pay fully, so you reversed fully. Thereafter, you paid 50%. How much you can avail? 50%. You paid 20%. How much you can avail? 20%. Is it clear or not? See this. If recipient has not made payment to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier availed by the recipient shall be reversed along with what? Interest. At what rate? 18% per annum. From which date to which date? From the date of utilization of ITC till the date of reversal. What if you have not utilized the ITC? Interest shall not arise. Interest not payable if availed ITC is not utilized. In 3 cases, this provision will not be applicable. What are those 3 cases? Number 1, supply is covered under RCM. Means who is having the liability? Recipient is having the liability. 180 days condition not applicable. Number 2, supply under 7(1)(c). Means supply without consideration. Our consideration itself is not there. Where from recipient will pay to supplier within 180 days. Number 3, recipient made payment to a third party other than supplier. Means already you paid. You paid to a person on behalf of me. Means to my creditor you already paid. Which means as good as I have received. So 180 days condition is not applicable there also. Is it clear? 3 places. Supply covered under RCM. Supply without consideration. Payment to third party on behalf of supplier. Again, when can you avail the ITC? ITC can be re-availed as and when payment is made to supplier after 180 days. 2 places we have discussed re-availment of ITC. One is what? First one what we discussed. If supplier not filed 3B, then by September 30th of next financial year, we need to reverse the ITC and we can re-avail the ITC. Only ITC pa, interest and all cannot be re-availed. Another place where we saw re-availment is this. If we have not made payment to supplier within 180 days, we need to reverse the ITC. Again we can re-avail the ITC as and when we make payment to supplier. But interest cannot be re-availed, that interest is gone. Got it? And no time limit for re-availment of ITC. Then look into section 16 subsection 3. ITC not available in case of depreciation computed on GST component. For example, you are purchasing capital goods. What is the value of the capital goods? 10 lakhs, and GST on the same is 1,20,000. If depreciation is computed on 11,20,000 under income tax, already you are enjoying the income tax benefit, so therefore you will not get ITC. Then ITC with respect to 1,20,000 not available. Suppose if you add only 10 lakhs to the block of assets, then you can take 1,20,000 as ITC. This common point is there even in section 32 of Income Tax Act also. Then section 16(4), time limit for availment of ITC. What is the time limit for availment of ITC? Already we know 30th November of next financial year or date of filing annual return, whichever is earlier. Whether this time limit is applicable for re-availment of ITC reversed earlier? No. And in case of, there are 2 points, see that in case of debit note, the availment of ITC depends on the debit note date, but not the date of invoice related to such debit note. That is, concentrate. If invoice is given on 28 February 2024, but for this invoice a debit note is given on 25th September 2024. Okay, so invoice is 28 February 2024, debit note is 25th September 2024. What is the financial year for the invoice? Financial year for the invoice is 2023-24. What is the financial year for the debit note? 2024-25. Now, which financial year we need to take for computing the time limit for availment of ITC based on this debit note? So, take the financial year 24-25, A, 30th November 2025 or the date of filing annual return. So, whenever you file GSTR 9, whichever is earlier will be taken. So, don't check the invoice, date, check the debit note date. Based on that you decide what is the time limit for availment of ITC. Got it? That is this point here. In case of debit note, availment of ITC depends on the debit note date, but not the date on which invoice related to such debit note. Then one newly added point, that is an amendment for May 25 exam, that is in case of RCM, reverse charge mechanism. Yes sir. Doubt in this question, sir? Yes. February 29th. Correct, sir. Correct. First you started with debit note, why are you confusing me with credit note? Correct, pa, it will come, pa, if invoice is 28/2 and if the debit note is given on 29/2/2024, that debit note they will report in GSTR 1 and it will come in 2B. If they miss the date of say 11th, and it will come in next month 2B, simple. Okay. Of course, mismatch will come. Who said it will not come? It will definitely come. So, as per your records, as per your 2B, there will be a mismatch because they are filing it late. That already I told you. If GSTR 1 they file it late, or if they are reporting it late, definitely it will be coming in our 2B next month only. So, there will be a mismatch. Means don't take this month, you take the ITC in the next month. Okay. After class. Next, in case of RCM, where the registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availing ITC. So, this is a very crucial amendment. Before and all it was not there. RCM liability, whenever we used to pay, that month itself we used to take the ITC. But now they kept a twist here. That is, whenever you pay the RCM liability, not that month you can take ITC, but for RCM, you will give a invoice to the supplier. You will give a invoice to the supplier. Why invoice to the supplier? There is a concept of self-invoice. When the supplier is unregistered and supplier is not issuing invoice, okay, in case of RCM, because liability is on recipient now. Now recipient should issue a self-invoice to the supplier. Is it clear or not? Ayya, I am supplier, you are recipient. When the supply is covered under RCM, I will not give invoice to you. Then you should be giving invoice to me called as self-invoice. What is the time limit within which that self-invoice to be given? Within 30 days from the date on which you receive the goods or services, you should give the self-invoice. This is an amendment, okay? This is also an amendment. Now, whenever you give invoice to me, that month only you can take ITC, not the month when you pay tax to government. Is it clear or not? Read that. In case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. You got it? Next, time limit for availment of ITC for certain financial years, that is for financial year from 17-18 to 2021. But this point may not be tested in exam because this is just a stopgap provision from financial year 17-18 to 2021 if ITC is availed beyond the time limit. So in those financial years, they would have taken ITC beyond the time limit, but maximum by November 30, 2021. So 17-18 financial year time limit would be 30th November 2018, 2019, 2020, 2021, like that. So if they have taken the ITC beyond the time limit also, but maximum by which date? November 30, 2021. At that time, they have rejected the ITC. GST department rejected the ITC stating that, boss, you took the ITC beyond the time limit. Now, government, to give a benefit to those people, they came out with a provision, even if those ITCs were rejected at that time, now you can enjoy the ITC. Got it? So, because Supreme Court gave instructions to the central government that what you are doing is wrong, for these financial years GST law is not that much implemented, so therefore give a relief to the taxpayers, because of which government is coming out with this provision, and only for financial year 17-18 to 2021. But what is the time limit by which they should have taken ITC? At that time itself, November 30, 2021, but it should have been rejected by the department, and now they are allowed to take, even though it is in violation of 16.4. Then next one, section 16.6. What does 16.6 says? This is also Finance Act 2024 amendment for May 25. That is, registered person can claim ITC on such invoice or debit notes in any return file within regular time limit or 30 days from the revocation order, whichever is later, in case where their registration has been cancelled. So let me discuss with you first. Whenever your registration is cancelled, carefully listen. Your registration is cancelled on one day, okay? Say 1st April your registration is cancelled. Then you can make an application for revocation. What is the meaning of application for revocation? Withdrawal of cancellation. And they passed a revocation order. They passed revocation order on 30th September. 1st April your registration is cancelled. 30th September they gave a revocation order. Now, some ITC you could not take. Why you could not take? Because cancellation order passed. Cancellation order passed, so during this period you could not take the ITC. Now they revoked the cancellation order. But when they revoke the cancellation order, the time limit to avail ITC is over. Is it clear? The time limit to avail ITC is over, because their maximum time limit by which ITC to be availed is 30th November. Say that 30th November is missed, for example. Then in that case, can I take the ITC? Yes, I can take the ITC even after 30th November, but within 30 days from revocation order. Is it clear? Within 30 days from revocation order, whichever is later, whichever is later. So kindly make note of this somewhere in your notebook or any other place. Financial year 2024-25, financial year 2024-25. Okay. And what happened for this financial year 2024-25? On 30th April 2025, registration cancelled. Registration cancelled. On 30th September 2025, revocation order passed. Okay. For financial year 24-25, 30/4/2025, registration cancelled and revocation order has been passed on 30th September 2025. What is the time limit for ITZ? What is the time limit for ITZ in this case? They have brought in one new provision. What is it they are telling? A regular time limit. What is the regular time limit? What is the regular time limit? 30 November 2025, correct? 30 November 2025, or B 30 days from revocation order. 30 days from revocation order. What is 30 days from revocation order? 39/2025, 30 days you take. 30 October 2025, whichever is earlier or later? Later. What is later? 30 November 2025. Is it clear? 30 November 2025 only later. The regular time limit itself is later. Now, if revocation order is passed on, if revocation order is passed on 31st December 2025, then what will be the time limit? Then time limit is, if revocation order is passed on 31st December 2025, A, the regular time limit. What is the regular time limit? 30th November 2025, 30th November 2025, or B 30 days from revocation order, 30 days from revocation order, that is 30th January 2026, whichever is later, which is later, that is 30th January 2026. Got the clarity? So possibility in MCQ, they can ask this, or they can make a question also. They can make a question also based on this. Okay. Now say this. Time limit for availment of ITC in case of revocation. These two are the latest amendments. What is the procedure for claiming the ITC? Suppose for old financial years, we missed taking ITC in this case. Both the cases. First one is anyhow old financial year only. Second one also for some earlier financial years we missed taking ITC. Can we take it now? Yes. See the procedure. By 7th April 2025, still few more days is there. Still few more days is there. So if any person whom you know, they have missed taking ITC, now also, today also you can tell, because 7th April is the time limit. 7th April 2025 is the time limit for taking ITC. Registered person to whom ITC is available under 16.4 or 16.5, in the past years they have not taken, but they are eligible because of these two sections. They can make an application by 7th April, and within 3 months, if the officer is satisfied, they will pass a rectified order and we can enjoy the ITC. Suppose if the officer is not satisfied, then they will reject. Okay, this is the procedure. So therefore, for earlier financial years, if we missed also, we can take the ITC, and 7th April the application has to be made. This is about section 16. These are all the amendments that we have in this page. Okay. Next, thereafter we have apportionment of credit and blocked credits and section 18, that is input tax credit in special cases. But related to this section 16, I told you amendments na. On that we have some questions on amendments. We will discuss that. Okay. So please see this. Look into question number 12. Question number 12, page number 56. Question number 12, page number 56. See that. So we will complete this question number 12 and question number 13. Okay. And with that we will leave for the day. And remaining portion we can see tomorrow's class. But please focus, just 2 questions only we will complete. Infosys Limited, a registered company in India, is engaged in IT consulting and software services. Infosys Consulting Incorporation, its related foreign entity based in USA, provides software development support and consulting services to Infosys Limited in India. Both entities are related persons under the GST provisions. So it is import of service from a related person. Is it clear? See there, Infosys Limited is importing service from Infosys Consulting and both are related. So it's an import of service from a related person. And definitely it will be coming under RCM. On October 2024, Infosys Consulting provides software consulting service worth rupees 20 lakhs to Infosys Limited. Since this transaction is an import of service, Infosys Limited is required to pay GST under RCM. Additionally, Infosys Limited is eligible for full ITC on this transaction. Moreover, Infosys Consulting Incorporation also provides strategic advisory service to Infosys Limited without issuing an invoice. The domestic entity Infosys Limited estimates the market value of these services to be 5 lakhs, but no official invoice is generated for these services. Answer the following based on the above mentioned facts. Point number 1. Whether Infosys Limited is required to issue any invoices to Infosys Consulting Incorporation. I told you already, in case of RCM, a self invoice to be given by recipient to supplier. Generally, invoice will be given by supplier to recipient, but in case of RCM, a self invoice to be given by recipient to supplier. What is the time limit within which that self invoice to be given? Within 30 days from the date of receipt of goods or services. What is the date on which they have received the goods or services? October 2024. From there, within 30 days, they need to give. Look into the answer for the first part. This is also an amendment here, but this amendment is in tax invoice. In tax invoice chapter, there is only one amendment, that is this amendment only. Okay. So Infosys Limited shall issue invoice to Infosys Consulting Incorporation within 30 days from the date of receipt of services. Then, who is required to pay GST in the present case, and what is the value on which GST is payable? Who is required to pay GST? Infosys Limited is required to pay GST under RCM, as the same is import of services. If Infosys Limited declares 20 lakhs as the value of software consulting services from Infosys Consulting Incorporation in the self invoice, compute the GST payable by Infosys Limited. Simple, 20 lakhs into 18%, that is 3,60,000. Now I want to add one more point in this question. Okay, point number 4. When ITC can be availed by Infosys Limited? When ITC can be availed by Infosys Limited? When ITC can be availed by Infosys Limited? What is your answer? When they can avail ITC? As and when they pay GST, or as and when they pay money to supplier, or as and when the invoice is issued? So as per CBIC circular, as and when invoice is issued, as and when invoice is issued to Infosys Incorporation outside India, comma, ITZ can be availed. ITZ can be availed by Infosys Limited. Is it clear? As and when, as per CBI circular, I will dictate you right. As per CBI circular, as and when invoice is issued to Infosys Incorporation outside India. As and when invoice is issued to Infosys Incorporation outside India, comma, ITZ can be availed by Infosys Limited. Next, question number 13. TechPro Solutions Private Limited, a registered person under GST, had its registration cancelled by the proper officer on June 1 under section 29 due to non-compliance with filing returns. Okay, you may get a question similar to these lines. The company had received input services for which it was eligible for ITZ during the financial year 23-24, but the ITZ had not been availed before the date of cancellation. On August 25, 2024, TechPro Solution applied for the revocation of the cancellation of registration under section 30, and the registration was revoked by the proper officer on September 5. When the registration was revoked? September 5, allowing TechPro to continue its business operations. However, during the period of cancellation, TechPro Solutions received several invoices and debit notes for supplies made between July 1, 2024 and August 25, 2024. The company is now considering the possibility of claiming ITZ on invoices pertaining to the supplies made during period June 1st to August 25. June 1st to August 25 means which financial year? Which financial year? Financial year 24-25. For financial year 24-25, what is the time limit for availment of ITZ? Regular time limit 30th November 2025, correct? Or what is 30 days from revocation order? What is 30 days from revocation order? September 5. 30 days is October 5, 2024. Whichever is, which is later, means regular time limit itself is later. Is it clear? So they can avail the ITZ by 30/11/2024. So time limit of availment of ITZ is normal time limit in the first case. First case it will be regular time limit. What is that regular time limit? 30/11/2025. Okay. So that is the answer for the first case here. Time limit for availment of ITZ for invoices for the period 1st June to 25th August. It is 1st June to 25th August 2024. Correct only. Financial year 24-25, that is 30/11/2025. Got it? Or date of filing and return, whichever is earlier. So 30/11/2025 only will be taken. Is it clear? Correct only we did. Second, debit notes issued during the financial year 23-24, but not availed before the date of cancellation of its registration. Now tell me for financial year 23-24, A, 30th November 2024, or B, what is that B? 30 days from September 5. What is 30 days from September 5? 5th October 2024, correct? Whichever is later, still it is 30/11/2024 only. Am I right? Suppose if the revocation order is passed on 15/12/2024, I have given below note. If the revocation order is passed on 15/12/2024, then which time limit we need to take? The regular time limit 30/11/2024, or 30 days from this date 14/1/2025, whichever is later, that is 14/1/2025. Understood? So this way they can ask a question related to cancellation of registration and connecting with ITZ, okay, because there is an amendment in this place. Fine. So with this, we completed 3 major sections today in ITZ. Section 41 availment of ITZ, 49 subsection for utilization of ITZ, and section 16 conditions for availing ITZ. Please listen, just 2 minutes, 2 minutes. That is, tomorrow we will complete input tax credit. To the extent possible, it will be like easily it will be over. Remaining topics, to the extent possible, I will try to complete. But I want to focus on 2 chapters mainly, value of supply and place of supply, because that's where approximately 75% of the portion will be over, means from exam point of view. Thereafter, some small topics are there like returns, payment process, e-way bill and GST practitioner, like that some topics are there, very small topics. Those topics, what I will do is that I will be separately taking a lecture live itself. I will let you know, because we have a power prep batch. For that power prep batch, I am anyhow going to take that along with some mighty 50 questions I will be doing for that batch. At that time I will stream it in the YouTube, you can watch that, okay. So these small topics, 4 topics, plus in this also if time permits tomorrow I will take, if not only I am telling you. So whatever topics I am not able to take, that plus mighty 50 questions, I am going to do it for our power prep batch students, and I will stream that in YouTube also so that you can watch that, okay. And before that, please subscribe to our channel so that whenever we put live, you will be receiving the notification, okay. Thank you, and we will meet tomorrow morning 9 o'clock.